watching India Market Open, and we have one of the first few trade deals that you're expecting to see in the next few days. The deadline's nearing in for July 9th, and the one with Vietnam, which Donald Trump has said is a huge victory. He's opened up Vietnam, causes a bit of worry, guys, because 20% is the tariff. He's brought it down to 40% if it's transshipment. That means if another country is shipping through Vietnam, and the US pays 0%.
Well, it's incredible for the US, not so good for Vietnam. But having said that, I don't think that India is going to be in the same boat, because the dependency on exports and imports from the US is not as much. And also, we have a very strong domestic economy. So it's completely
also, I think the bigger worry might be China, because almost everybody is saying that China is actually wary of some of the trade deals which are shunning out China from that ecosystem completely when US is striking these favorable deals with partners. So it'll be very interesting next 8 or 9 days, and maybe which is why volatility could be the name of the game.
Yeah, so the trade deal, big story today, of course, all of the business updates coming in. The first flush of business updates shows perhaps that Q1's not going to be half bad.
Yeah.
Maybe.
Until yesterday, it didn't seem like that. Overnight, I think with the retail numbers.
Retail numbers are a bit disappointing. All right, all of that is what we're going to unpack on the show today. But first, let me just get you up to speed on what's happened globally overnight. US markets saw a mixed close as Trump announces that trade deal with Vietnam. You had all-time highs for the S&P 500 and the Nasdaq actually reversing the trend from yesterday, while the Dow was mildly in the red. Now, here's the deal. 20% tariffs on imports from Vietnam is what the US will impose. It's 40% if it's transshipment. That means if another country's goods are coming in via Vietnam. Meanwhile, US goods will have 0% tariffs is what Trump has announced. But remember, this announcement has come in a Truth Social post. There is no official announcement from the White House yet, and we don't really know what the details of this is. Having said that, 30% of Vietnam's exports are to the US, so their dependence is very high. The Ho Chi Minh Stock Exchange actually went up about 0.5% after these announcements, so maybe this was seen as positive. Even as US futures completely flat, but even as that aspect comes in, the jobs data becomes the key point to look at. So ADP, which was a private payroll data, shows hiring is down by 33,000 in June. Now, this is quite less than what was expected, but everyone's going to wait and see the June jobs report, which will be out today. The unemployment number is important, as well as whether there is an increase or decrease in the number of jobs. So that becomes key. Meanwhile, bond yields are staying flat despite that poor ADP data. 10-year at 4.26% actually retreated after a bit of a spike. Crude prices have inched up because Iran has now barred access to the nuclear watchdog to come and see their sites. It made it more difficult. On the other hand, US crude supplies have, and the inventory they have has been pushed up. So it's a balancing factor. Nevertheless, Brent is under the $69 mark. Asian markets opened mixed because that Vietnam deal impact, I mean, there are different ways to look at it, but Shanghai right now mildly in the red, Hang Seng and Nika in the green. As far as in the red and Shanghai in the green. As far as India is concerned, we're looking at close to a 40-point uptick in the implied open, but I don't know how much store I would set by this number, because what we saw yesterday was a clear bearish trend. I mean, the markets looked fine, but then the kind of pullback was not something that you would expect.
In a few pockets in particular, Tamanna, and we'll get to that in just a bit. Let me tell you about the fund flows data. And foreign institutional investors selling for a third session in a row to the extent of about 1,560 crore rupees. And this is interesting in the context of the recent move in the dollar. The perspective, of course, is that a weaker dollar would mean more capital flows towards emerging markets and to India, but that's yet not visible. Domestic institutional investors buying to the extent of 3,000 crore rupees or thereabouts, and that's nothing to be surprised about, of course. A lot of them are sitting on cash and looking to deploy. I'm talking about mutual funds in particular. But let's take a look at what happened with the benchmark. Ended about 1/3 of a percent, or a little more than 1/3 of a percent lower, but recovered smartly from the lows. In fact, if we can pull up the intraday chart, you will see what I'm talking about. In the last 45 minutes or half an hour of trade, there was a little bit of a pullback for the Nifty 50. Financials bore the brunt of the selling. In fact, 4 out of 5 of the top losers on the Nifty 50 were financial stocks, including a life insurance company. Nifty IT plunged from the high point. It was at one point of time trading very high, about 1.8% high. It actually dropped about 1.6 percentage points from the high point of the day, visible in that graph that you see. Realty index, in fact, has fallen more from the high point of the day, down about 1.8% from that intraday high, which was more or less in just about positive territory. The Nifty Bank dropped about 0.8%, and it stayed under pressure through most of the session. Metal stocks remain the bright spot, and we're going to talk about some of this in trade today, about whether this is a durable uptrend that you're seeing, up about 1.4% for the index as a whole. The broader markets declined in line with the benchmark. In fact, actually, the small caps did. The mid caps remained largely unchanged, about just about less than 0.1% lower. Small cap index losing about 0.4% or so, and the market breadth was tilted in favor of the declines yesterday, but it shifted midway through. The IT, at least, it shifted quite dramatically.
Yeah, so it does seem that it's a consolidation phase within a broader bullish trends, with resistance being found at higher levels. And because, I mean, yesterday, if you see, I mean, the Nifty didn't break down. It's still holding up above some key support levels, which is actually you could construe a positive. The only fly in the ointment, if you will, is that call writers have become extremely confident about writing those calls, which means that the resistances are being opaque. Look at the put call ratio, for example. It's down from 0.74% to 0.61%, indicating much higher call writing. So call writers are just going out, writing those calls, believing that these levels will not be eclipsed. Remember, if they do get eclipsed, then there'll be very swift action upwards. But for now, call writers are having their say. In terms of themes to watch out for, and we'll talk about that in detail, all of us, but retail companies showed some fairly good traction in Q1, and you might well see them getting rewarded, specifically at least. So that is something to keep an eye out for. And I think I saw 2 or 3 brokerage notes on saying that the weak Q1 expected for room air conditioner companies is already factored in. So therefore, we might well see weak numbers from a Voltas, from a Havells, from a Symphony, from a Blue Star. But apparently everybody is saying that the price action and the damage that has happened into these stocks in the last 3 months probably factors in a lot of this mismatch. So keep that in mind. In fact, Voltas has been up 8%, but some of the others have been very, very choppy. So maybe the fact that they haven't participated in a rally where the mid-caps have participated bakes in the negatives for these counters. So keep an eye out. And guys, I dare say, we were talking about this all through this week and probably the next, the listings and the IPOs. A swift one anticipated today, 86 times subscribed Indo-Gulf, small IPO, 200 crores. But 86 times should mean that there'll be some pop on the screen on open.
Yeah. The question is how long that pop on the screen lasts. At the end of the day, HDB 13% up, not bad for the size of the IPO. But I would say the muted retail response in its subscriptions was noteworthy as far as HDB is concerned. But Indo-Gulf is a different story altogether. All right, some factors to watch, and this note from Lawrence Belanco of CLSA was interesting, I thought. Nifty continues its advance after breaking out of the narrow range, he says. This breakout supports an upside target of 26,333. Here, essentially a retest of the 2024 highs. Support at 25,116, 25,222 and 24,798. Also 24,075 is the level that he's given. Resistance at 26,277, 26,333. At this stock level, Ultratech Cement is presented as a buy candidate, is what he says. So this is the CLSA view coming in. But as far as the Nifty is concerned, I would reckon you can expect further consolidation trading within this range, broadly between 25,200 and 25,700 in the near term. The consolidation will be until the Nifty reclaims and sustains above the current week high. A decisive close above 25,700 could propel the index towards 26,000. A fall below 25,200 might trigger a stronger bearish action. So resistance at 25,570, 25,620, 25,710. Support at 25,390, 25,340 and 25,250. For the Bank Nifty, those are levels on your screen that you can see. 57,460, 57,645, 57,950. That's on the resistance side. As far as support is concerned, 56,850, 56,660 and 56,360. So it's a wide range of levels and numbers today, simply because of how consolidated and unpredictable really the market has been. But let's go across to Puneet, who's giving us a roundup of what to expect on the derivative side.
Well, thanks so much for that. So definitely some key levels that you've highlighted, but the other aspect also is that we've seen yesterday both on the Nifty as well as the Bank Nifty some delivery-based buying. So we've seen the delivery levels increase for some stocks within the large cap space. Some of them are ICICI, Bharti Airtel, HDFC Bank as well as Infosys, while the open interest has largely remained muted, and that's because of the weekly expiry that we have today. On the Nifty Bank as well, again, we've started to consolidate at this new level of up 57,000 to 57,500. And again, that will be in focus today also because of some of the key numbers and the Q1 updates that have come in. In terms of fund flow from foreign investors, it's again been a day where both the options on index as well as on the Nifty have been sold in by the FIs and largely maintaining a net short position. This resultantly has had an impact on the index long as well. Now, yesterday it was around 36%, today at 33.4%. So shorts again starting to build up in the system from foreign investors. The net OI PCR has actually also collapsed. For the Nifty, Neeraj highlighted that it's about 0.61, essentially indicating call writing. For the FI positions, it's left from roughly about 1.05 to 0.9 levels, indicating a similar trend by the foreign investors as well. In terms of open interest distribution for both calls as well as puts, increased interest continues in 26,000. From yesterday, 25,600 are actually starting to add more from the calls on this side, while 25,500 remains a key resistance essentially for the Nifty as well. On the put side, we've seen 25,000 see a larger increased interest, while some levels have also been starting to form at the 25,400 levels. Finally, in terms of calls, both for open interest gainers and losers, we've seen some long build up on stocks like Blue Star, again, something that you guys highlighted. Some short build-up seen in CG Power. The company was in focus, launched a 3,000 crore IPO. We're seeing some short build-ups, not to increase in terms of the open interest, in terms of percentage, but still something to watch out for. In terms of open interest losers, though, we've seen some kind of long unwinding in the banking stocks. Colgate also seen some short covering, while Tata Communication has also seen some short covering. We also saw that positive brokerage note from Macquarie yesterday. But overall, again, a narrow trading range. The Nifty implied open is roughly about 30 odd points. So similar to what we've seen yesterday, that we could see some reversal of the initial move somewhere around 10 o'clock, which has been the trend over the past few weeks. But again, a day where important updates from various sectors and stock-specific action will be in focus.
Puneet, just a quick follow-up on that open interest distribution. You see put unwinding that is taking place at 25,500. And you see a significant amount of build-up of calls and writing of calls at 25,600, which you pointed out. I'm just wondering if the interpretation of that would be a significant resistance at that 25,600 and the likelihood of the consolidation towards the downside rather than the upside in the near term.
Well, definitely. That seems to be building up as a key proposition, because while we did cross the 25,500 mark with some strength, it seems to be that we are selling at the higher levels of 25,700 and 800. So the 25,500 as well as the 25,600 level, as you rightly pointed out, becomes the key support level for the Nifty, where the long-term support is, of course, the 25,000. A few brokerages among analysts and traders are starting to see that 25,500 level as a resistance as well. But that'll be one of the key things to watch out for in this monthly expiry over the next 2 to 3 weeks.
Okay. Let's go across to some of the stocks that are on our radar today, and so many to cover. I'm starting with Hindustan Zinc. Their Q1 FY26 production has seen highest ever first quarter mined metal production. That's at 265 kilotons, so up about 1% year on year. In terms of refined metal, stood at 250 KT, down 5% and down 7% Q on Q, 5% year on year. The decline is because of maintenance activities. For refined zinc, 202 kilotons is the figure, down 4% year on year and 6% Q on Q. On refined lead, it's 48 KT, down 6% year on year and 14% Q on Q. On silver, saleable silver was 149 metric tons that came in, down 11% year on year and down 16% Q on Q. The decline is amidst lower silver input from the SK mine. So Hindustan Zinc, just because it's hit its highest ever levels. Now, we talked about the retail updates, and I'm picking up Avenue. Thumbs down clearly. Now, its business update for the quarter showed that standalone revenue is forecast to increase to 15,932 crores. That's a 16% growth year on year. As of June 30th, the retail operator had 424 stores across India. But look at what notes are coming in. Macquarie says they maintained an underperform with a target price of 3,000 on it. They say Q1 sales growth is moderated slightly from Q4. Healthy pace of store additions. Q1 sees a stronger gross margin given product mix. They believe that competitive concerns linked to quick commerce are not yet behind us. Goldman Sachs has also maintained a sell with a target price of 3,400. They say sales growth is weaker than expected. Store additions, though, are in line with expectations, and they expect a margin contraction year on year. Punjab National Bank is the other one that I'm looking at. A thumbs down here as well. Now, in its business update, they've said global deposits have reached 15.9 lakh crores. That's 12.8% year-on-year increase. Domestic deposits have grown by 12.2% year-on-year at 15.4 lakh crores. Domestic advances are up 9.7% year-on-year, reaching 10.8 lakh crores, and advances globally have increased 9.9%, reaching 11.3 lakh crores. Now, what are notes saying? Citi has maintained a sell with a target price of 101. They say advances growth of 1.3% Q on Q and deposits growth of 1.4% Q on Q. Overseas advances were broadly flat in Q1, same as that in Q4. They expect RAM segments to be the primary growth driver, building in 2% Q on Q fall in net interest income and 12% Q on Q fall in net interest margins given higher EBLR book. Morgan Stanley has also maintained an underweight with a target price of 100 rupees. They say that as per the initial updates, loan growth seems to have decelerated and now in line with system domestic loan deposit growth. It's been moderated compared to last quarter. Domestic loan book rose 1.3% Q on Q, 9.7% year on year and 13% year on year versus last quarter. Domestic deposits have also risen 1.7% Q on Q. They say the bank continues to gain market share but likely at lower spreads. There are a whole clutch of more financial companies that have given their business updates for the quarter as well as retail companies, but these are the ones I picked. The overview seems a little mixed.
And the silver production number from Hinzinc I thought was quite interesting in the context of global supply constraints for silver and the prices not catching up with gold. It's an interesting story. All right, let's talk about the stocks on my list. Nika is first up, and this is a thumbs down only because there's going to be supply that hits the market, and in the form of a large deal. Harinder Pal Singh Banga, who is one of the earlier investors in the company, is set to sell another 2.1% stake, and that's worth about 1,198 crore rupees. The stake sale is to take place via a block deal at a floor price of 200 rupees, which is a 5.5% discount to yesterday's closing price. Banga had nearly 5%, about 4.97% stake in Nika as of the 31st of March, and he and Indra Banga had offloaded 1.4% stake in August of last year. We've seen in the recent past, caveat, that a lot of these large trades have been lapped up very quickly by domestic institutional investors, and the impact on the price has been not as much as it has been in the past. So bear that in mind. The next couple of retails, The next couple of updates are from the retail space. V2 Retail is a thumbs up from my perspective. Very, very good numbers. It has registered a strong business growth in the April to June quarter. The standalone revenue has risen by as much as 51%, coming at 628 crore rupees. The same store sales growth, which is a key metric to track, was 5% higher, and the company says that it saw double digits same-store sales growth in May as well as June. It saw a temporary dip in April on account of the shift in Eid to the previous quarter. The normalized same-store sales growth was at 10%. That normalized calculation, of course, removes the impact of one-time events. In this case, it was the impact of Eid. The company added as many as 28 new stores and closed one underperforming store in the first quarter. And the total store count as of the end of the quarter stood at 216 stores. It remains focused on Tier 2 and Tier 3 cities. We will be speaking with the management to try and figure out whether the uptick in trajectory of sales that they saw in the last couple of months of that quarter will sustain heading into this quarter as well. Let's talk about bazaar-style retail. I must point out that there was a bit of a disagreement on how to tag this. I think it's a positive, whereas our researcher Mahima thinks that it's not. I'll tell you why that is and why I'm saying that it might just be a positive. The revenue from operations have grown by 37%, stood at 3,777 crore rupees in the quarter, but the same-store sales growth has actually degrown by 3% in the first quarter, they say, the company, on account of the shift in Eid to the previous quarter. And indeed, the same-store sales growth in that previous quarter was up as much as 20%. They've said that their normalized SSSG, which is the same-store sales growth, was 11% in the first quarter. And they have also added a significant number of stores, as many as 22 new stores in the first quarter, bringing the total to 232. Now, what had the management highlighted? There was a brokerage note that I was reading a short while back, and they said that the current on-ground demand looks good, but it can have a bit of an impact on account of the shift in demand due to Eid. They've said this in the past for FY26. For the whole year, they expect 20 to 25% revenue growth led by 7 to 8% same-store sales growth. So bear in mind that the trajectory of revenue growth in the first quarter is actually significantly higher than the guided range, and so that should bode well for the company. Also, that same-store sales growth should normalize over the course of the next few quarters. At least that is my interpretation. We'll figure out what analysts have to say about this, Neeraj.
Well, I also have a retail stock, but I'll start off with Vedanta, which might have a bit of a reaction today. Now, Ministry of Petroleum has raised objections to the demerger proposal. SEBI's informed NCLT that it is conducting a compliance review of Vedanta. Now, that may not mean too much because, I mean, it's just a review. And NSE on its part has actually granted the NOC. But I think the street was very long yesterday on the hopes that this will happen. And it was wrong to expect that because arguably this is the first of the many hearings. The next hearing is scheduled for August 20, 2025. And even at that point of time, it's not necessary that it will be a done deal as yet. But I think what today's price action for overnight traders will do is make them wary of taking a very strong long position or otherwise in August 20 because it may not necessarily happen there. Now, the extent of the long position, right, there's about 3.5% price increase in the month of July, wherein the open interest in Vedanta has gone up by 10%. So you will actually see some bit of that unwinding today. So it could open flat, but it could also open 4-5% lower. So keep that in mind as you trade Vedanta today. I suspect that the stock could see a negative reaction because of the high open interest. So keep an eye out for Vedanta. Avenue Supermarts is the second one. Standalone revenue forecast is about 16% for quarter one, about 424 stores across India as of June 30th. But the Q1 sales growth moderating slightly from Q4 based on the forecast revenue. And in fact, Goldman Sachs in its note expects margin contraction on a YOY basis. So you might well see Avenue Supermarts. Difficult to call this one because it doesn't quite trade how the street expects it to. But I suspect that Avenue Supermarts could also have a bit of a red day. And M&M Financial could have a red day because, I mean, Q1 was muted, AUM growth continued to moderate. Morgan Stanley note says it all. They're saying that growth and asset quality has remained muted and that largely brokerages see downside risk to FY26 PPOP and weak ROA as well. the street was positioned for this. Because it's so muted, you might well see it being lackluster or maybe with a bit of a downward bias. So keep an eye out for this one as well. So 3 reds from my end, unfortunately.
Yeah. And after a day which has been quite patchy. Actually, if you look at the watch list as well, not too many positive news flows today. And one thing that might be a positive, if at all, is this report that the GST Council could be considering a major overhaul that could see the 12% GST slab get eliminated entirely, with 18 and 28% slabs to remain. Currently, everyday essentials like butter, ghee, fruit juices, almonds, footwear under 1,000 rupees, solar heater, processed foods and budget hotels fall under the 12% slab. The proposed change would shift these items to either the 5 or the 18% as part of a broader effort to simplify the GST framework. States are pushing for gradual changes to avoid disruption, and the GST Council is expected to meet soon to finalize the details. So the date and agenda are still under wraps. So this is up in the air right now. To be sure that this is a proposal, whether it goes through or not is something that we have to see. Of course, there are some brokerage notes on it as well today, so that's something that we should look at, and they see it as a positive if this happens. Abhishek Rastogi with us, lawyer and founder of Rastogi Chambers. Abhishek, very good morning to you. Now, what is the likelihood of this actually happening? Because simplifying these tax slabs is something that has been on the cards for several years now.
Good morning, Tamanna. I think rate rationalization, we've been talking and we've been very vocal about rate rationalization, and for several reasons. Because once this rationalization happens, then the consequential effect would be that there will be lesser of disputes. Today, there are a lot of disputes between classification of goods and services, whether these would fall within the category of 5%, 12%, and 18%. Now, if this rate goes away, the classification disputes will also be reduced. That is one. I don't think the arithmetic will go against the revenue. They would do that arithmetic calculation to, ensure that the revenues do not dip. So that should not worry the revenue at all. But I think in the long run, this rate even of 5% must go off. So I think what we must have is a rate of exemption, 0%. Maybe about 15% rate on all goods and services, which would have about 80% of the goods and services covered within the tax slab, and 30% rate. So I think ideal situation would be 0%, 15%, and 30%, 3 rates. That's all. That will reduce a lot of complexities, a lot of disputes, classification disputes, otherwise, and even from the systems perspective, the IT system perspective, which needs to be implemented, a lot of these rate tweakings are very detrimental to business. So I think once and for all, we need to settle this. And I think GST Council is working in the right direction. This rate rationalization must happen.
So on the face of it, Abhishek, I take your point that this is something that is an ideal scenario, but we've seen in the past that consensus is difficult to build, especially when state finances could be better. Let's just say that. And so therefore, from that perspective, would you say that this is something that could take a long time to come into play? And if at all it does come, do you think that there will be demands? And we had a story just yesterday about sin goods and the fact that those could be taxed more. Is that a trade-off that you see that is likely?
Certainly, I think there will be certain more products which would go to the higher category tax rate. And I think what must happen is that those goods which are meant for common consumption, those goods which would be more consumed by all classes of income groups, must not be taxed at a very high rate. And even if this rate rationalization happens, I think few states may have some concerns about some products. I think to do this rate rationalization, the success story will happen only when these issues which are addressed, which are state specific, are addressed, and hence the reduced rate is made applicable on some of these products, and then only this rate rationalization can happen. I think this rate rationalization will also depend on how state reacts to certain products, and if that is addressed, I don't see that should be a problem.
Okay, thank you so much, Abhishek, for joining in. Now we have to see how this goes. Goldman Sachs, meanwhile, on consumer staples has a note out today. They're saying government is considering eliminating the 12% GST slab and reclassifying these items into the 5% slab. They're, of course, quoting reports. and one of those things is what we have reported. Now, apparel and footwear are currently at 12%, so this is important for Trent. Apparel priced over 1,000 rupees will be also in this. Bata is another stock to watch out for. Footwear prices are below 1,000. Packaged foods, Nestle and Dabur is important. Dabur for Ayurvedic medicines and tooth powder as well. All of these are in the 12% slab right now. Titan, you should watch out for eyewear. So you have quite a few stock reactions that you could see if this comes through as well. Now, other stocks that are on our radar today, and let's just take you quickly through the watch list. V2 Retail, the revenues up 51% in Q1. Auto and pharma stocks because, Oro Pharma, because they have an approval from the European Commission for a drug. Shakti Pump has a 400 crore QIP at 965.
All right. There's also, on the other side, like we said, there's a lot that is happening that is not necessarily the best. Avenue Supermart, the revenue growth is below estimates. Nika, there is that stake sale by an early investor. Mr. Banga is set to sell 2.1% stake at 200 rupees per share. Sheila Foam, the CEO, has resigned. And M&M Financial, we talked about this as well, the disbursement growth has been muted. Genus Power, the promoters have created additional pledge. Axis Cades, the promoters have sold 1 lakh shares, which amounts to about 0.25% stake. IndusInd Bank, Macquarie has downgraded the stock and cut its target. It saw significant volume in trade yesterday. All right. On that note, we have to slip into a very quick break, but we've got trading strategies lined up for you on the other side, so do stay tuned.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
Right, back with India Market Open right here on NDTV Profit. Let's pull up the pre-open and see what we are likely to start off with. About 29-30 points in the green. This should be welcome. Remember, the US markets did okay, and Asia is not all too bad ahead of the jobs report in the US. Please keep in mind, viewers, that tomorrow is a holiday in the US, so those markets will be shut, and therefore we'll have an extended reaction come Monday morning. Be careful with your trades over the weekend.
Independence Day, not Liberation Day.
Independence Day, not Liberation Day. Well, maybe they'll celebrate too, who knows. But anyway, Chase, let's go on to the news flow in India's end. And Macquarie has released a note on financials with major re-rating and target changes. I like the word major. Okay. They prefer large private banks, selective risk reward for NBFCs, and then some more. So let's get in Harsh, who's looked at this note very closely to try and tell us what is it that Macquarie has to say. Harsh, good morning. Let's start with the ratings and the target changes.
Well, yes. So let me first start off with the biggest one, IndusInd Bank. they've downgraded IndusInd Bank, they've downgraded to an underperform from an outperform, so it's a double downgrade. They've cut the target price from 1210 rupees to 650 rupees. That's a large target price cut. Outside of that, they've done something similar on an HDFC Life, but they've hiked the target price from 570 to 720. Kotak Mahindra as well downgraded, but target price hiked from 2200 to 2300. SBI Cards downgraded to a neutral, hike target price from 1000 to 1040. The second day consecutively where we've seen a downgrade on SBI Card. So something to note as well. The only possible upgrade is a PB Fintech. They've upgraded from underperform to neutral. They've hiked the target price from, again, this is a large one, 1530 to 1945. So that's a large hike. Now let's talk about what they are liking. They're expecting financials to be strong and stable. They expect resilience from the financial space. Mid-teens EPS growth is what they are penciling in. Margin issues they believe will be transient. They're expecting banks to deliver a solid 15% EPS CAGR over the next 3 years. They're also saying they prefer the larger private banks. They believe that the risk reward in NBFCs is selective, so you want to be careful there. PSU banks are losing market share in deposits is what they're saying. They're expecting EPS declines in FY26 on the PSU banking side. They're seeing ROE compression in FY26 again and in the near term. NBFCs, they're expecting some margins to expand. Growth, though, will likely decline according to them. In the insurance space, they see regulatory overhang continuing to persist. Positive with regard to general, negative with regard to life. Their top picks: HDFC Bank, Axis Bank, AB Capital, PFC, Shriram Finance and LIC.
Okay, all right, so that's the view on a whole host of financial stocks. Make sure that you take a look, and if you have to on YouTube, you can scroll back and take a look again before the start of trade. We've got Milan Vaishnav of Gemstone Equity as well as Avinash Gorakshakar of Profit Mart Securities joining us this morning. Gentlemen, as always, very good morning to you and thanks so much for taking the time. Milan, I'll come to you first on the strategy that you would suggest for expiry day, weekly expiry, of course, the first of several this month. And where do you see the range for the Nifty 50 and the Bank Nifty?
Good morning. What I see here is that, we need to understand two things. One is that after almost 6 to 8 weeks of consolidation between 24,500 and 25,100 odd levels, Nifty finally managed to break out of that zone. But right now it is seen consolidating at higher levels. But after the breakout, from a technical perspective, we can certainly say that Nifty has dragged its support levels higher from 24,500 to 25,000, and we can see in event of any continued retracement, 25,100 zone to be acting as support. Now that is point one. Now second thing that I would like to slightly highlight is that today is the weekly options expiry day, and Nifty has dragged its resistance level lower from 26,000 to 25,600 levels. So in best of the sessions we might have today, I don't see Nifty moving past 25,500, 560 zones, 600 zones, and not only for today but for foreseeable future. Next couple of days, I expect Nifty to continue finding resistance at 25,600, 650 odd levels. So my suggestion would be to stay away from trading Nifty in a directional way. At best, one can opt for strangles for next week or for even month-end expiries. But by and large, at least for the next few days, I don't see any strong directional bias emerging in the markets.
Let's talk about your individual stock picks as well, Milan. This morning, what are you picking?
I'm picking a bit of relatively low beta stuff. One would be CESC. I'll be looking to buy CESC above 177, keeping a target of 200 and a protective stop at 165. My second pick would be Maruti. I would be looking to buy it above 12,600 with a target of 13,200 and a protective stop at 12,200.
Milan, hi. Good morning. Just wondering what would be the F&O strategy for the day?
For today, nothing specific. I would not deploy anything except write a short range strangle. Sorry, short strangle for today. But that is something I would not encourage, because if we have to take any strangle position, I would suggest one should go for the month-end expiry, that is 31st of July, and one can easily write 26,000 call and 25,000 put. The reason is that by doing that, one can expect a massive yield of 12%. Even if you are able to realize just one third of it, then 4% to 5% yield during the month will not be bad.
Avinash, very good morning to you as well. I'm just wondering if you have a view and took a look at some of the updates, business updates that have come from retailers. 3 of them yesterday, V-Mart, Style Bazaar, and of course Avenue Supermarts as well. Seemed like a bit of a mixed bag.
Yeah, I think, good morning, Tamanna. I think clearly, we retail as well as Style Bazaar have done remarkably well. If you see the numbers, a very strong kind of performance. My sense is that DMart has actually disappointed investors. And I think, in the conference call, once the first quarter numbers are out, I think the management commentary will be very important to hear. But I think on a higher base, growth seems to be slowing down. And I think that's not a good sign, because valuations still seem to be pretty fair to expensive. So I think, as far as Style Bazaar is concerned, I remember when the public issue came, it got a lukewarm response. But if you see the numbers, I think numbers have been pretty solid. My sense is that the first quarter should be quite good for them. And we retail also should definitely do well. I think clearly in terms of their business commentary also, which has come out, I think it points to be very optimistic. So I think it's a mixed bag, but I think the smaller players seem to have done well. DMart, on the other hand, seems to have slowed down.
Just a quick follow-up, Avinash. The only fly in the ointment, if you can call it that, for Bazaar Style, and Neeraj keeps using this, so I'm borrowing it from him. But Bazaar Style, the focus is on that degrowth in same-store sales growth, which is because of the shifting of Eid, as they've pointed out. I looked at the management commentary, and still the revenue growth is well above the guided range for FY26. Are you going to look through that same-store sales growth or rather degrowth in the quarter?
See, I think clearly, Alex, in this quarter, definitely it could be a kind of a small disappointment. But I think going forward, what kind of sales growth do they manage is something which the markets would like to pencil in. So I think, it's a minor kind of negative. But yes, I think going forward, this number will also be crucial, because that is also one variable which the market tracks very closely.
Any perspective, Milan, on some of these counters, and not necessarily Avenue, because it doesn't necessarily move very dramatically, not always, at least we've seen a few times, but on V2 Retail, on Bazaar Style?
V2 Retail has shown good appreciation over the past days, but it topped out sometime in Feb. But if you take a look at the higher time frame charts, it's been consolidating very nicely and might continue with its up move. I would see that the stock has potential to generate alpha if held in the portfolio, at least for a medium term. I expect 2100 to 2200 on the stock.
Sorry, I didn't ask, Avinash, just very quickly, yes or no answer. Buy on both V2 as well as Bazaar Style?
Yeah, I think both these counters, Alex, can be accumulated, with a slightly medium to long-term horizon. My sense is that the retail story seems to be picking up, and hopefully, I think, once the rate cuts benefit come down to the micro level, I think you're going to see a lot of demand pick up in the second half of the financial year. So, Style Bazaar and V2 can be accumulated, but on declines. I think DMart should be avoided.
It's time for an NDTV Profit exclusive. The government has decided to do away with the lengthy auction process for state and central government entities that are interested in buying MTNL's assets. And this is a big one because there are considerable assets that we're talking about. Aishwarya is joining in to tell you more about the details here. Aishwarya, how many crores are we talking about? What assets specifically are we talking about?
Well, we've been hearing about debt-ridden MTNL for a very long time, and some relief coming in there as we pick up few details from our sources. What we're hearing is that the government has decided to do away with the auction process for state and central government entities. Now, MTNL assets will be offered at simple valuation to government buyers, which means not at market rates of these land parcels or properties that MTNL, BSNL own. Now, the move is aimed at cutting down lengthy bidding as well as valuation processes, which often takes months or even end up taking years as well. Initial valuation of some of the MTNL assets have been done through surveys across Delhi and Mumbai, and they have been pegged at about 6 to 7,000 crore rupees. This is just an initial figure. More surveys are yet to come across these two cities as well. Now, the framework for private buyers who would be interested in buying these properties or land parcels that MTNL and BSNL own, that is still under consultation and may or may not have a bidding process in that regard. MTNL assets monetization will be done in phases, as I've mentioned, because a lot of hurdles are coming forward as they are looking at and reviewing all of these properties. Some of them have issues such as the land use change as well. Some deeds are missing, some contracts are missing. So that's one of the impediments in selling of all of these properties, and 220 of the 280 MTNL non-core assets will be monetized very, very soon. So that's the update so far.
Okay, very, very soon is the big question, right? What is the definition of very, very soon? Because we've been hearing about that asset monetization plan from the last few months. But thank you for that, Aishwarya, there with all of the details. I mean, I don't know, Avinash, if you see an upside on MTNL, this news definitely shows you that there is seriousness in improving the balance sheet of MTNL. Avinash, your view on this?
No, I think, Tamanna, as you rightly pointed out, I think this is something which the markets have been waiting for a very long time. I think hope it happens fast because, these asset kind of sell-offs have been taking a very long time, specifically as far as MTNL is concerned. But I think even if the assets are sold, the core business is completely out. So I think it could only give a small relief to the company. My sense is that on the operating side, there is hardly anything to talk about MTNL. Because the numbers are not great at all. I think operations have stopped. So I think, these asset sell-offs could only partially improve the balance sheet. I think at what valuation these assets are sold out and which critical assets are sold out, that is very important. And I think it needs to happen fast because, if it doesn't happen in the next couple of weeks, the market should again lose interest in the stock.
Yeah, let's see. There's a good heady run up, but don't know if this lasts or no. Actually, Milan, if not MTNL or maybe MTNL too, but a couple of other stocks which have been on a roll for the last couple of days. NACL Industries, wherein now the news is that the CCI has approved Coromandel's acquisition, or Gabriel, which has been locked on a 20% upper circuit for the last couple of days.
See, I'll begin with MTNL fundamental developments aside, but if you look from an investor's angle, I personally do not like such stocks because if you look in June, the stocks spurted from say 48 rupees within a matter of days to 102, and then comes down back in 5 lower circuits back to 60, 58, 60 rupees. These kind of stocks may end up as well destroyed for large majority of the people who are not able to exactly time this. So I would generally not follow or track stocks like MTNL. With regard to Gabriel, yes, Gabriel remains a fundamentally strong story. For a fresh entry from technical point may not come with a good risk to reward ratio because of the kind of move that it has seen, but it certainly deserves to be accumulated on declines.
Okay. Stay on with us, Avinash and Milan. It's that time of the morning where we talk about all of the dealing room chatter. So Amit Sarkar joining in on what's being heard on the street.
Well, yes, firstly, it's Marico which has been in focus now. Dealers are indicating that large HNIs have been taking sell positions when it comes to Marico specifically, given the fact that they're anticipating the Q1 update to be on the weaker side. The second was on Vedanta and Nalco, where large HNIs were taking a bet of buying Vedanta and Nalco. For Vedanta, they were expecting some positive outcome to come in from the NCLT meet, but that did not go through. But so it will be interesting to see how Vedanta plays out in trade today, because a lot of long positions have been built in when it comes to Vedanta, and Nalco is on the short side. When it comes to Dixon Tech, Despite the big downgrade that we had seen from Morgan Stanley coming in a couple of days back, the stock is still seeing strong buy flows. Now, dealers are indicating a couple of factors that could lead to such strong buy flows. Firstly, they're expecting strong revenue growth numbers, 30% plus growth is what the dealers are expecting. And they're also saying that there could be a joint venture that the company could announce with an international company. So that would be interesting to see going forward. Godrej Properties is another stock. There are sell flows on HNI desk. Dealers are expecting a negative note to come in from a brokerage firm. So keep an eye out for Godrej Prop as well. And Indus Towers, strong buy flows is what we are seeing on FI desk specifically for Indus Towers. And a couple of trigger points for Indus Towers is firstly there is a big, either there could be a big buyback or a big dividend that could come in from Indus Towers, and that's what the street is awaiting for a very long time. So Indus Towers keep an eye out for. And M&M Finance, as we had indicated yesterday, that there were sell flows on the back of weak Q1 update expectations, and that is what has come in. The disbursement growth has been quite weaker for M&M Finance. So it will be interesting to see how M&M Finance reacts in trade today.
So M&M Finance in focus as well. And Avinash, if you've looked at a clutch of those, thank you so much, Samit. Great to have you in this morning as always. If you've looked at a clutch of those, M&M Finance, Punjab National Bank, Indian Bank, among those that came in, what have you seen, especially with M&M Finance?
No, I think, Tamanna, I think clearly my sense is that definitely some improvement has come in, but I think clearly, some more commentary on the asset quality, on the loan book growth, and how the the good rural market is going to pick up once the monsoon takes off, because their entire market is dependent on the rural kind of customers. I think clearly the second half should be much better, and I think the commentary which comes out from the management will be very important to watch out. So I think net we are structurally positive here, but we'll wait for the management commentary to come out.
Focus on metal counters once again, and here we're focusing in on Tata Steel. At its annual general meeting, the company laid out a strategic roadmap focused on cost reduction in Europe as well as an aggressive expansion here in India. Hiral joining in to tell you more details about what they've said. Hiral, morning.
Good morning, Alex. A strong day in terms of Tata Steel, because yesterday's session as well, the stock ended at the day's highest levels with gains of around 3.5% coming in there. And this was on the back of the commentary. Two important aspects. One is, but the company is anticipating the UK operations to achieve EBITDA positive in 2026. The company has been talking about this since quite some time, but let's see, this time the stress has been absolutely strong on this aspect. What they've said is they're looking at cost reduction to the tune of almost around 500 million euros in FY26, and that is what will aid profitability as well. The company is also projecting a 2 million ton volume increase by FY27, wherein the earlier guidance was a 1.5 million ton. So that's an additional 5.5 million ton that comes in terms of addition volumes. Let's quickly look at the market outlook and margin pressures. What they've said is that despite the decline in coking coal prices, high steel supplies have continued to keep margins under pressure. In fact, the company is expecting coal prices to remain range bound and the spreads to remain absolutely constant. Overall, they're planning further investments in mining assets, and that is what will boost capacity for them. If you talk about their expansion plans, the blast furnace at Kalinganagar is fully operational, and they're planning for an additional capacity of 5 million tons. The company has said that they will be focusing on maintenance of capex of existing plants in India, where the electric arc furnace in UK is scheduled for completion by FY28, and the one in Ludhiana has already been completed by the end of FY26. So overall, the expansion plans and the UK subsidiary turning EBITDA positive, these are the two major highlights that could be positive for the company from here on.
Okay. Thanks so much, Hiral, for that. And bright spot in trade yesterday, in an otherwise weak setting, you had Tata Steel that led the metal pack higher. In fact, pull up the constituents on the Nifty metal from trade yesterday, and you will see that the steel companies were up and about. You had SAIL, you had JSW Steel, you had Tata Steel, which were the top gainers. And then you had the underperformers in the like of Hind Zinc, which, and we just told you about the quarterly update. But Milan, on the charts, will the strength that was visible in a few of these counters and seemingly more towards the ferrous counters, will that continue through? Is that something that gives you confidence to go long on some of these companies?
To be frank, yes. The thing is that let me begin with JSW Steel first. JSW Steel has been trading in a sideways range since last October 2024, and that is forming an excellent base for itself. And any move above say 1,060-65 odd levels can lead to a structural breakout in the stock. Tata Steel looks equally good from a short-term perspective, breaking out from an ascending triangle formation, and so does Steel Authority. In order of my personal preference, if I call, then my personal preference would be first begin with JSW Steel, followed by Tata Steel, and then by Steel Authority. And Vedanta also, it looks good, regardless of what the developments are taking place outside the markets. But the clear price action shows that something positive is building up, and we can see some good strength in Vedanta as well over the coming weeks. And overall, weaker dollar is aiding the prices as well.
Very quickly, if Vedanta were to start off lower today, would you buy it with a positional trade perspective?
Vedanta, if that is starting lower today, yes, I would definitely I will do it in a staggered manner. I'll buy first 50% of my intended quantity now at whatever rate it opens at. Regardless of what downtick we might see today, I will buy my 50% quantity today, and I will add the remainder of the 50% once it goes above 480.
Okay, just very quickly remember, in Vedanta's case, at some point of time when this whole demerger thing happens, the sum of part, it could be positive. So Milan believes use the dips to buy. We'll talk to Avinash about that as well in a bit, actually. Or maybe Avinash, can I just ask you on this? Vedanta, if it opens lower today, are you a buyer in that for this whole demerger reason?
I think, Neeraj, you can definitely look at buying at the current odd levels, because my guess is most of the negatives are in the price. And as you rightly mentioned, once the actual demerger happens, that could possibly add a lot of value to the overall, shareholder value. So my sense is that somebody who's looking for a medium-term view should definitely, accumulate here at the current odd levels. Our sense is that, the first quarter numbers also should be quite good. So to that extent, even the fundamental value seems to be quite solid. We are looking structurally positive on the stock, but how the demerger happens and how the values for all these 5 companies shape up is something we'll have to watch out for.
Got it. All right. Thanks, Avinash, for that. And Milan, I understand you have to leave us. So thanks so much for joining us this morning. Pleasure having you as always. Viewers, we have to slip into a very quick break before the start of trade, and we'll be back on the other side to talk about the implications of the latest Class 8 truck volumes. Which stocks should you watch out for, which could take a bit of a battering on the back of that update? Do stay tuned, and we'll tell you after the break.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D
I am very proud to say that we make in our categories that we have been supplying to our defense forces some of the best platforms in the world.
Welcome back. Just a couple of minutes for the pre-open rates to hit, but an important story that we should highlight before trade opens. North American truck orders, a key leading indicator for the global industrial economy, have plunged to their lowest level for June since 2009. Puneet joins in to tell us what's happening, and also, Puneet, what companies does this impact?
Well, thank you for that. So definitely it's a big negative and continuing their negative for the 9th straight month in 2025 season. For the month of, first let me just give you a perspective. North American Class 8 trucks are a specific purpose in North America where it's higher payloads. Essentially, it can carry higher weights and higher number of goods. So this is a key indication of the industry as well of what's happening in the US. And that is key for some of the forging companies in India like Ramkrishna as well as Bharat Forge. So the number of roughly about 8,900 units sold in June it's down 36% on a year-on-year basis and 25% compared to May as well, which was already a multi-year low level. The other aspect is that they've mentioned ongoing tariffs as one of the key reasons for the volatility, but they've also mentioned that the freight market uncertainty has been also been amplified into this particular time period, and that's affected. The net orders also of 8,900 was significantly below the 10-year average of almost 19,000 units. So it's a 60% fall from the average of the last 10 years. And finally, as I mentioned, for the 2025 season, which happens generally from September to August, essentially, that number is also around 15% for 2025. So as I mentioned, Bharat Forge, MM Forging, as well as something like Ramkrishna Forging, the three companies could be impacted. But we always see a larger impact on something like Bharat Forge because of their exposure to these Class A truck markets much higher than the other listed Indian peers.
A point well made, Puneet. Thanks so much for joining us with that quick update. Keep these on your radar today. Just a quick view before we go to Shrikant Chauhan, who's joining us this morning, Executive Vice President and Head Equity Research at Kotak Securities. Shrikant, as always, very good morning to you. Avinash, I'll come to you very quickly on these three stocks, Bharat Forge, M&M Forging and RK. If there is a downtick, well, what would you do? And would you see this negatively? Would you sell on this news?
I think, Alex, in the short term, these stocks are definitely going to be impacted negatively because Class 8 trucks are a very large kind of revenue contributor to companies like Bharat Forge, of course, even RK Forgings. In the short term, the sentiment will be negative because unless and until we see a big turnaround, this part of the US business will not contribute a significant top line to these companies. So short term negative, but longer term, I think, things will improve. It's not that things are going to go from bad to worse. Some bottom up would happen, and I think you'll have to patiently wait for the recovery to happen here.
Okay. Watch out for some of these auto hangs as well. And remember, autos have been sluggish as well, right? Shrikant, can I come to you? I mean, the pre-open rates are starting off and will settle in a bit. So we'll mark some of these as well, especially the retail firms. But I'm just trying to understand, how do you see the auto index in light of what the view on Nifty might be per se? And are you as constructive as Lawrence Belanco is that this dip, if any, is actually a position to buy into the Nifty for a target of 26,200, 300 or whatever?
Good morning, Neeraj. Good morning, Alex and Tamanna, everyone. I think, specifically for auto index, it is in fact indicating some consolidation sort of formation. And yes, there is a good amount of resistance at current levels because we have already seen a very strong up move in most of the auto companies, including Eicher Motors, Mahindra and Mahindra. But at current levels, it's a taste of the sector because I'm going to say we can expect uh, a major activity if there is any specific news flow related to the auto sector. But for the time being, I'm expecting some more consolidation in the near term. And specifically, we need to focus on very, very selective stocks because most of the stocks are, I'm going to say, reversing after hitting their important resistance level, like TVS Motors, or even I can say uh, stocks like Tata Motors, Hero Motors. So there we are seeing good amount of selling pressure. For Bharat Forge, RK Forging, the view is that the news flow is already priced in. They have already corrected to their important support levels. So after this news, maybe we may see some more weakness in the near term. But later on, I am expecting a gradual upward activity, especially in RK Forging. For Nifty, yes, it is like very clearly indicating us that the market is heading for the levels of at least 26,000 in the near term. I'm going to say next 1 or 2 weeks. But in the near term, after hitting the levels of 25,600, 650, we are seeing some profit taking in the market. And whenever there is profit taking, we saw buying interest in mid cap and small cap companies and weakness in large cap companies. So maybe in the near term, again, the possibility of 25,200, 25,100 is not ruled out. But now 25,000 is going to act as major support for the market. And in case if there is any positive news flow, there are multiple chances that the market can again hit the levels of 26,000.
That news flow maybe will come in the next couple of days, to be honest, when we know what that India-US deal is looking like. You could see that in the next couple of days. Srikanth, your picks this morning.
Good morning, Tamanna. I would like to go with a few metal companies. In that specifically, we like Tata Steel, which is around 166, 167 levels. From here, the stock can move towards 170 on immediate basis, but in the best case scenario, we may even see the levels of 175. We can keep a stop loss at 163 for the same. We also like few pharma companies, but in that specifically, Biocon is doing relatively much better than other companies. And there also we are bullish with a target of at least 390. We can keep a stop loss at 360 for the same. And the other stock on which we are bullish is from the real estate. Sorry, wait a minute. I would like to see that. Yeah. The other stock on which we are bearish, I'm to say we are expecting some weakness is ICICI Bank. If we go through with all these private banks and NBFCs, then surprisingly we saw good amount of profit taking in all these companies. And it looks difficult for them to cross their immediate highest levels in the near term, including HDFC Bank. So all these private banks, NBFCs should be on the watch list in terms of taking some profit on these stocks. We can expect some weakness in the near term, and because of this only we can expect market also coming down to the levels of 25,200. Especially ICICI Bank looks weak with a stop loss of 1436. We should look for creating short position on the stock with a target of 1400 on the downside.
You know, just because you spoke about Biocon, it's a great day when Srikanth Chauhan gives you so many picks. We expect to, but you got, bonuses today. But we're talking about Biocon. There's some news on it as well. It's ARM, Biocon Biologics, has got market authorization from the EU Commission for Vevzuo and Evfraxy. So Vevzuo is used to prevent bone complications in adults with advanced cancer. And the other one, Evfraxy, is used to treat bone loss linked to hormonal imbalances. So the estimated market size for the first one, Vevzuo, is about $3.27 billion in 2024 and can reach $3.7 billion in 2025. For Evfraxy, it's $1,689 million in FY24 and is projected to reach $6,531 million by 2031, which is growth at a CAGR of 18.3. So two drugs and an important licensing there, the stock up 1% as well. But I think my eyes are glued to that news that's breaking on our ticker, folks. Are we going to see July 4th firecrackers being, celebrated by Donald Trump. Look, he needs to show a victory after July 4th. And this mini trade deal from India could be just the one to look at. And that's what we're breaking. Sources to NDTV Profit on your flashes right now. Likely by July 4th to 5th. I mean, and it fits in, right? He'd want to announce this after the July 4th celebrations.
Yes. So, and it's with, I mean, if you think of the top 5 economies and if you're getting a deal with one of them, right, on July 4th, it is a victory in his eyes in front of the American people. So not surprised there. But this is interesting. Tamanna, 2 days ago, you were talking about there being some issues, some delays, and the contingent staying back. Could this be the end of all of that?
Yes, so you know, now with a trade deal with so much focus on it, remember it'll also be about presenting a win on both sides. So Trump is most likely, no matter what the details of the deal is, he's most likely going to come and say things like, I have opened up the Indian market like never before, I've got great concessions. And the Indian side is very, very clear. We're sticking to our red lines. I don't think that changes at all. There's going to be no compromise on access to dairy. I don't think there's going to be a flood of GM foods from America, which is going to be allowed in India. I don't think Indian farmers are going to be, you know, put at risk like that. So that seems unlikely. In fact, Rishabh, who has those exclusive details, joining me on the phone line now. Rishabh, what are you hearing? Next 2 days, that means post July 4th, and maybe this Saturday India time, we could hear details of a mini trade deal?
Well, what we are picking up is the fact that there will be
bad line. I think we'll need to repatch this line. Rishabh, we'll need to come back to you.
It's muffled.
But Tamanna and Alex, this goes without saying, right? I mean, so many people talking about it, that if they do it otherwise, it could be political suicide. I'm saying independent. I mean, I just believe that even if the government had a carte blanche to be in power for the next 50 years, they wouldn't go out and concede these, because this is labor-intensive forces in India which need that protection. So you will definitely see India sticking by those terms.
Of course, any government will work in the favor of the Indian people, and there is a reason why some parts have not been opened up, especially dairy. I mean, it's not just the US. Australia has been eyeing our dairy sector for a very long time. So that's not really going to happen. Rishabh, just hoping that this is a clearer line. Just a quick update on what we can expect.
Right. What we can expect from this interim trade deal is, let's not expect too much on the agri and dairy front. That seems to have been put on hold for the later tranches that will be agreed upon. The first tranche will be agreed upon in the September-October sort of deadline, and a full deal will come much later. But what we can expect from this is somewhat on the lines of what we've seen between US as well as Vietnam that was announced yesterday, which was limited to tariff cuts, somewhat better than the earlier tariff situation than Vietnam was at, but still not an ideal situation for Vietnam. So that is the broader contours of what we're expecting between US and India as well. Some sort of tariff reductions, as well as some talk on market access for US as well as Indian goods. So those are the two major lines that will be expected as part of this mini or interim trade deal that is expected around the 4th of July mark.
So 4th of July, 5th of July possibility. Rishabh, thanks so much for joining us and giving us that update. It goes without saying that if the deal is announced on Friday night or Saturday morning, our time, you will find it live and, well, not exclusive, but you'll find all of the analysis right here. So make sure you check in with NDTV Profit over the weekend as well. On to the big brokerage call of the day. Asian Market Securities has initiated a coverage with a buy rating on Bharat Electronics with a target of 550 rupees. Anushi joining in to tell us what they're seeing. Anushi?
Hi, morning, Alex. So it's a big upside that we are looking for Bharat Electronics from yet another brokerage note. Now, this is again after a kind of rally that we've seen for Bharat Electronics in the last 3 months and 6 months period itself. The big drivers of growth is expected to be from the order book. Current order inflow is expected at the size of 57,000 crore, almost 3 times of a book-to-bill ratio that we are looking at. So that's going to drive the growth momentum forward as well. The company is also dominant leader and platform integrated across the defense system and is expected to take advantage and yield advantage of that leverage in the increasing defense budget allocation also that we are looking at. In terms of where the revenue, EBITDA and the earnings CAGR projections are for FY25 to 28, they expect a 19 to 20% of a growth across these 3 metrics that we are looking at. currently they're valuing Bharat Electronics on a basis of FY28 EPS at 44 times. So on basis of that, we are deriving a target price of 550, which is 30% of an upside. So do keep an eye out on Bharat Electronics.
Okay, well, watch out. Tanushi, thanks so much for getting that note. And BEL and defense, IFI last few days, the question is, can it revert it? Now, Shrikant, defense companies, they have been iffy in the last 5, 6, 7 days. BEL has won some orders though. How do the charts look for this one in particular?
This one is looking really strong, Neeraj. It is holding all its important support levels and it is forming higher top, higher bottom sort of series. Also, if we consider its overall trend, then the euphoric sort of trend is completely missing. I mean to say it is going up gradually and it is crossing all its important levels. No doubt that the stock is completely overbought, but at the same time, we cannot forget that there is good amount of volume in terms of delivery based as well as there is news flow. So I am of the view that in case if there is any correction, any shallow correction, close to 405 or 10, then there we should look for creating some long positions, but with a medium to long term view. With a very short term view, we can expect some more volatility in this entire sector.
Quick update on Tata Motors. Car sales have come through and it's in the lowest level in the last 42 months. Just pull up some of those details. In June 2025, that is the month gone by, came in at 37,237, and that's the lowest since Jan 2022. In fact, it's just about comparable with December of 2021. This is the lowest quarterly average sales in the last 3 years, remember, so it's under pressure. Very quick view on Tata Motors. It's been under pressure. Shrikant, would you buy on any declines or would you hold off? Would you sell?
The stock is correcting from the highs and it is finding a lot of resistance close to 700 levels. But yes, in case if there is any correction, then close to 660, 665, certainly we should look for adding Tata Motors. I think the worst is over for the stock. But right now the stock is struggling at higher levels, maybe because of this tariff and all related issues. But otherwise, I'm of the view that we should be buyer in the stocks with a medium-term view.
Shrikant, 20 seconds. Your top one call for the day today.
For that, I would like to go with Tata Steel Authority, which is around 137, 138. There I'm expecting stock to move towards 145 in the near term. We should look for adding this stock with a stop loss close to 134. So Steel Authority looks very strong bait.
Okay, sale. And Avinash is constructive on Vedanta. So metals quite out there in the thick of things today. Let's see how the markets start off this Thursday morning. We're starting off, well, almost on the same way we started yesterday. Maybe yesterday was a bit more flat. Let's get the IT index. That's up 0.5% too. Not bad really. Mid caps and small caps. About 1/3% for the mid cap index, the small cap index 0.19%. So quiet as she goes. Banks are absolutely quiet. IT is the one which is holding the index higher. Let's get the heat map up on the screen and see if indeed this is happening. I presume this is because of the optimism around the trade deal that IT index does what it does. But what is gaining well today? Power Grid 1.25%, Eternal about 1%. In fact, the biggest gainer Eternal, Shriram Finance, and then an Infosys chips in. The last 2 days, Infosys is having a great run. We will ask Shrikant and Avinash about Infosys after we're done with the market spotting. But a lot more green, very little red. HDFC Life top loser, Kotak Bank and IndusInd Bank have been sluggish for the last couple of days. Reliance is about 1/3% lower. So that's the sum and substance of what the top movers are. And just before I hand it over to Tamanna, need to mark Asian Paints. That one is up 1.27%. So for a stock which is in the thick of news, it's actually trended higher more than lower ever since the AkzoNobel deal has been announced. Tamanna.
It's interesting that Competition Commission of India's prima facie ruling has had quite the opposite impact on Asian Paints. That's interesting to note. All right, VIX is extremely benign. Are we set for a bumper weekend with a trade deal? Let's pull up the broader indices before we move ahead and tell you what's happening there. Slightly better on the Nifty Midcap 150 compared to the Nifty, about a little more than 0.25% up. Likewise for the small cap 250 as well. Let's pull up the sectoral heat map for you very quickly and tell you what's happening. This Thursday morning, Nifty IT on top there, about 0.5% up. Very positive note on BEL. You'll see India Defence in that top line. Auto doing decently despite Class 8. You know, it's interesting that auto is doing decently because Class 8 truck data is not good. Tata Motors PV sales data is not good, but nevertheless, auto stocks are up. Maybe there is no major concern on GST coming in and increasing the load on auto. On the losing side, PSU banks and private banks, but very mildly. This is largely a positive screen, and this is something to note as well. Let's take a look at specific stocks and what's happening this morning. Nika, one of the early investors, is cashing out. There will be a stake sale today, and that's going to see a hit on the stock just because of the quantum coming in. That large trade, actually, that block of 2.3% of equity has already been transacted. So you're seeing that pain in the Nika stock right now. 6 crore shares have been transacted. Avenue Supermart, Style Bazaar, V2 Retail. Let's see how all the retailers are doing after the business updates. Avenue, we told you, is a thumbs down. That's how it's panning out. Bazaar Style, we told you, is a thumbs up. That's how it's panning out. And likewise for V2 Retail. So the good updates are being rewarded by the street. Let's look at the financials. PNB, Indian Bank, M&M Finance all have put out their first cut of their business updates. We told you PNB was weak. That's what we're seeing. Not Bazaar Style really. We have to look at Indian Bank, but M&M Finance is looking okay and pretty decent actually, even though the numbers weren't great. Indian Bank is completely flat. Bharat Forge and RK Forging, Class 8 trucks have seen a bit of a dip. You're seeing both stocks up in the green though. AIA is the other stock that we added for you. Duties, countervailing duties in Brazil have been slashed, and this might be seen as a positive for it. The stock is up in early trade. Biocon has 2 new drug licenses with quite a bit of upside, 1% up on the stock. So I'm not seeing any major moves. Alex, I don't know what you're spotting. It's a positive view though, but no major moves.
You said it, but I'm focused once again at the start, Tamanna, on the IT pack as a whole, and let's pull that up. Of course, Neeraj pointed out Infosys to you, but IT and the Nifty IT up about 0.7% or 0.6% at this point, and building on that early strength. I only wonder whether that's going to be sold into towards the end of the session as we saw yesterday. Remember, yesterday you saw gains of about 1.7, 1.8% intraday, and then towards the end of the session it was pretty much flat. So Shrikant Chauhan, the question to you, would you say that the initial spurts, the initial sparks that you're seeing in this pack, are they flattering to deceive? Are they a little bit of a trap? Should you be wary, or would you go long?
No, I think, see, ahead of this specific news flow related to inflation print in the US, I'm expecting some rotational activity within the sector, and the similar sort of activity we are witnessing in bank stocks. There we are seeing good amount of profit taking, but IT stocks, there we are expecting some more gains in the near term. Especially Infosys, we like, which is around 1625, 1630. There we can again see the levels of minimum 1700 on the high side, because most of these stocks have stabilized. They are trading above their important support levels. And whenever there is a specific news flow from the US market related to rate cut and all, we see a higher opening for all these stocks. But later on, because of the overall weakness of the sector and the mood of the sector, we are seeing good amount of profit taking or short sell sort of activity at the end of the day. But I am of the view that the sector is completely oversold in the near term, and again we can expect rally, especially in Infosys and Coforge.
Just marking a few stocks that are up and about. Aster DM is the top gain on the Nifty 500 at this point, gaining about 4.6% or so. Coromandel, I'm told that, and we'll put up the details, there is a Competition Commission of India nod for an acquisition that they're doing, I believe.
NSCL.
NSCL.
53%, they've gotten the approval.
Okay. So it's up about 2.6% or so, and so therefore that's something to...
But look at NSCL, Alex.
NSCL is also going up.
5%, it's up 40%. In the last 8 days.
I was just going to say.
Because of that acquisition.
I was going to say, pull up the weekly chart if you can do that and see where this stock has gone. We've marked it for you in the past few days. Now, by the way, Narayana Healthcare is also up and about. It's up about 2.4% or so. But look at NACL. It's been on an upper circuit for the last several sessions. No sellers in the stock today as well is up 5%. And so if you are looking to buy the stock, it's going to be a little difficult for you.
Yeah, since you're talking about circuit stocks, I wonder what Gabriel is up to.
Oh yeah,
20% for the last 2 days.
Yeah, we should check.
Pull up Gabriel.
Let's pull up Gabriel and see what it's doing.
That is up 10% today or no, because I'm guessing after the 2 days of a 20% circuit, the circuit limits would have been revised. Or not, today is down 4%.
Yeah. Okay, so finally, profit taking. But I mean, the kind of gains that you've had in a couple of sessions. In case you missed it, I'll just very quickly reiterate for you. The Anand Group owns Gabriel India, and all of the automotive companies in that group are going to be consolidated under the roof of Gabriel India, which is seen as EPS accretive. The acquisition of these companies is going to be positive because the companies that are being acquired have a better return profile than Gabriel in terms of the margins as well. They are better than Gabriel, so it would bode well for them.
You know, before we go to Avinash, one more thing. I think yesterday, based on those GST flashes that we put out, ITC had moved down. Today, VST is the top loser on the BSE all cap, and you know that's a cigarette player too. So that stock is down 5%. We talked about stories moving the markets, 5.4%. And you're seeing this one being amongst the key losers in trade.
I would just add to that story is moving the markets, KRBL and LT Foods, because we've been talking about a trade deal. And if you have an easing up of imports from India, these would be two major ones to look at. KRBL and LT Foods also doing fine. Some of the pharma companies maybe also might see some pressure easing off. And
just the other ones. As you're talking in stock movers, we spoke about Infosys, etc. The stock that has been on a roll is Quick Heal. I don't know if these virus attacks or antivirus softwares are being lapped up, but Quick Heal is up another 4.5% in the last few days, has had a mammoth run really. So pretty good going for a clutch of stocks. Actually, since we talked about those stocks, Avinash, come in on Infosys. Is it the expectation of a good quarter, or is it the US trade deal, or what is it? Was up 2.5% yesterday, up today as well. Why Infi?
No, I think, Neeraj, clearly the Indo-US trade deal is going to be the near-term trigger point, because I think clearly a large part of Infosys as well as most of the IT majors generate business, from the US. So I think some positive developments, if they do come in, and I think if the order, cycle again starts in a big way, that is what the markets are anticipating. I don't think the first quarter is going to be any blockbuster quarter, but I think the management commentary and obviously the kind of, trade deal which happens, how this shapes up and how US companies now start with their order kind of execution is something which I think the markets are preempting. So I think it's definitely a kind of a sweet position, because stocks have corrected, from very high levels. Infosys, TCS, HCL Tech, these are all large companies with good cash generating kind of abilities. But I think the growth quotient could get little clearer once the US trade deal is announced.
Just the one point I was making about that trade deal and just highlighting and underlining an important aspect that Rishabh is reporting is that this mini deal is good but not perfect, and a lot of the sticky issues seem to have been kicked down the road and parked for now, because remember there is a timeline for a bilateral trade agreement between India and the United States which is supposed to happen in September, October. So the idea seems to be, let's get something out of the way, something for both sides to show.
You need a win.
I think that Indian delegation needs to come back home. They've had 3 extensions so far. So maybe the idea is that
they'll come back in time for Diwali. Who knows?
No. They'll be back this weekend, July 4th, 5th maybe. But so that mini trade deal gets sorted, and then, all the sticky stuff, you push that down. I mean, that's diplomacy. Avinash, in terms of the pharma pack, just because we were talking about that as well, what would you see as likely gainers if there is a positive deal that is inked?
No, I think companies, which have got a large exposure to the US markets, companies like Sun Pharma, Aurobindo, Natco Pharma, I think these could be companies which I think one needs to keep on radar, because my sense is that any positive kind of development from US on the India-US trade deal could definitely mean not only, in terms of financials, but in terms of the sentiment effect. A lot of uncertainty has been created. And I think once there is clarity, from US on the trade deal, definitely these stocks should move up, because I think a large part of these companies depend on the US for a large percentage of their revenues. So I think one needs to keep a watch on these companies, Tamanna.
Okay, Avinash, rather, Shrikant, one quick word. Okay, I think we just lost Shrikant. Avinash, very quickly, anything that you like in the non-large cap space? Anything that you studied in the recent past?
See, I think clearly, within the auto components, we like companies like Uno Minda and Samvardhana Motherson. I think, in the auto component space, there's a lot of consolidation happening. My sense is that we have been visiting a lot of companies on the ground. The second half of this financial year is going to be extremely positive. The kind of tailwinds and the commentaries which we have been hearing clearly indicates that a good monsoon is going to push up rural India demand, and that is going to be very positive for almost all the sectors, including two-wheelers, passenger cars, as well as utility vehicles. And of course, the electric vehicle market is also now showing a decent kind of growth. So I think these kind of stocks, where a large part of the business comes from the domestic markets, clearly should be looked upon. So we have been accumulating these stocks and feel that this year should be a good year for them.
Thank you so much, Avinash, for joining in today on this first leg of India Market Open. We've been talking about retailers, and V2 Retail is one that we should track closely. They've managed to rack in a good revenue growth as per their business updates in Q1 as a hot stock of this morning. It's in line with their guidance. But before we get that perspective from the company, let's go across to my colleague Mahima, who tracks that space for details on the fine print.
Right. So as you rightly mentioned, it's a good revenue growth as per what they guided, and the store guidance is also met. In terms of revenue, it is up 51% at 628 crores. The same store sales growth for the quarter stood at 5%. However, the normalized rate stood at 10%. Basically, what has happened is Eid got pushed to Q4, which is why normalized rate stands at around 10%. Overall, the sales per square feet stood at around 957 rupees, and they've added 28 stores this quarter. Management has said that there is strong focus on tier 2 and tier 3 cities, and they've said that they've entered FY26 with very strong tailwinds. Now, just to give viewers a perspective as to what management has already guided for FY26, they have said that they'll open 100 odd stores in FY26. The run rate of 100 stores will be maintained, of course, in the next 4 to 5 years as well, and plan to open 600 to 700 stores by FY30. The revenue growth is expected between 45 to 50 odd %, same store sales growth between 8 to 10 odd %. Margins, that is EBITDA margins between 8 to 10%, and PAT margins will be between 4 to 5%. They're expecting ROE to sustain anywhere between 23 to 25%, and they're also open to exploring franchising in future, but currently that's not under consideration. No plans to enter the premium segment as well as per the management. So the questions that I want answers to would include that they've already clocked a growth of 51%. Does that actually warrant for a change in their overall guidance growth? And secondly, yesterday there was an interesting note by CLSA which was saying that rural growth is kind of petering out. Will that going ahead hamper the overall sales growth for the company or not?
Okay, so we'll start with some of those points, but first let's figure out what's happening with V2 Retail, because the business updates are very strong. Revenue up 51% at 628 crores. Same store sales growth is also up for the quarter at 5%. Akash Agarwal with us. He's the whole-time director of V2 Retail. Mr. Agarwal, thank you so much for joining in this morning on NDTV Profit. Let's just get a sense of from you on what has worked for this quarter. And of course, I'm aware we're just seeing business updates right now. We'll wait for the full numbers, but what has worked thus far?
Yeah, hi, good morning. So, we've been continuing with the momentum that we've done in the last 2 years. We've optimized our inventory turns, we've reduced our aging inventory, we have structured a very good markdown strategy. So today, more than 89% of our goods are sold at full price. So that's a testament to our trend accuracy and customer connect. And we track gross profit per square feet for each and every attribute of an article. And that is how, we do smarter planning and space allocations. So we believe in the growth story of tier 2, tier 3 India, and that's where our focus is. And our average selling price is just 300 rupees. So at that price point, we sell products that look like they're worth 1,000. So that is connecting very well with the consumers, and we're getting a very, very good response in every geography that we're present in.
You've just described, Akash, every shopper's dream to buy something for 300 rupees that looks like it's for 1,000 rupees. So that's I think you've hit the nail on the head. Now, this has happened. You've seen this growth despite, I believe, in this quarter there was one major festival date change, and that was a bit of an impact. You did not see an impact of that at all?
No, so the normalized SSSG for us was 10%, but because of the shift in Eid, if you look at just quarter to quarter, it was 5%. So there was a 5% impact. But if you take that away in May and June, we saw a double-digit SSG, which is on track with our guidance, and hopefully this momentum continues.
Akash, congrats on the good growth. Now, this is Neeraj here. Good morning. I would, as Mahima was saying earlier, that some notes, economist notes and otherwise, are talking about some petering out of the rural spend / tier 2, tier 3, or tier 3, tier 4 spend. Now, are you sensing that in the last a few days of June or the early days of July? Part one is that. And does it in any fashion impact your annual guidance? If not the formal guidance, then the kind of color that you give on the numbers?
So if you look at industry reports, if you look at macro commentary, then there has been a demand pressure, especially in rural markets, for the last 2 years. And if you look at our trajectory, we have been able to completely go against that. So we haven't seen any such impact. But I also feel that when the macroeconomic factor and when the demand comes back in rural markets and in tier 2, tier 3 towns, then we could also perform even better. So I think if you stick to our strengths, and if because our markup is only 55% compared to 200 to 500% of different brands, so that value is easily visible to the consumer, and there's a big shift happening from unorganized to organized. So I don't think the overall market growth is such a big factor for us if we keep doing what we've been doing for the last 2 to 3 years.
Okay. Akash, now you obviously don't have a plan to enter the premium segment, but I'm just trying to understand that, as you said, unorganized to organized, the rural consumer, or every consumer for that matter, wants the upgrade. So you're selling this 300 product that looks like 1,000. Will you at some point of time move your average selling price, whatever it may be, a few notches higher? And does that therefore help the same store sales growth over a period of the next 2 years? Is that already in the anvil? Do you see that trajectory improving for the better part of FY26 as well?
So there is no plan to premiumize our collection. In fact, we've unified all our labels under one brand. It's called No Brand Only Fashion, NBOF. So it's a bold statement. We're telling India that you no longer need a brand tag to be cool. And so we want to focus on this segment because the cost of manufacturing a garment versus what people buy it for, there's a huge gap in the market, and we're trying to bridge that gap. So there's already a very big total addressable market in the kind of segment that we are catering to. So we don't want to dilute our focus, because we can easily do 3,000 stores in the same model with the same ASP and the same target consumer. So we want to keep focusing on this in the near future.
What is the ASP currently, and where do you see it going, Mr. Agarwal?
The current ASP is around 300. So it should move according to inflation. So nothing significant. So it'll be a nominal growth.
Okay, so that plan continues. In terms of focus on private brands, I'm just trying to understand, with this pace of growth, how are you looking at protecting margins? Is there going to be a larger focus on private brands? What is the thought there?
So we already, private labels for us already contributes more than 90%. The plan is to take it up to 100%. So most of the products in our store are already private labels, but those are not for margins. Those are for better brand connect. Those are so that the consumer trusts the brand more. And we pass on all the benefits to the consumer, because our aim is to increase per square feet sales to increase profitability rather than increase gross margins.
What is the target for per square foot sales?
So the first target was 1,000, which we reached last financial year. The next target is 1,200 rupees per square feet per month.
When do you think you're getting there, looking at your Q1 numbers?
So if you look at our mature stores, we've already reached more than 1,100. But because newer stores take about 2 to 3 years to mature, and we opened 72 stores last year, that is why the overall company PSF number took a little bit of a hit. But I think we should reach the 1,200 mark in the next 2 to 3 years.
Okay. What about two factors? One, what about operational metrics? Do they stay constant or improve during the course of the year?
So there are three levers that we're working on. So one lever is the one that we just mentioned, is moving from 1,000 rupees per square feet sale to a 1,200. So that helps with the EBITDA margin. The second lever is, you're spreading out the head office and the warehousing cost to an even larger store footprint. So that also helps increase the EBITDA margin. And the third lever is a better product mix and selling more at full price. So that increases the gross margin by 100 basis points. So that is another lever to increase EBITDA.
Is there a target in mind? What do you move EBITDA margins to? I believe the pre-Ind AS EBITDA margin for FY25 was 8%, if I'm not wrong. Where do you take it to?
Yes, so last year it was 8%, and the target in the next 2 to 3 years is to take it up to 10%.
Okay, that is neat. One last question really from my end, and which is this. For any of your future expansion plans, would you need any equity dilution via QIP or a fundraise? Is there anything on the anvil wherein the promoter entities might do some chipping off their holdings to take advantage of the uptake, so on and so forth? Anything on the anvil with regards to that? Any equity dilution, that is?
So we have been discussing actually that because we've been getting such a good response in every geography, or the newer stores also performing very well. The base for the newer stores itself is around 750 rupees per square feet now. So we might increase the store opening guidance. And if we are valued well in the market, then we might go the QIP route in order to fund that and pay off our debts.
So what you're saying, Akash, effectively is that either for debt repayment or for higher store openings, if you do indeed take that decision, you might come in the market for a QIP to raise capital to put money in the business.
Yeah, what I'm trying to say is, if we continue with the performance and the momentum of the last 2 years, and we have another year like that, then we would do it.
Okay, but for utilizing the funds in the company, it's not a small chip off from the promoter entity at any fashion whatsoever because of the price rise, I presume.
So the nitty-gritties haven't been fixed yet. It's just a start of a discussion. But yeah, it'll be all the money coming into the company.
Got it.
One sense from you that I want to get, Mr. Agarwal, is what is the e-commerce plan and the integration right now? And if any color on that you can provide?
Yeah, so e-commerce, we are working on e-commerce, but it's not a priority for us. It's on the back burners because we've calculated the costs associated with it, and it doesn't make a lot of financial sense in terms of logistics, returns, and customer acquisition. So we are working on an omni-channel model, but we've not been able to find a technology partner who we think is who gives us 100% confidence as to being fully equipped to handle the complete customer experience. So we are still exploring. The one company that we were working with, we thought we were not prepared enough to launch it because we don't want to launch it half-heartedly. And that is why we're still exploring, but it's on the back burner. So probably in 1 or 2 quarters, we'll start with the region. But only when we're 100% sure that the technology behind it, supporting it, is 100% accurate.
Got it. Okay. I'll take back NBOF with me, but just finalizing this at the end of quarter 4 or end of FY25, you spoke about what, FY26-27 revenue growth of 40 to 50%. You sticking to that for now?
If you look at it, even with the shift of the Eid, we showed a 51% revenue growth. So I think we will beat those revenue guidance numbers that we spoke about.
Well, so 2 takeaways amongst many. Akash Agarwal, thank you so much for joining us and giving us your thoughts. All the best with the quarters ahead.
Thank you for having me.
This 3 numbers came out, Tamanna. This one smelled the best, and I think their commentary is looking pretty solid. Beat the guidance, stick to the EBITDA margin guidance, same-store sales growth numbers not looking too bad, and capital raise, if any, if they decide to increase the number of store openings.
Yeah, so the three numbers you're talking about, Style Bazaar, Avenue and V2 Retail, which have come overnight. Only thing with them is their valuations, and I think that's something that a lot of brokerages have been talking about, where it's an expensive star, nevertheless, but the numbers are keeping up, and that's what the street likes to see. All right, just want to pull up the Motilal Oswal stock. Their AUMs have crossed new threshold, 1.5 lakh crore rupees. That stock is buzzing this morning. Aster DM seeing a lot of action. Coromandel, because of that CCI nod, is buzzing as well. Just the advanced decline ratio as well has gotten a little better since the start of trade. So that's something to keep an eye on. But the next story that we're talking about is an important one, and it's an NDTV Profit exclusive. We're choosing to talk about it now because I think it's an impact for anyone who's trading, anyone who's in equity. The regulator, SEBI, is intensifying its crackdown on stock manipulation and tips being offered by unregistered finfluencers via WhatsApp and Telegram channels. This is something that all of us are exposed to, but be very, very careful because the regulator now has an eye on this. Charu is joining in with more details.
Hi, so quite an important investigation that the Market Regulator Securities and Exchange Board of India is conducting right now. We all know that social media is sort of a medium to connect to masses, but as per the investigations being conducted by the regulator, channels on Telegram and YouTube are being used to sort of dupe a lot of retail investors by luring them in on pretext of very high profits. Now, SEBI already has regulations in place against unregistered investment advisors, finfluencers as they call themselves, but the regulator has seen that this is something which is a volume issue. The number of channels and the number of investors who are interested in these channels, who join these channels, is so high that the regulators sometimes find it difficult to curb them. While the regulator is also in touch with these social media portals and companies, it is currently investigating these matters and also on its way to sort of come out with a final order in 4 to 5 cases, and is on its way to crack down on more such issues. So we are tracking the story very closely, and we'll let you know about more developments that follow up.
Okay, yes, very important, and you could argue much needed as well. So no surprise there whatsoever. Thanks, Charu, for getting us those updates. Okay, a sector which has been rock solid the last few days and weeks has been metals. Actually, if not weeks, at least the last few days. And even in today's session, Nifty Metal is up 0.6%. What would the reasons be? More importantly, what's the outlook for some of these names? Aditya Velekar, who's the senior research analyst metals at Axis Securities, joins us right now on the show. Aditya, good having you. Thank you so much for taking the time out. This is Neeraj here. Good morning. How do you view the strength in metals currently? What factors align to it? And is this sustainable?
Yeah, good morning, Neeraj. So thanks for having me on the show. So basically, the strength which we are seeing in the steel names, so if I want to put it succinctly, then in Q1 of this fiscal, we expect good set of numbers from the steel names. So there might be some margin improvement. This is because of the safeguard duty is kind of supporting the HRC prices, and then your coking coal prices are also down. So that will lead to some margin expansion, which will flow into the numbers in Q1. And that is why the valuation gap which was there, that is kind of bridging out. So that's why we have seen the rally. Then there are a number of macroeconomic and sector specific news. So one important news is that there are some indications that the Chinese authorities will curb on the steel production in China to an extent of almost 2% for calendar year 26. So that is kind of supportive, and we have seen in the first 4 months that Chinese steel production is down by 1.6%. Usually I don't take these news flow coming out from China very seriously, but this time around the geopolitical situation looks slightly difficult for China, because the kind of exports which China is putting out in the rest of the world, which is almost 10 million tons per month, it looks unsustainable. Because the reason for that, there is, as you know, there is tariff impact from US. Then there are anti-dumping duties and trade restrictions coming from many countries like Vietnam, like South Korea. India has also now a safeguard duty. So it will be difficult for China to continue with that kind of momentum of the steel exports which they are currently doing. So the option is for them is to cut the steel production, and that will somehow protect the steel the decline in the steel HRC prices. So I will halt here, and so that's the outlook on steel.
So, okay, so let's wrap up steel first. Do you reckon, therefore, that if that is your base case view, and therefore if these come up, then would there be an impact on steel prices? Because Aditya, I thought that yes, global prices would have an impact, but Indian steel prices are probably insulated largely from what's happening around the world, and therefore would the steel companies' numbers be largely independent of what's happening in China, or do you think that the prices will come off?
So now if you see there is the safeguard duty will go on for 200 days. So the government will have to take the decision whether to further extend the safeguard duty post November, when the safeguard duty means the provisional safeguard duty stops. Then they will have to take a decision. So that decision will be dependent on how the Chinese HRC prices move. Currently the prices are going down. Because the reason we all know that the excess production China is doing. So as if China acts on what they are saying, and for each month they cut their production, then there might be some stability to HRC prices, and we can continue with the same safeguard duty, or the government may decide on future. That will be a speculative from my part, but overall, if the Chinese authorities go ahead and they cut the production, which what they are saying, then the steel prices may find some support. And also one factor is that coking coal prices are trading at a lower level of $180 to $190 per ton, which is kind of keeping the spreads maintained for the steel players. But the kind of valuation gap which has emerged, which is now getting breached, as I said, for Q1 numbers. So post that, on the base of Q1, the further rally for the steel stocks will totally depend upon the HRC prices rising from these levels, and the stock specific triggers, like a specific company may have some specific triggers like expansion picking up or anything like that. So as far as the stock trajectory is concerned, we are seeing the valuation gap getting breached. The valuation are now getting to their one standard deviation above. They are now trading above that one standard deviation above their long-term average. And post further rally from these levels definitely depends upon uptick for steel prices globally, and that is very difficult to predict as of now.
Sure. Okay. So Aditya, what is your pecking order? Steel, also include the non-ferrous ones. And when you give your pecking order, also tell us if you have coverage on Vedanta, because that's the stock in news, right? That the dates have been going ahead, but the bulls on the stock argue, I don't know if you have coverage there or not, but I'm just putting it out nevertheless, that the bulls on the stock argue that independent of what happens in the interim, if there is this whole value unlocking that is to happen, then Vedanta becomes a good stock to invest in, to play tactically, that is. So your pecking order and a view on Vedanta.
Yeah, sure. So in steel names, definitely Tata Steel still have some value even from these levels. SAIL, we see that the valuation is now almost full. We see value in Jindal Steel and Power. JSW Steel, the valuation also appears slightly full. So in the pecking order, Tata Steel followed by Jindal Steel and Power. In non-ferrous, aluminium prices and copper prices, as well as zinc prices, they have withstood very well within this volatile tariff escalation phase. And aluminium prices, on the contrary, have increased. So also as copper prices. This is because of the fall in the inventories at London Metal Exchange, which are driven by several reasons. So one of the reason is that many of these metal stocks, they are moving to US to fill up the arbitrage which is arising because of the tariffs in US. China is also consuming a lot of Russian metal, so the Russian metal is not flowing to London Metal Exchange. So because of these reasons, the inventory at the London Metal Exchange has come down, and that has supported all these non-ferrous metals. So that is number one. Now coming to Vedanta, Vedanta is beneficiary of aluminium LME prices. It is beneficiary of the strength in silver prices because it has a Hindustan zinc in it. And then oil prices have rose to some extent, in last few sessions, but they have now cooled down, but it will also help Vedanta. So, and demerger is definitely one trigger which Vedanta will have. The next hearing, I guess, is on 20th of August. So that is one key point which we have to see. But the stock may consolidate at these levels, but definitely the stock has a good fundamentals. There are the triggers of demerger. Then they are expanding their aluminium downstream as well as upstream business. So they will be their backward integration for aluminium smelters. For alumina, they currently they are only 40% integrated, but that will increase once their Sijimali mine and bauxite mine comes up, and their Gograpalli coal mine. So all these backward integration projects, and then their power unit at Vedanta, this will help Vedanta. So I don't see any reason for us to panic with these near-term volatile news. And investors who are long in Vedanta, they can stay long in Vedanta. So that is our view.
Got it. Aditya, great talking to you today. Thank you so much for giving us the lowdown on what is arguably one of the hottest sectors right now in such a volatile environment. Really appreciate your time.
Thank you. Thanks, Neeraj.
That's the view from Axis Securities. Constructive on Vedanta, on steel per se, has a pecking order, but believes that maybe, just maybe, not too much out there. So bear that in mind. Okay, on to more news. HSBC's come out with a note on the residential market. Overall residential demand is declining, but remains strong for the large and the premium apartments. I believe Anushi should be joining us any moment to try and talk about that. Or what we'll do is we'll try and take a break and we'll come back and talk about this. Let's slip into a break. This is effectively what HSBC is saying with regards to the residential market. And the key expectations for FY26, they expect strong pre-sales growth post a muted FY25, and growth will be led by large launches. They expect 50% pre-sales growth across the coverage universe.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company.
powered by NDTV Profit Research, shines a light on the biggest
All right, we're looking at the fresh listing this morning. All eyes on Indo-Gulf Crop Sciences. After the issue was subscribed almost 28 times, first listing rates will be on in just a couple of minutes. There, 3 minutes to go. Varsha is joining in with details of what this company does and why there's been so much excitement about its IPO.
Yeah, thank you so much for that. But you know, the discovered price has been set at 111 rupees, which is same as the issue price. Well, the total issue size stands at around 200 crore. Now, the issue was subscribed 26 times in total, out of which retail category subscribed 15 times, QIB category subscribed 33 times, and non-institutional investors subscribed almost 48 times. Now, overall, this company is into agrochemical space, and they have diversified product portfolio. And also they have established distribution network in India and abroad. They have backward integrated manufacturing facilities, which has helped to maintain the margins, and they have got strong R&D and product development capabilities. Considering the growing Indian agrochemical market, they've got huge opportunities. China plus one strategy is also one of the opportunities that the company has, and they're also expanding into new geographies and product segments. While on the weakness, company has a high supplier concentration risk and the capital intensive operations, and also they are vulnerable when it comes to raw material price volatility. Intense competition, regulatory changes, and pest resistance are some of the threats that the company is facing. But on the financial sides, if you see, company has on the revenue side, company was facing some of the financial difficulties because of the agrochemical market or because of the chemical pressure, the industry pressure that the company has been seeing. On the valuation side, though, on the higher upper band size, if you see your basis FY26, the PE stands at around 20 times, which is equal to some of these listed companies of agrochemicals. So overall, because of the backward integration programs and also penetration into new geographies is one of the are some of the reasons why investors are bullish on this company.
Okay, 30 seconds to go for those rates to hit. I was quite taken aback to see that the discovered price was exactly what the issue price was on an issue that was oversubscribed 28 times. But anyway, those updates will be on your screen in just about 18 seconds.
16 seconds to go.
All right.
You all will have to do the countdown along
with
me.
So let that continue. Let that continue while we get on with our conversation.
7, 6, 5, 4, 3, 2, 1.
Okay, all right. So okay, that's the new kid on the block, and we will see those rates settling in as they do. And wow, I mean, this was quite unexpected. This was one that was completely misread by the seats. 28 times oversubscribed.
Yeah, 80 times oversubscribed.
80 times over. Where did all those people go who didn't get the subscription? They were thanking their lucky stars, I think, looking at this right now. Anyway, Sridhar Sivaram in the studios with us. Sridhar, we love it when you come by.
Yeah, it's good to be on the studios. Thanks for inviting me.
Yeah, so you're seeing all of this, since we've just talked about it, I'm going to start with that. All of this buzz in the primary market, and yes, you win some, you lose some. But are you seeing it from a distance, wondering why all the craze, or are you now in the thick of it and looking at picking winners?
No, so we are very selective on the primary market. Even on the block deals, we are very selective. So wherever we think it makes sense. So of the hundreds of IPOs that are coming, few are very good. So we do participate.
Of the hundreds, few are good.
Yeah.
So the hit rate is what? The lower single digit?
But you can see from the listing that the listing gains in most cases are very muted as compared to the oversubscription. So we've seen in the past. So we've seen 2007-8 when we had the IPO boom. Much before when I started in the 94s, 95, we had this IPO boom. where people used to, participate in every IPO thinking it's gold mine. I think investors will evolve. I mean, we are newer investors coming into the market, and this is the learning curve for them that all that glitters is not gold.
I think it's important for us to maybe save them some pain from what you're seeing. Because a lot of investors watching this show right now, Sridhar, and many of them new investors, because that's who we also want to talk to here on NDTV Profit. What would be your advice to them when they're looking at all of these IPOs coming up at a time when there is an excess of information?
Yeah, so I think the simple advice is to, follow the mutual fund route, because obviously the fund manager is an expert. I'm not part of the industry, but I'm still recommending that is the best way for a industry, for a new investor to participate in this equity market boom that we are seeing. We think the markets will give very reasonable returns over the medium to long term, but in between there could be volatility. So unless you're an expert in that subject or in that sector, I won't advise investors to directly participate in the market, but it is left to individual investors to take their own call.
Most certainly. Sridhar, what's your sense though? There has been a bit of a pickup, and that was the first point in our case for a chat for your convo.
Sure.
There's been a bit of a reasonable pickup from the 22,000 levels in a swift fashion, as these days all these bottoms are made as well. Have we done enough to justify what might be a iffy earnings year, or do you reckon you're constructive on earnings and therefore there is more upside for the markets?
So the context is that globally all markets have rallied since early April. So if you see, that was the bottom. US is hitting all-time highs. But if you take the two best performing markets over the last 5 years, which is US and India, they've actually underperformed all the other markets. So Europe year to date is up 30, 20, 25%. Asia, if you see, people haven't noticed, but Korea is already up 40% year to date. Taiwan is up 15 odd percent. China is up about 15 to 18%, whichever index you look at. India is up maybe 6, 7% or 8%. So from that standpoint, India has participated along with global markets. As you said, our earnings haven't been that great. I don't see that changing in the next 2 quarters. Our view is that the second half, when earnings starts to improve. So this is a consolidation phase. We are participating with global markets. My worry will be more, the global macro, which looks iffy. India looks reasonably fine to have a sideways market for a while, and as earnings pick up from the second half, maybe we can continue with the rally. That's the broad sense I have.
Okay, and we are going to talk about your domestic views on inflation, insurance, etc. But since you look at the globe with such a great eye, just a word on what kind of an impact do you think this trade deals, lack of them, China data, as believable as it may or may not be, what does all of this mean for risk assets like or equities in India?
So my broad view on reciprocal tariff is actually in favor of Trump. If it was implemented in the way it was designed, that if we are charging you X%, then US will also charge. If we make it 0, they'll also make it 0. If that was the broad idea of reciprocal tariff, I completely support that. India was happy to reduce. Let's be fair, India's tariffs for a lot of products were abnormally high, be it on two-wheelers. I mean, he keeps talking about Harley Davidson. How many people use Harley Davidson? And to have a 70% tariff on that. So there are many more like that. The high-end drugs had almost 100% tariff. So if we were to reduce those tariffs to 0 or whatever low point we could get to, US would also reciprocate, which just seems to be a fair number. But as the negotiations are going on with other countries, the Vietnam numbers have come out, it looks like tariffs is a way to generate revenue for US. Then it becomes complicated. So I'm not very sure where it leads to. I'm not sure how much India will sign, more than India, whether China will agree or not. And those are the complicated issues. So if you ask me, I'm most worried about the US macro than any other country, because whatever this discussion on this beautiful bill or big beautiful bill that they call about, it doesn't bring about change in the fiscal deficit of US. Experts believe that that could touch almost 7%. So I would be looking at the bond yields very closely. If it comes closer to 5%, there could be serious risk of in global markets. I know some experts in India believe that India is decoupled. I'm not in that camp at all. If there is a global turmoil, India will face the heat. So that's the worry that, if you ask me, my biggest worry would be how this whole thing plays out. And one has to keep a close watch on what's happening with the US macro, fiscal deficit, bond yields, DXY. These are the ones to watch more than anything else right now.
We talk about the big, beautiful bill in the context of addition to the US fiscal deficit and DXY and bond yields, but for people living there, it's having a huge impact. And just an aside, I was talking to someone who told me about how medical care for special needs children have been slashed. And that is something that parents are actually looking on an everyday basis. So, of course, here we look at that story only from that context. But having said that, if there is an impact on the US economy, what does it mean? And you said you don't believe that we're de-linked. What does it mean for IT, pharma, auto? Are we being a little blinkered in actually looking at the whole range of that impact?
Yeah, so I think there will surely be an impact, but just keep in mind that India's overall exports to the US is about $80 billion. So in the overall context, we are not as big as, say, a China or a Mexico. Obviously, the Mexico numbers, you have to look with a pinch of salt because a lot of it is the Chinese stuff which goes through Mexico. They're closer to $400 odd billion a year. So from that standpoint, our impact should be significantly lesser, but it still will have an impact. And IT sectors, I think, has its own challenges. I think there are too many issues. One, if the discretionary spending in the US comes down, they get affected. Two, my own belief has been for the last 2 years, and it corroborates with the hiring data, that AI does improve productivity of IT professionals, especially at the lower end who do coding. And 30% of India's IT professionals are at the 1 to 3 year bracket of experience. Basically, they're doing low-end coding. Those jobs are significantly getting reduced because AI is helping them to do the job. So I think there's a structural issue with AI and Indian IT sector. There is an opportunity which comes up, but it comes with a lag, which is you have the threat first and the opportunity comes later. And I think companies which are able to reinvent themselves, disrupt themselves, will be the winners. Time will tell who are the ones. But so that's the problem with the IT sector. So I agree, even on the pharma side, there will be some impact, but we are on the generic side. So I don't see that having too much of an impact. Even if there is a tariff on that, the end customer there will have to pay.
What about auto components?
Auto components will also, but see, the overall number is only 80 billion.
Yeah.
So how much?
We're not Vietnam, who is,
so we are not that dependent. So I won't be so worried about what happens to individual sector. Yeah, there'll be some companies who have a larger exposure to the US, they'll get affected. Maybe they'll put up a plant in the US or whatever. But keep in mind that this administration is there for 4 years. We don't have visibility for what happens after 4 years when the next administration comes and whether these policies will continue. So if you look at what, say, the Apple CEO says, that even if he wants, he cannot shift all the people from plants from China to US because there aren't enough engineers available in the US to do some of these jobs, or even the people at the floor level to do the job. So I think it's a bit more complicated, but as I said, I remain worried on the US more than any other market, and that's what one should focus on.
Sridhar, just a word though, and then we'll move to India as well, I'm sure, but just a word on this news story that has come up, right, wherein Foxconn has asked a bunch of its workers who are working in India to move back to China. I mean, what is this? Is this geopolitics? Is this something else?
No, it is geopolitics because, as I said, if China's annual exports to the US is, say, 450 billion, add another 200 from Mexico, add maybe 100 odd from Vietnam, you're talking of, $700-800 billion of exports a year. And all these get affected with the tariff. So this is the arm twisting that China is trying to do. Rare earth is the other one that they're trying to arm twist. As the D-Day is coming, they're trying to show who the boss is. But to be fair, their manufacturing is at such a scale and they have reached such heights. it's very difficult to believe that the world can live without manufacturing happening in China. So it's I think very interesting times ahead. It is not going to be easy for India to suddenly ensure or to hope that a lot of manufacturing will shift. Some will definitely shift, but there'll be a lot of challenges, roadblocks on the way.
Okay, and then so let's talk about domestic factors now, right? And one place where I see you constructive, if you will, is on inflation.
Yes.
You are really bearish inflation.
Yes. So I was among the few who said that we'll get a 50 basis points rate cut. But my view was based on a lower inflation trajectory. What I was surprised was the governor did oblige with the 50 basis points, but they did not reduce the inflation. So my view is that Q2 and Q3, we'll get inflation in the range of say 2.5 to 2.75, whereas RBI is at 3.4 and 3.8, I think, or 3.9. They look totally out of sync. And I've spoken to many economists, and some agree with my number, and they have roughly my number, but they are reluctant to put it out in the public domain because it looks so.
We are putting out your numbers in the public domain.
I'm sticking to my number.
What is the why?
I'm very much sticking to my number.
What is the reasoning? What is the
one? We have a base
rationale?
Effect.
Okay.
So there is a very favorable base effect that we have, and a distributed rainfall that we have seen this year. That we've had rains through April, May, and now in June. What is happening is that the vegetable prices have behaved very rationally, as opposed to in the past where vegetable prices used to, spike a lot. So there are multiple factors in this, but the numbers, we have our own model, but it's a very simple model we use. We just don't reach anywhere close to where the RBI number is. So you can hold me to this in a few months. We'll get some of these numbers. And I mean, it's difficult.
Let's come back on the next monetary policy day.
No, policy day I'll not come, but maybe I'll come on another day. But just keep in mind that projecting inflation is one of the most difficult tasks.
Yeah.
Yet I'm putting my neck out on this. With those caveats, that it isn't an easy task to project inflation, especially when you're projecting for 6 months, 9 months ahead.
What is the resultant interest rate cut you see?
Yeah.
By the way, if we had an ongoing bet on the on the interest rate cuts, and I was in the 50 basis point camp as well. But what is the projection on interest rate cuts you have?
So I think we need some support from Fed because the differential between India and the US is the lowest that I have seen in the 20 years or 25 years. I don't remember when it was so low. If we get support from the Fed, we could easily go another 25-50 basis points. Keep in mind that CRR is something that most people had not expected.
Yeah.
So we did get a bonanza from the CRR standpoint. So if I was expecting a higher rate cut, I need to moderate that because some part has come through the CRR route. So I would expect that maybe not the next policy, but the policy after that, maybe August or September, whenever the policy after that is, we could see a 25 basis points, because I've seen some of the interviews of the governor, and he said that they are data dependent now. So if the data is supportive, they can look at interest rates because they are neutral, so they could go either way based on data. But I think the data is going to be very supportive. Time will tell. We'll see how this goes. We'll get a number very soon for the month of June. So that itself will give us some hints on where we go.
You run with NBFCs, therefore, as a result of this, this RBI in the last 6 months has done what people do in probably 2-3 years, right?
Yeah, so NBFCs stand to benefit. Keep in mind that NBFCs in general have been pulling back because, of the irrational exuberance, the way they lent on the unsecured side. Even though the RBI governor, to be fair, was highlighting that there is a risk on this, NBFCs were, sort of maverickly lending on this segment. They have pulled back a bit. So maybe the next 2 quarters may not be that great for them. But if you look beyond that, things look slightly better. I think market's already pricing that. A lot of NBFCs have moved up. But banks have also moved up.
But Sridhar, that's my follow-up to you, right? I remember back in maybe 2020 or thereabouts, right? You guys took a call on PSU banks when nobody was looking at them. And one of the arguments was that they are trading at such low valuations that they could do well. So now, if somebody is looking at NBFCs afresh, there are premium NBFCs trading at 5 times, 4 times. The listing is about 4 times as well. And then there are some which are trading at book or even sub-book as well. Do you play for the valuation catch-up or do you buy great execution and good valuation?
So in NBFC, we have to be careful that you're looking for a company which has a credit discipline. So this is not just about valuation. Because if you're just playing the valuation, you could get cleaned up if the credit discipline is poor, which is what we discussed MFI in the past. They were looking cheap, but they've got cleaned up in the last 6 months because the credit discipline was very poor. So I think it is a bit more nuanced. It's not like buy any NBFC. It's a bit nuanced, individual NBFCs. But we like even the banks. We know that the next 2 quarters may not be that great, but the governor has given some bonanza in terms of CRR cut, so that helps them in terms of the earnings pickup. So even the banks, if you're willing to ignore the next 2 quarters, and we are hopeful that credit will pick up in the second half. So that's how we are looking at it. So we are okay with private banks, some few PSU banks. Financials in general look fine.
How did you feel about the whole defense story? Were you on the right side of that?
No, we were in the right story. We played the defense story for a while, including some of the PSUs, which also came from a PSU call actually.
Okay, so it was part of a larger.
Yeah, it was a part of a larger trade on PSU. Some of them played very well. To be fair, did we participate in the entire leg? No. I mean, some of them looked expensive even a year back. So. We moved out from some of our positions. We still have some positions in defense. Some look very expensive now, to be fair.
Yeah. What are you finding exciting right now with pockets of opportunity? And that's become a tougher and tougher question to answer, admittedly, because you've had valuations run up. You now will have this trade deal as the next immediate boost, if nothing else. Where do you see that growth coming from?
So it's, as you rightly said, valuations are not on your side. So we like power equipment as a theme, but their valuations are not on your side. So the best way is to participate in some of these themes when you get corrections, results are not good. Because this looks like a theme which can play out for the next 4-5 years. Because India is going to maybe possibly double its solar, double its wind in the next 3-5 years. We're going to add maybe 20-30% to even our thermal capacity. So you need transmission, you need the turbine manufacturers, you need evacuation. So the entire value chain should do well. So it's individual stocks you'll have to assess. We like wind as a story more than solar. So a lot of those, there are pockets to play, but it's very stock specific. That's how I would put it.
Interesting. Well, we'll do a tiger chat with him as well. But just before that, one thing, and it's gone so right because everybody's been so constructive on insurance. And producers, if you can pull up the 5-year chart on any life insurance firm, right? So pull up HDFC Life, pull up SBI Life, pull up ICICI Pru Life, if you will, and pull up a 5-year chart, and you will see, unless I'm very wrong, these guys have largely flatlined, right? This is not the return that you expect from large companies which are in a growth sector. And Sridhar, full credit to you because save for 1 or 2, these stocks have not given returns, right?
Yeah,
what is your view now?
I mean, my view hasn't changed.
Are you still negative on?
I remain bearish on insurance for simple reason. They're very opaque industry. Nothing that they disclose are actual numbers. Everything is estimate. So. Embedded value is an estimate. Their profits are an estimate. They are not actual profits because they have assumptions on their expenses. So nothing is real. What is real is the number of lives covered. What is real is mortality claims paid, which they don't highlight at all. You have to literally search for them in the web pages, and both look horrendous. The number of lives covered for the top 4 life insurance companies last year fell by 30%. I still don't have an exact answer why they have fallen so much. These are not normal numbers. You don't suddenly reduce 5 crore people have lost their life insurance cover. Why? I mean, this should be discussed, debated, like microfinance is well discussed, debated. Everybody knows why it has happened. Why life insurance cover has gone down by 30%. 5 crore is not a small number.
Yeah.
5 crore families out of a 30 crore or 35 crore families is a fairly significant number. Their mortality claims are very high. Why? So these are things that the life insurance companies nor do the analysts check all this. So they just go by a global or a macro story that India is underpenetrated, which again I contest. India is one of the most overpenetrated life insurance.
Really?
Yeah, so we can have an entire show on that, but
no, but the cliff notes on it, because this is very interesting.
It is, because you have to compare life insurance penetration with per capita. Why is it that when life insurance penetration is discussed, we don't look at the China numbers at all? Because we are over-penetrated more than China. We have 2 life insurance policy per family in India, if you take the average. So I can go on. It's an over-penetrated industry. We don't sell protection. That is the problem. We are selling savings. So this is the point. When I challenge life insurance companies, they say our protection is under-penetrated. I agree, protection is under-penetrated, but you're not selling protection.
You're selling
Every guy who comes to you, tell me when a life insurance agent or a bank has come to you for protection. They would come and say, ma'am, ye kharid lo, ma'am, ye
you have
ULIP le
to
lo.
wrestle with them to say, I want a plain term plan.
So that's the issue. So I think I don't want to, get into this discussion more, but I still remain bearish on the industry as a whole. They still have a lot of regulatory arbitrage, which I'm not even discussing, which may go over a period of time.
Guys,
so let's leave it at that.
I was shocked that there is yet another NFO from a life insurance company announced yesterday or day before. It's a life insurance firm. How can you announce a new fund offer on the mutual fund route? Let it be a different category, but be that as it may. Okay, very quickly, Sridhar. What's the latest? Sridhar Shivram touts Indian tourism by virtue of going to Tiger Parks. What is the latest really good park, undiscovered gem?
The best park this season by far has been Umred Karandla in Maharashtra. I mean, it has been the blockbuster because of a single tigress. I should have shared. Oh, that is the photograph from Umred Karandla.
Yeah, we picked it up from your
so
Instagram.
So there is a mother with 5 cubs there, and that park has been the standout this year. I don't think anybody has gone back disappointed, and it's a very small park. And whoever has gone there has had blockbuster sightings. I think it can continue even for the next season.
Amazing. Yeah, easier to spot tigers than winners in the market.
I think yes.
and believe me, that's a tough one. Beautiful pictures. Thank you, Sridhar. We've picked it up from your own feed, so courtesy to you there completely. Sridhar Shivram, always a pleasure to have you.
Thanks for calling
on Conversation. Yeah. So that's the deal. Spotting winners is as tough maybe as spotting tigers. Just a quick update on the story that we're tracking as well. The sale of the iconic IL&FS headquarters in Mumbai's Bandra Kurla complex has run into trouble. In a surprise move, IL&FS has approached the National Company Law Tribunal, that's the NCLT, to scrap the 1,080 crore rupee bid from Brookfield, the Canadian asset manager. Agni joins us to tell us more.
We are here in Mumbai's BKC, and behind me what you see is the IL&FS headquarters. Now remember, this building was supposed to be handed over to Brookfield in a 1,080 crore deal, and now IL&FS has moved NCLT seeking to remove Brookfield as a successful bidder. Now the bid required Brookfield to maintain performance guarantees till a definitive agreement was closed. The performance guarantees would have been in term of demand drafts of somewhere around 108 crore rupees, which Brookfield was supposed to mandatorily renew 15 days prior to the date of expiry of the previous demand draft. Now Brookfield has been doing this for some time, but as of April they have failed to renew the performance guarantee. Now IL&FS has sought to remove Brookfield as a successful bidder for this headquarters in Mumbai's BKC. Remember, BKC is a premium business district in Mumbai and houses prominent offices of domestic and multinational companies. Now the case is going on in NCLT, and NCLT has said that as of now no third party rights can be created on this building that you see behind me, which means no one can come in and lease a property, no rentals, no income anyway as such, and the property continues to remain vacant. Now we have reached out to Brookfield. They have said they don't want to comment on it as the matter is still sub judice, but do stay tuned as we bring you more updates.
Okay, important story. Thanks, Agni, for bringing that. As we wrap up India Market Open, keep in mind that the markets are not doing too bad. Nifty IT is leading the way, but the Nifty too is off the starting levels and currently about 0.3, 0.4% higher, 0.43 in fact for the Nifty 50. So that's really good. Small caps behaving, mid caps behaving, volatility marginally lower or flat if you will. So fair degree of winners, not enough losers. Nika is down, VST is down, Avenue Supermarts is down, but those are few and far in between. You actually have a more set of winners than losers, so it's not turning out to be a bad Thursday, I must say.
A good move up from capital market stocks as well. If we just have to highlight for you some that are buzzing. We talked about a Motilal Oswal earlier, look at a Nuvama, a few of them. Those are the ones which are showing some action, BSE as well. Motilal Oswal now about 5.5% up. So those are some of the buzzers. But that's a wrap from us on India Market Open. Thank you so much for tuning in. But stay tuned. Your queries up next on Ask Profit.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make in our categories that we have been supplying to our defense forces some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world.
Hi, thanks so much for joining in. You're watching Ask Profit on NDTV Profit. My name is Alex Matthew. With me is Mahima Vajrajani, and we'll take you through the next 1 hour of trade. By the way, this show gets you answers to all of your stock-related questions, so you can call us on the landline number at the bottom of your screen, or you can message us on the number on the top of the screen. Before we get into where the markets are, I do want to have a conversation with Mahima about 3 stocks that are in focus today. One of which is Avenue Supermarts. V2 Retail is the second one, and Bazaar Style is the third one. All stocks that she tracks very closely. And by the way, V2 Retail has given up quite a bit of the gains at the start.
Yeah.
All this on the back of business updates. Why are they in focus, Mahima?
Right, so I'll start with V2 Retail. For sure, a strong quarter business update in terms of revenue growth as per what they guided. Store guidance also maintained very well. The same-store sales growth stood at around 5%. At normalized rate, it was at 10%. Majorly, it was impacted because Eid was shifted to the Q4 numbers, and sales per square feet stood at around 957 rupees and added 28 stores this quarter. Now, management has said that they're focusing on tier 2, tier 3 cities, entering into FY26 with strong tailwinds. Plus, when the management spoke to NDTV Profit, they also said that they might go ahead and raise funds if required and might increase their store guidance as well if the valuations are correct. So that was an interesting takeaway. And when asked that they've already done 51% this quarter, their guided range was 45 to 50% revenue. They said that they will beat the guidance of 45 to 50%. So the two takeaways from that conversation was
we had a disagreement about bazaar style.
Right.
Okay, by the way, the reason being is because Mahima focused on the same store sales growth, or rather degrowth, you should call it, because it declined 3%. They added 22 stores during the quarter and their revenue went up by as much as 38%. And I thought that the seasonality factor explained this, but then evidently the street is taking what you focused on into focus.
The same-store sales growth and plus the margin picture, what JM Financial mentioned in their report, saying that they might see margin contraction on the back of this. But shifting focus to the primary markets, of course, not primary anymore. The stock just got listed. If you can pull up that Indogulf and see what the stock is doing, it's flat in trade as we speak, Indogulf Crop Sciences. But we're joined by the management, Sanjay Agrawal, Managing Director of Indogulf Crop Sciences, and Manoj Gupta, CFO of the company, joining us now. Welcome to both of you, gentlemen, and heartiest congratulations on the listing. Just wanted to get a overall sense as to, now that your company is listed, what's the way ahead? What are the plans to grow the company? I'll take this up with you, Sanjay.
Yeah, good morning, friend. Yeah, good morning. So, today we are quite excited, and thanks to all the investors who have shown trust in Indogulf. We are into food security, crop protection, nutrients and biologicals. A lot of things we have planned in the coming next 2-3 years especially, and biologicals and nutrients is the key focus area, and the brand expansion will be the most potential area which we are looking forward for our growth.
Okay, so that's with regards to the plans going ahead. I just want to also understand that Indogulf has a broad product portfolio and a significant distribution network as well. Overall, just want to get a sense, Sanjay, as to what the detailed strategy is in terms of gaining market share, plus in terms of key product segments, that is your crop protection, nutrients, biologicals, etc., both domestically as well as internationally. Wanted to get a sense as to what's the plan that you've laid out for the next 3 to 5 odd years, the specific new products and geographies that you'll be prioritizing in terms of growth going ahead.
Yeah, so new products had been a trajectory of Indogulf, and every year we keep launching 10 to 12 new products. So we are into 3 segments: crop protection, biologicals and nutrients. In all these 3 segments we add new products every year, and that the same plan we have for this year as well, the coming year and the coming years. So we have few patent products also in the pipeline. Maybe FY26, FY27, we will be adding them to our product basket. With respect to geographies, we are pan-India and we are working on 34 countries. In future, we have strong plans for Vietnam, for Ecuador, also for Mexico, and we are looking forward for expanding in the domestic market. We have recently added one more company with the name of Abhiprakash Global. Globus Private Limited, which is a marketing company and it is a wholly subsidiary of Indogulf Crop Sciences. It's a strategic decision to increase the reach amongst the Indian geographies with a separate team, with a separate brand and a separate channel partners.
Okay. Manoj, I'm coming to you on this next one. I'm just trying to get a sense. Of course, the fresh issue amount is 160 crore rupees. I see that 34 crore rupees of that will be utilized for paying of outstanding borrowings and capital expenditure of 14 crore rupees. I'm just trying to understand what the utilization for capital expenditure will be. Will that be done in this financial year itself? And also, where does that debt position go to by the end of the year? Will you have to, so how are you going to fund that capex beyond this?
Good morning, friend. Actually, this, as you told, that capex we are doing for one DF plant we are putting, that is around 14 crores. And debt is definitely it will come down as we are already paying 34 crores, and we are another money is coming from our reserves and profits. So we are bringing this to which is at the December end it was 206, and now it will be lending around 130 to 140 crores. We have the good plans in the coming year, and as you asked that for the period, we are expecting that till December this plant will be ready, and we will be completing this plant and it will be operational.
Sanjay ji, also based on the space that you operate in, and this is just trying to get a sense of how this financial year will be, the initial sense is that the distribution of the rainfall so far in the monsoon season has been good, and so if that continues to be the case, one would assume that Rabi, sowing is going to be good as well, or rather Rabi harvest will be good. You have the Kharif sowing also that is good. So from that perspective, what is the outlook on the revenue going forward?
So overall, the monsoons are quite promising. There were some challenges in inventory, but this year looks to be quite optimistic about the demand also. And definitely the revenues we have already, we cannot give any figures, but yes, they will be quite high, and we are aligned. The quarter one results will be coming in month of August, and they will reflect our performance, and we are going aligned with what we have planned. It will be a great year.
Right, on that note, thank you so much for joining us this morning, and wish you all the best. All right, let's take you through.
Thank you.
Let's take you through what's happening with the rest of the market. By the way, you have gains of about 0.4% for the benchmark Nifty 50, trading above 25,500 and comfortably so. It's let's see where the contribution is coming from very quickly. HDFC Bank, which was a laggard in trade yesterday and one of the biggest contributors on the downside, is up and about in trade today. Infi, as well as the IT pack as a whole, is doing reasonably well, gaining about 0.5%. Remember, yesterday it was one of the top gainers at one point, and then it lost out all of that ground. It's holding for now. As we head into this program, let me introduce to the experts today. We've got Neerav Ashar, who's the head of research at Latin Manhalal, as well as Kush Bora, founder of kushbora.com. Kush, at the start, let me ask you very quickly what your strategy is today. It's weekly expiry day, the first of quite a few this month. What is the strategy that you're employing today?
Hi, Alex. Good morning. Hi, Neerav. We initiated a buy call on the Nifty, from the expiry perspective today. The target's been hit. We just closed that out. So now it's a wait and watch, because 25,500 put has seen a massive addition. But on the same, flip side, you've seen 25,600 call also add up. Bias remains positive. Yesterday in the closing show as well, I mentioned that even though the markets were down, the VIX didn't really spike up as much, and PCR was already close to oversold territories. So buy, on dips remains the favored theme, and that continues. For today, I think we could go ahead and test 25,600, but the upside will be capped basis the expiry. But other than that, I think we are looking at 25,750, 25,900 as the targets for the coming weeks.
Okay, so that's with regards to where the Nifty 50 stands. Let's take our first question. Sanyam Babbar is writing in and wants to know about Hindustan Construction. He's bought 9,000 odd shares at 55.23 a piece, so at elevated levels for sure. The stock is currently trading at 30 rupees and wants to know as to what he should do with this holding. Nirav, hi, a very good morning to you. I'll come to you on this one. What should Sanyam do?
Well, good morning and thank you for the invite. I think Hindustan Construction fundamentally, Hindustan Construction Company, as far as the fundamentals go, I think as far as the execution is concerned, they've got a good track record of execution. They have been working on some very complex projects and successfully delivered them. And they have expertise in civil construction, of course, and in nuclear power plants and hydro power plants, etc. But I think it will require a lot of patience on behalf of the investor. I think it's better to switch to some other better quality infrastructure names.
So just a few of those, Nirav?
I think he could opt for an L&T or an Afcons or something on those lines.
Afcons at this stage is a better pick than HCC. All right, let's go to our first caller of the day. We've got Varshini calling us from Andhra Pradesh. Varshini, very good morning to you. How can we help you today?
Very good morning. Yes, regarding Birlasoft.
Okay.
So I have bought 1,200 shares at 442 price for short term. So shall I retain or sell? What is the status of Birla?
Yeah. When did you buy the stock?
Just a few days back, 1 week back.
Okay. And when you bought it, what was the time frame that you had in mind?
Oh, so for 1 month.
Just for 1 month. Okay. Any potential upside that you had in mind? Maybe 5% or 7% or something?
Just 5 to 10%.
5 to 10%. Okay. Yes. So that's a very clear question. Then Kush, the question is for you. 442, which is pretty much where the stock is currently. What's the view on Birlasoft?
I think this is a good, entry point and a good stock that she's chosen because while the large caps are consolidating, the small and the mid cap, IT stocks are doing well. Birlasoft is third on my pecking order after Coforge and Persistent. She could continue to hold this one. I'll give a stop loss close to the 425 mark. That's a good support zone. On the weekly setup, if you see for the 5 weeks, including this one, the stocks had a positive close and the volumes have also picked up. I think there's a fair bit of upside to be had on the stock. So 460 and then about 480 are your targets on the upside. And 425 is where you keep the stop loss. Continue to hold Birlasoft for a second target of 480.
Okay. Continue to hold Birlasoft with respect to where charts are concerned. All right. Our next question is from Vaishnavi, who's writing in from Chennai. She's bought Bharat Dynamics 65 shares at 1960 yesterday and wants to know the short-term target for this as well. Kush, I'll come to you on this one. What are the charts indicating?
Some consolidation, negative bias was there for the last 4 weeks, but this week, the stock seems to be consolidating with a positive bias now, some accumulation also coming in. So I would suggest a stop loss near the 1850 mark, continue to hold. And as you rightly said, the stock is very close to the buying price. So yes, not too much of a worry. And it's coming off, a negative consolidation phase. So on the upside, you have targets of 2020. Once that is taken out, a 2080 also comes into picture. Some momentum could be missing because of how the stocks have run in the past. But after this brief phase of consolidation, I think this is a good entry point. So continue to hold BDL.
Continue to hold BDL is the view where charts are concerned. Okay. The next caller, Ajay, is calling in from Mumbai. Ajay, hi, a very good morning to you. How can we help you today?
Yeah, hi, good morning. I have 100 shares of OneSource Specialty Pharma.
Okay.
I'm looking out for long term.
Okay.
So I want to know how the prospect of this company. It's a CDMO player.
Okay, got your question, Ajay. I'll take this up with Nirav. Nirav, not sure if you have a view on this one. What's the view like? And he's holding 100 odd shares. What should he do?
Well, I think it's better to shift to some quality players like, say, a Divi's Lab, which could be a better play in the CDMO space.
Okay. All right, so Divi's Lab is a better play. Let's go to the next question, and we've got Chanchal Nandwana, apologies, took me a little bit to get that name right. He's looking at Ambuja Cement for a period of 3 to 4 months. He hasn't bought yet, but he's wondering whether he should. Kush, on the charts, what's the view?
Not a bad idea at all to consider Ambuja Cement. In fact, the entire cement space has now started to turn a corner after, brief bit of consolidation. Ultratech also is a good pick, in this space. But yes, Ambuja Cements also has done fairly well, has closed above, some of the key resistance levels, the last one being 580. I think this momentum could continue. From a 3 to 4 month perspective, I think, a reasonable target on this one is 620. Once that is taken out, you're looking at the 655 as well. So continue to hold, keep a stop loss near the 560 mark.
Got it. All right. Standard disclaimer here, Ambuja Cements is part of the Adani Group, and so is NDTV Group, of which NDTV Profit, as you know, is a part. We've got Chandu calling us from Hyderabad. Hi Chandu, very good morning. How can we help you today?
Hello.
Yes, go ahead Chandu.
Yeah, so I bought a ABB India at average price of 5,060. Okay, 10 shares I bought it actually.
Okay.
I want to know the short term and long term view on this.
Okay. You want to know the short term and long term, but did you buy it based on the fundamentals or did you buy it based on the price action?
Yeah, both I see. Both. Yeah.
Okay. All right. The question is for you then, Nirav, since he's not really specified what his time frame is. On the fundamentals, would you hold at these levels? I think that order book has never been an issue. It's execution and valuations. Would you agree?
Well, it's always going to be expensive in terms of valuation because of the technology leadership. And I think this is a portfolio stock, and the advice is to hold and keep adding at all declines.
Okay, so that's with regards to where ABB stands. Add at all declines is the view that Nirav has given. All right, our next caller, Amit, is calling in from Dubai. Amit, hi. How can we help you today?
Hey, good morning. First of all, I was watching your show yesterday. I was very impressed that you guys are so sensitive that if a caller calls with our local language, Hindi, you are very flexible, and it was very interesting to see that you guys respond in Hindi. So that's a great job. Thank you.
Thank you so much, Amit.
Quick one.
Yeah.
Quick one. So I have Bata. Crazy
Okay.
year. I've been holding for more than 15 to 18 months.
Yeah.
I cannot make sense of it, whether the consumption will pick up, whether there's PLI in footwear.
Yeah.
But I just do not know what to do with this stock because this is not doing anything at all, up, down, sideways. And I thought it's time for me to think about a switch.
Yeah.
So I want to know what's going on with this particular counter.
Got your question, Amit, and I understand what you're trying to say. And I'll take this up with Nirav. Nirav, we've seen one side there is Bata, which has not done anything per se in FY25, and that's why that's not reflective in the stock as well. But there are other footwear companies that are doing fairly well as compared to where Bata is. What's your view like? Should he book his losses right now in Bata, or should he continue to hold to see some further upside?
No, I think the stock has been a rank underperformer in terms of performance, and I think the stock has been languishing. So it's better to shift to some better growth story. Something like a Metro Brands also can be considered by him.
You can look at, but okay. So let me ask you a slightly different question then, and this is from my own end. If you are looking to play that consumption theme, would it be in the footwear space, or would you look beyond that? Would you look at consumer durables?
Consumer durables, I think we did have a look at air conditioning companies. We did see a few stocks like Blue Star, Voltas, and we were specifically quite bullish even on Subros. And we like CG Consumer Care also. So these are some of the stocks which are looking quite good. And in the consumption space, of course, we like Titan, Trent, and we would also like to look at Avenue Supermarts, although it is in a correction mode at this point of time. But we feel the prospects can improve going forward.
So, but then quick answer, out of all of the stocks that you've described, where would you rank Metro?
Metro is just because he wants to be in that space, perhaps in that footwear space. I think that would be a better replacement over there.
I got it. Okay. No, but I'm saying if it was not for his question, would you suggest it?
Then I think we would go with some other sectors also. I think we could look at a Blue Star also. Sure. It's looking quite interesting in the commercial refrigeration space.
Got it. Got it. Okay. Okay. Hopefully that answers your question. All right. We've got Niva, who's writing in from Chennai, asking about Sigachi Industries. And unfortunately, there was that terrible accident that took place, and the blast that took place. A lot of people lost their lives, and the stock has had a negative reaction to that because of the implications going forward as well. But the question is slightly longer term. Niva has bought at prices of 52 rupees and wondering whether to hold for the long term, that is 1 to 2 years. Can it bounce back is the question. Nirav, if you followed this and if you look at the company, what would you suggest?
Well, a very unfortunate incident which has taken place, and I think the scars will remain. And I think from a global perspective, whenever we talk to companies, they talk about the fact that if they want orders from global clients, etc., then there are certain parameters which have to be met. The first is zero defect, zero accidents, that is complete focus on industrial safety and best practices. So I think if such an incident has happened, I think definitely it may affect the order flow, etc. Of course, it's a reputational issue also and an industrial safety issue. So I think it's better to shift to some other alternative.
Okay, can you suggest an alternative in the same space, or what would you pick?
I think there could be, one can have a look at auto ancillary players. They're available at some of them are available at very, very attractive valuations. One can have a look at JT EKT or Munjal Showa or Jamna Auto, etc.
Okay. All right. Sanjay is calling us from New Delhi. And Sanjay, very good morning to you. Kya sawal hai
Very good morning to you.
Yeah.
Thank you very much for taking my call.
Our pleasure.
And my call is on Indus Tower. I have some funds and wanted to put it for a shorter period. Is it the right time, or does it looks good to go for a Indus Tower at CMP, current market prices?
Okay. That's a good question. And you know what? Instead of going to Kush today, I'm going to go to Nirav. Nirav, because on Heard on the Street, which viewers, I must point out to you, if you've not heard about Heard on the Street, it's a regular feature on India Market Open, which is NDTV Profit's morning show. At 8:45 every day, we tell you about stocks that are buzzing on account of chatter in the newsroom, or not newsroom, sorry, dealing rooms. And the chatter in the dealing room suggests that there could be, Nirav, a large buyback or a dividend payout by Indus Tower. So from that perspective, from a shorter term perspective, would you buy into this stock?
Well, we have recommended this stock at 375 levels during the previous Diwali peak festival. And I think the target for this is 475. So I think the stock is slowly progressing towards the target. Unfortunately, it's, this stock, the fortunes are related to that of Vodafone Idea also. And of course, its linkages with Bharti Airtel. So I think the stock has faced certain headwinds on account of the association with Vodafone Idea. And I think that has been a setback as far as the stock is concerned. But now the stock is clearly ready to give a breakout from the current levels. So I think can expect something positive going forward.
Okay, can expect something positive going ahead. All right, so that's with regards to where Indus Tower stands. Our next caller, Arvind, is calling in from Uttar Pradesh. Arvind, hi, a very good morning to you. How can we help you today?
Hi, good morning, ma'am. I do have the Aventel shares, 398 shares at the price of 157.
Okay.
I want to know about the future of that company or technical analysis of that company, basically technical analysis of that company. And I'm planning to hold for 3 to 5 years.
3 to 5 years. But 3 to 5 years... Sorry?
To play the defense sector.
To play the defense theme. Okay, I got your question. 3 to 5 years technical aspect might be very difficult, but I take this up with Nirav quickly. Nirav, Avantel, is that the best way to play the defense theme?
Well, a lot of companies are coming out with a lot of strategies in the defense space, but I think he can shift to some better known names in the defense space. I think the best pick at this point of time would be Bharat Electronics. Alternatively, he could also have a look at companies like Data Patterns, Zen Technologies also.
All right, so the entire defense pack is buzzing in trade and has been in the recent past. And we're cooling off just a tad bit today, though. We have to slip into a very quick break. Do stay with us, Kush as well as Nirav, and we'll be back on the other side to take more questions. Do stay tuned.
That's huge. That is a biggie. It's out of it.
गोल्ड ग्लास क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर।
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit. Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Hi, welcome back. You're watching Ask Profit, and this is the show that gets you answers to all of your stock-related questions. To that end, you can send us a message on the number at the top of the screen, or you can call us on the number at the bottom of the screen, as Sanjeevi from Chennai has done. Sanjeevi, very good morning to you. How can we help you?
Hi, good morning to everyone at the studio.
Good morning.
My question today was regarding SBI cards.
Okay.
So this is a stock that I have been holding for the last 3 years, and I've been averaging it every now and then. So as you see, I have about 80 shares right now at a price of around 829.
Got it.
So my question is, to be honest, I've been running out of patience now, because for the last years, all I've been doing in this stock was downward averaging.
Yeah.
So is there any other sector or any other, that I can rotate into, maybe to look at better profits? Because, in the last 3 years, my returns aren't really that much.
Yeah, and you can't say that you haven't had enough patience with the stock if you've spent 3 years waiting for it to do well. I get the angst and I get the irritation, Sanjeevi. So let me ask this question to Nirav. Nirav, this shouldn't be a scenario where you waited for 3 years for the stock to go up, and just as you've decided to sell it, it goes up. So should he hold on? Is that the view? Or should he switch to something? Where are the better prospects? Perhaps, Sanjeev, I just want to confirm, do you want to stay in the financial space?
I would prefer to be in the financial space, because, again, there's been a lot of these rate cuts and all that happening.
Yes.
So if there's any other financial stock that I would, rather rotate into, that would be great.
Got it. Nirav, so that's the brief. He's looking to stay in the financial space, but move out of SBI Cards, which he's lost patience with.
Well, he can shift to some other names, some other quality names like L&T Finance Holdings, because L&T Finance Holdings has got exposure to the rural economy. They are one of the biggest financiers of two-wheelers. They have one of the biggest financiers of tractors in the country. So that will give a good rural exposure, and the benefit of the gains which accrue from the booming rural economy. At the same time, he can also have a look at Bajaj Housing Finance, where, of course, the housing finance prospects are looking quite good. And there's strong parentage also. So I think he could make some equal allocation between both these companies for his investments.
If I remember correctly, yesterday you had a note that was sent out by Goldman Sachs on SBI Cards. They downgraded the stock to neutral. What is the target price change that they had?
1006 is what they've given as target price.
From?
I'll have to pull that up.
So I think they've cut it quite dramatically.
Yeah, what they're saying is that balanced risk reward post sharp valuation re-rating is something is what helping the case, and that's why they've downgraded to neutral. And credit cost and growth will be the focus, but near-term EPS growth will be impacted, and they've cut EPS estimates by almost 9.5% for FY26 and 7.5% for FY27. So that's big. So that's dramatic. And they're also seeing delayed conversion of spends to interest-bearing loans as well. And these are the reasons as to why they have downgraded the counter.
Okay. All right. So we will take more of your questions, but before we do, this is an important story. It's an NDTV Profit exclusive, and it relates to advice that you might be getting or you might have gotten. Market regulator SEBI is intensifying its crackdown on stock manipulation and tips being offered by unregistered finfluencers via WhatsApp and Telegram channels. And we've got Charu joining in studio to tell you about this. Charu, it's a big story because a lot of people out there seeking advice, of course not on this platform, but on Telegram channels, on WhatsApp, they're looking to make a quick buck, and they get sucked into this.
So see, we all know that social media is the platform where we get to connect with the masses, but it is obviously being used to connect with, innocent retail investors who don't really know better. So what is happening here is that a lot of YouTube channels and Telegram channels sort of come to these investors, reach out to them on pretext of, getting very high interest or profits, and that is one of the major reasons why they get lured into these things. Currently, SEBI is investigating these issues. It's slightly concerned about the volume here, but it is already on its way to come out with an order in 3 to 4 of these cases, and is also in touch with the social media companies and tech companies like Telegram, YouTube, Meta and all to, sort of come out with a solution, and has also previously as well come out with several regulations. But since volume remains to be an issue, some individual orders are also on the track to come.
Important update. By the way, all of the individuals that give you advice on this platform are registered, and we give you the disclosures as well in the event that they need to be done. Charu, thanks so much for joining in, and I'm sure we'll come back to you when some of these actions get taken by the market regulator. All right, let's go to the next question. And we've got Satyan who's asking about MGL, which he's thinking of buying for the period of 1 to 3 months. So short term. Kush, sorry to keep you waiting. We've got several longer term questions, but this one is relatively shorter term. 1 to 3 months. Would you buy?
First, let me start with the idea that I don't really prefer these the city gas distribution stocks because they get this momentum, and then one or the other news comes out, and the momentum quickly fizzles out. With that caveat, if I just look at the near-term perspectives for MGL, I think yes, you could consider a relatively shorter-term trade on this because there was a rising trend channel. The stock has broken out above that, above the 1450, 1475 mark. The momentum could continue. You've had a golden crossover as well. So if you're considering from a 1 to 3 month perspective, I think 1600 and about 1660 are your targets on the upside. Support zone comes close to the 1425, 1430 zone. So keep a stop loss near that mark. But as I said, you might want to be a little nimble-footed. If any ever news comes, you might want to exit a little quickly. So keep stop losses and trailing stop losses in place.
Okay, so that's the view with regards to where MGL stands. Our next caller, Murli, is calling in from Bengaluru. Murli, hi, a very good morning to you. How can we help you today? Murli, hi, can you hear me? Okay, I think we've lost his line, but we do have his question. His question is basically on TBO Tech, and from what we know, he's a long-term investor for sure, and he's holding 300 odd shares at 1410 of this particular counter. Nirav, I'll come to you on this one. TBO Tech, one of the players in the tourism space. We've talked to a lot of analysts and everybody is very positive when it comes to the hospitality and tourism space. But do you think that this is the right counter to play the entire theme?
I think in the hospitality space, we have a lot of exciting plays which can be considered. So I think our preferred picks over there are, of course, Indian hotels, Taj GVK, which is looking very, very exciting. And we are also looking at a company called APJ Sumendra Park Hotels.
Okay. All right. Okay. So this next pair is an important one to talk about, NACL. And we've got Krishna Prasad, who's writing in from Hyderabad, who has bought 1,000 shares at a price of 158. And what a ride it has been. So can we pull up first? Let's pull up the chart for NACL, perhaps over the last week or so. It's at upper circuit once again today, but if you look at the chart, you will notice, the 1 week chart if we possibly can, because you will notice that every day it's been stuck in an upper circuit and the move up has been very, very phenomenal, 27% up or so. This is on account of the acquisition of stake announced by Coromandel. Of course, the latest update is that it's gotten Competition Commission of India approval as well. And Krishna has been lucky enough to buy at a price of 158. He's looking for the long-term prospects though. Nirav, on the chart, not on the chart, sorry, on the fundamentals, would you hold on to this or would you book some profits at this stage? And what are the prospects for the long term?
Well, I prefer to hold on because I think the prospects for the entire fertilizer space is looking very, very exciting going forward. We have had a good start to the monsoons. And I think if you take into account all the fertilizer stocks, they've been rallying quite well in trade on expectations of better results going forward. And we are looking forward to a good Kharif season also. We are looking at the prospects of a good Rabi season going ahead.
Okay, so that's with regards to where NACL stands. The next question is from Vasu, who is writing in from Mumbai and wants to know if he can go ahead and book his losses for Shoppers Stop. He's saying it's been stagnant for a long time now. Kush, I'll come to you on this one. With regards to where fundamentals stand, retailers, small retailers especially, we've seen that V2 Retail, V-Mart, Bazaar, they've done fairly well, but Shoppers Stop is that one company that has not done well because they're not focusing on their own brands. It's the other brands that are not doing well for the counter. But with respect to where charts are concerned, do you think there's any steam left there or should he book his losses?
So the silver lining for Shoppers Stop is that 475 has acted as a very strong support zone from March up until now. The stock has tested that 3 to 4 times and rebounded quite smartly. but the upside swing, the upside momentum is missing. The stock is now starting to inch higher and crossed the 20-day moving average, also struggling with the 50-day moving average near the 510 mark. I think a couple of closes above this could push the stock a little higher. Yes, it's not one of those high flyer stocks and hasn't really participated in the market upswing as well that started from March, April onwards. But you might just want to hold on to this for a little bit longer, with a stop loss near the 490, 495 mark, and start exiting close to the 525 and 540 zones. So maybe whatever losses he has, might just reduce a little bit, because as I said, the base formation is there. It's just the upside momentum that is missing for this one. So hold and start exiting as the stock moves closer to these, higher levels.
Okay. We've got our next caller from Kolkata, and Zohaib is calling us. Zohaib, very good morning to you. How can we help you today?
Hi, Alex. Good morning. So I hold 30 shares of Worry Energies.
Okay.
So I bought it at 3,200 back in December 2024.
All right.
So for me, it was a very good, fundamentally good solar company. But since then, it has faced some losses. And with the tariffs thing going on, so I'm kind of skeptic about the growth of the company and how it could affect the revenue in the future. So I'm looking to hold it for 9 months to 10 months. So should I hold or should I sell?
Okay. So, but it's a fundamental view. Why just 9 to 10 months?
The thing is, the solar stocks actually are good, but then I'm kind of skeptic, like let's say in a 2 to 3 years perspective. So 9 to 10 months, I'm just experimenting.
Understood. Okay. So let me get you a fundamental view then. And Nirav, what's the opinion? So rightly so, we don't know how the trade negotiations are going to pan out. Chances are that we'll see a mini deal between the US and India sometime this week. That's what we're hearing from sources. But the real deal could take place in September or maybe after that. What are the prospects for Worry at this stage? And should you hold for 9 to 10 months, maybe even beyond that?
Well, one thing which we need to take into account is that if you are into the renewable energy space, then you will require a lot of patience. And especially with respect to when you are building up a kind of a giga corridor where you will be manufacturing the solar photovoltaic modules and the glass, the cells, the wafers, the ingots, the polysilicon chips. So you are going to get the benefit of a lower operating cost cycle. You are going to get the benefit of backward integration. So I think that's going to play out very well as far as the margins are concerned. So this could be a very, very competitive player as far as the costs are concerned. And we could see an amazing growth in profitability, but patience will be required. So I would really urge him to hold on to his investments.
Okay. All right. We've got our next question on transformers and rectifiers. And this is a question from Tiruvallar Lingam, who's writing in from Gujarat, but who says that he's originally from Chennai. I would have guessed that from the name. But he's bought at levels of 471 and he's got 22 shares. He's looking to hold for the next 3 years. He's wondering whether to accumulate at the current price. A lot has happened in the transformers and in fact the T&D space as well, or that power sector as a whole. So would you suggest adding more to this, or are there better prospects, Nirav, on the fundamentals and valuations?
Well, everything is quite expensive in the T&D space. I think everything has run up. By virtue of its size, I think TRIL is a small player. Still, it needs to scale up in a big way going forward. We've got smaller players like transformers, rectifiers, or a Voltamp, etc. But if he wants to add something, I think he can look at GE Vernova, which is looking quite good. Hitachi Energy is also quite good, but it's run up quite a lot. It's looking way too expensive at this point of time now. And we have Siemens Energy, which is also trading on the premium side. So I think what he could do is maybe have a look at GE Vernova to add more stock over there.
I just want to clarify, if I remember correctly, we've discussed quite a few stocks already, Nirav, but I want to confirm in the CDMO space you had picked Divi's, right?
Yes.
Got it. Okay. Let's take the next one.
Okay. Our next caller, Alex, is calling in from Kerala. Alex, hi. A very good morning to you. How can we help you today?
Good morning. I have a query about the NMDC. In the mining space, the government's push towards this rare earth metals. Will it help NMDC to going forward? I also have Hindu Opera and Coal India in my mining stock basket. How this government's move will help these companies or any better other companies other than that?
Okay, got your question, Alex. I'll take this up with Nirav. Nirav, his question is on rare earth metals, but we also learned yesterday that they've cut their iron ore prices. But if we still take the overall price, it's still at a premium of premium versus that of any imported steel price, right? So just want to get your sense on NMDC, and should he continue to hold?
Well, I think the prices of iron ore have been reduced, so that could be a negative in the short run. And at the same time, this rare earth mineral story is going to be a long haul one. So I think he can shift to something better, in the metal space. So I think he could probably consider an Alco or an Hindustan Copper.
Normally viewers, we tend to avoid taking questions on penny stocks. But Karthik from Hyderabad is written in saying that he's bought a very significant quantity, Kush, of Salazar Technology at a price of 11.5 rupees per share, and he's incurring a loss of over 40,000 rupees at this stage. And he's asking whether he should hold, sell, or buy more. What advice would you give him?
So, Alex, I think this is one stock that had actually come into the limelight somewhere, late 2023, where it had a vertical rise from about 7 odd rupees all the way up until 30, 40, kind of levels. But from there on, it's just given way. Add-on is definitely not an option. Exit is the view. The only solace that I'm trying to find in this stock is that it's hit overheated or oversold territories, and might just rebound a bit from these levels, and perhaps could head to 8.5, even about 10 odd levels, and he could look at an exit there. But if his patience has run out, then it's not a bad idea to exit. Anyway, keep a strict stop loss near the 6.5 mark. The stock is in a massive downtrend, and as I said, add more is not an option. 6.57, if these levels are broken, you're better off exiting that stock. If it does rebound from here, 8.5 and 10 are your levels on the upside to exit.
Got it. All right. So that's a view on Salazar Techno. Generally, I would prefer to not take questions on penny stocks. So please bear that in mind and help me by not asking those questions. Pradeep is calling from Bengaluru. Pradeep, very good morning to you. And how can we help you today?
Very good morning to everybody. See, I'm having Markson's Pharma.
Okay.
200 shares bought at 116 rupees.
Okay.
So I wanted to know whether, because I have the profits I have more or less doubled my investment.
Yes.
So I wanted to know whether I should hold on to it for another 2 years, or should I book profit at this stage?
Okay, that's a good question. And would you also want to know if, how to deploy it, or would you be using the cash for a nice trip or something like that?
If any other good stocks are there for investment for another 2 years.
Yeah. Okay. All right, Pradeep. Let me ask you a question then. Nirav, on the fundamentals, Markson's Pharma, he's had a pretty good run. He's asking whether he should double down, whether he should hold on for another couple of years. What's the view?
Well, I think you should continue to hold the stock because the stock has given quite good returns, and the prospects seem to be improving. At least for the next couple of years, we can expect some good appreciation going forward.
Okay, so that's with regards to where Markson Pharma stands. The next question is from Shiva, who's writing in from Hyderabad and wants to know about the pump space. Wants to know if this is the right time to make an entry in something like a Shakti Pumps or Oswal Pumps. Oswal Pumps is a recently listed one, but Kush, Shakti Pumps, are the charts looking attractive enough?
Well, not really. The entire pack had seen some traction, but hasn't really seen a follow through. So even if you look at a Shakti Pump, 845, 850 zones, rebounded from there, but 1025 is where it gave way, consolidating sideways. Momentum indicators also pointing north. So I would wait and watch for a positive turn. If Shakti Pump is able to cross and close above the 975 mark, that's when perhaps some supply hangover might get done. The momentum indicators will also start pointing towards the higher side. So I would wait and watch. Right now, the consolidation is with a negative bias. So I would just put these on wait and watch list and not add at the moment.
Okay, and your quick view on this, Nirav? Anything that you're liking from these two?
Well, I think we would like to keep a close watch on Oswal pumps, which is the recent listing, and maybe on correction we may start buying.
Okay, so that's with regards to where these pump company stands. Our next caller, Ajit, is calling in from Bengaluru. Ajit, hi, a very good morning to you. I believe you have a question on Gravita.
Yeah, good morning to all. I'm calling from Bengaluru. I'm actually holding a Gravita stock for the past 9 months. I'm holding 180 shares in 2228 price actually, and I entered this with a 1 year view, but I'm at loss of 15% now. So I need a view from you guys actually whether is it going, how it is going to be for the next 6 months time.
Okay, got your question, Ajit. I'll take this up with Kush. Kush, Gravita India, the next 6 months, how are the charts faring?
So there is a wedge formation, in Gravita India. The upper end of that band comes close to the 1925 mark. Now the stock has had a bit of a trouble closing, crossing above this, above the falling trend line for some time now. So I would hold on to this one because there are attempts at moving higher, but the momentum is missing. So 1925 is the level to watch for. As and when that is taken out, yes, the stock could see a spurt towards 2021 levels also. So continue to hold because there is an attempt, multiple attempts in fact at moving higher. Keep a stop loss near the 1725 mark. That's a strong support zone, and continue to hold Gravita India for a period of 6 months.
Okay, so pretty deep stop loss. Remember that that's the case as well, and also bear in mind what your risk appetite is and take a decision. We've got our next caller, Govind, who's calling us from Hyderabad. Govind, very good morning. How can we help you?
Yeah, very good morning, Alex sir, and Mahima and all of sir, panelists. Sir, actually, I had trusted in IRFC, sir. For past 1 year, I have brought 5,000 shares.
Yeah.
Is it correctly come to my price or else book losses? Because I have continued follow up your NDTV, sir. Many panelists have given very good ideas, actually.
Yeah.
Unnecessarily, it is striking me there, sir, last 1 year.
Yeah.
Is there any chance to come to my buy price or else any positive look for IRFC or else book losses, sir?
Let me ask. And I think you're seeing a loss because you bought significant quantity of IRFC. That is also had, even though the price is not too far away from the buy price. Let me go to Kush on this one. He's bought at levels of 157. The stock price is at 141. What are the chances that he will recover his cost or maybe even make a profit?
So, Alex, what's happening here is that, the stock is seeing accumulation, but, the follow through is missing. My suggestion is to continue holding on to IRFC. Again, I would like to give a slightly deeper stop loss. So 132 is the level where you put your stop loss. If you see, there have been weeks where the stock has seen an accumulation and moved higher, and the down moves have come on significantly lower volumes. So there isn't too much selling pressure that is coming in. But yes, there are some exits that can be seen at slightly higher levels. Right now, the stock is struggling to hold afloat above this 200-day moving average, which comes close to the 139, 140 zone. I think once in the clear of this, the stock could move higher. So I would suggest continue holding on. Momentum might be missing, but a step up for the stock every few weeks is a good thing, and accumulation is visible. So keep a stop loss at 132. Continue to hold.
Yes. Okay. It's time now for the rapid fire segment, which is 2 minutes where we throw as many questions as possible at Nirav and Kush. Kush, the first one's for you. It's on Linde India. 5 shares bought at levels of 8,520 by Preeti from Chennai. She's wondering whether hold for 6 to 12 months. What's the view?
Exit.
Okay, the next question is on Akzo Nobel, and this person wants a short-term view on this. Kush, I'll come to you on this one. What are the charts indicating?
A sideways consolidation. If you have at lower levels, book profits and exit.
Okay, Yash, hopefully that answers your question. Aditya from Salem in Tamil Nadu wants to know about Lloyd's Metals. Bought at levels of 1,349. He's got a perspective of at least a year. What's the view, Nirav?
Hold.
Sai Silks is the next counter. Hemant bought it at the levels of 121. The stock was up 10% yesterday. Kush, on the charts?
Hold. Keep a stop loss near the 155 mark.
Okay. We've got, okay, I'm not sure of this counter, unfortunately. All right. Infosys, interesting. Okay. Infosys is the question. Bought at levels of 1,419. Would you book profits or wait? Kush, what's the view?
Book profits.
Okay, Sriram is asking the next question on Axis Bank and wants to know if we can continue to hold or book losses. Nirav, your view?
Hold.
Okay, KFin Tech bought at levels of 1,044. Would you add more or would you hold for a period of 1 to 2 years? Raja wants to know. Nirav?
Hold.
Connex Microsystems is the next counter. The person has been holding since its IPO price. Should he continue to hold, Nirav, or book profits?
Hold.
Okay, we've got a question on gold and silver. Nirav, do you have a view at all?
Both of them are hold.
Okay, Connex Microsystems should we take or no? Let's take M&M Forgings. M&M Forgings bought at levels of 489. Gopika is asking, would you hold at these levels or accumulate more? Kush?
No, I would hold this one. Stop loss at 350.
Okay, the question on gold and silver was from Johannesburg, which is why I thought that we should take it.
I'm just wondering if hold for sure is the view, but buy, is that a view? Nirav, do you think at these levels?
No.
Okay, all right.
Okay.
Well,
It keeps becoming more and more dearer.
Yeah, well, there you have it. That's the last word. Thank you so much to the both of you for joining in, and pleasure having you as always. And that brings us to the end of this edition of Ask Profit. It's been a pleasure having you on this program. From Mahima and myself and the team that put the show together, thank you so much for watching. Do stay tuned. This is NDTV Profit.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on Hello and welcome. You're watching KYC. I'm Harsh Saita. With me is Anushi Vakharia. And, you know, defense is the big theme that's playing out, right? We had one defense counter coming in yesterday, giving us extremely strong guidance and therefore warrants better discussion. And today, therefore, we've picked IdeaForge as the company we want to discuss and talk about and speak with as well. So let me quickly first talk about what I want to know with regard to IdeaForge. I'm going to start off with point number one being execution. One thing is having an order book which is large, but the second piece is what's the visibility with regard to execution. And we'll talk about that. But more importantly, it's also the order book build-up which is necessary. What's the outlook like with regard to orders coming in? Have that improved in some fashion? And what's the outlook like going forward? Now, in terms of margins and profitability as well, where do gross margins stabilize at? Where do EBITDA margins stabilize at? And we're talking maybe not FY26, but we're talking maybe the next 3 years and the next 5 years. And that gives us better visibility on whether this one can actually be something that stands out within that defense space and within the private defense space, mind you. Can they stay ahead of competition with regard to the fast evolving technology that's playing out in unmanned aerial vehicles, which is the business that they do? What's the outlook with regard to overseas markets? They've spoken enough and more on all of their con calls about expansions into Oman, opportunities coming out of North America, Africa. They've spoken about the large India opportunity coming out. How quickly does that translate? Both India as well as overseas, but more importantly overseas. Improvement in working capital parameters. Now this is one of the other key drags in terms of the way the financials are playing out. You're seeing a sizable amount blocked in working capital. So these are all the points that I would want to know first off from IdeaForge, but we'll start off by understanding the business first. And it's critical to understand it because you want to understand whether there's a differentiator in the business or not. One, it's in the business of manufacturing unmanned aircraft systems. In simple terms, it's UAVs, which is unmanned aerial vehicles that they manufacture, and they're a leader in that market in India at the very least, and even abroad. From the commentary that they are suggesting, they're saying that they have in the pipeline and plus already ratified over 70 patents within this space, and therefore they are a leader in India but also looking to push with the global expansion that they have. Execution nearly completely depends on the order book is what they have suggested at the end of their Q4 con call, and therefore will be important to understand as to how both of those play out. But something from a business perspective that you must keep in mind. Execution entirely depends on order book. Let's talk about the use case now. I'm going to start off with civil use. Surveillance, security, patrol and municipal. That's the broad breakup in the civil use segment. Then it's used within the mapping segment. In the mapping segment, land surveys, minings, estimations both of area as well as depth within certain civil and application use cases. And now then you have these four, which is largely to do with defense, anti-terror, border security, coastal security, crime patrol. Municipal cases also involve traffic management. So there are plenty of cases, right, of using UAVs, and therefore there's no lack of that. But these are the broad-based applications where IdeaForge has a presence. But you want to talk about some of the business verticals and how they're split.
Yeah, absolutely. So, you just emphasized on the last part about how they're catering to the defense side of the business. But from FY22 to FY25, if you are looking at the mix from the defense, that has come down significantly. From what was 80% of a mix has now moved to almost at the range of 60%, while for civil has seen almost a uptick of 20%. On the other hand, 20% was the mix earlier, which has now moved to 41%. Now, that's the kind of mix that we are looking at. But, let's talk about the broader products also which are there. First is the Zolt, which is a tactical drone that we are looking at. Most of the company products range in catering to the drone solutions that we are looking at. Along with that, we are looking at Yeti, which is a middle mile high altitude log drone as well. Now this drone is an important update that we are seeing, which is the Switch UAV services, which is declared as fit for Indian military usage. Now, just in the recent conversations, the defense industry had pointed out that there's a lack of drones in terms of where the military usage is concerned. So this one is an important one to keep an eye out for. Netra 5, another one, along with Flight, are some of the other drone services which are available from the company that we are seeing. Right, Harsh?
Yeah, absolutely. So Flight is actually their drone as a service offering, which is more of an annualized revenue, I would assume, but we'll quiz management on that as well. And more importantly, I want to also cover Yeti, because Yeti is something that they've been working on for the last couple of years. It's a middle mile high altitude logistics drone. So it's actually into logistics and delivery services. That's what Yeti is all about. So again, it's a very interesting concept which they are working on. So there's no lack of innovation here. That's what I'm trying to get to. There's plenty of innovation happening. Zolt is of course the tactical drone, and Switch UAV is the only one approved by the Indian Army, and therefore it gets a lot of validation in terms of its ability to be able to deliver high quality army grade equipment, which is what the big positive with regard to Switch UAV is all about. So that's the broad split. And in terms of how the order book has shaped up, FY25 end, the order book was at just about 14 crore. They've got new orders worth around 137 crore in this quarter, Anushi, if I'm not wrong.
Yeah.
And then there's an L1 order opportunity of around 400 odd crore. So that's how it really stacks up. Now, in terms of numbers, and we'll start off with the KYC metrics right off the bat. Let's talk about the metrics that we'll speak about. We'll start off with the income statement. Thereafter, we look at the balance sheet. We look at the cash flow. We look at shareholding, return ratios, street cred, we look at outlook, and we will look at valuation. So all of those parameters is what we'll try to cover today. Anushi, you want to start off with the income statement?
Yeah, absolutely. So with income statement, now you know what the basis is in terms of revenue. Now over here in the last 3-year period, it has almost been a flat performance as far as where the revenue visibility is concerned, which brings us back to the first point of Harsh's, just starting off with execution being a key part for the order book which is there. Even in terms of where the margins are, it's a negative kind of a picture that we are looking for margins in PAT as well. So, but the management is guiding for a 20% of plus of a blended margin going forward. So when does that flow in is something that we should be keeping a track of. Now, order book, if we are seeing last year, 13.6 crore was the figure that we clocked in, which is much lower than the FY24 and 23 figure of 124 to 192 crore respectively. Do note that it had been a lackluster year in terms of where the order inflows have been considered from the drone industry. So that is why we are looking at this kind of a figure, but emphasis more on the execution part remains, right?
Absolutely. And just to kind of take the viewers through the journey, yes, sales of 160 crore is flat when I'm looking at it over the 3-year period. But when you look at FY23 and FY24, we saw a spike on the sales numbers. In fact, top line was at 314 crore in FY24. So we've seen significant contraction in top line. This is largely because of order inflow not coming in a steady fashion. You look at the order book of just 14 crore at the end of FY25. That's of course the Q1 order book. But the FY25 order book stood at just 14 crore at the end. And therefore, there was not much of execution which was left to do. And therefore, what you're seeing is that the fixed costs are actually adding up. This is an EBITDA positive company otherwise. It's done 75, 48 and 57 crore of EBITDA in the last 3 years preceding FY25. FY25 was a loss, high fixed cost, high ESOP cost weighing down on the numbers for FY25, something that you must keep in mind, because otherwise on a normalized basis, the numbers don't look all that bad. But FY25 from an execution perspective was a weak one. From an order win perspective was a weak one. The orders that come in are chunky. The execution is therefore also chunky. And therefore, what you should look for in a company like this is over a 2-3 year period, what is it that they are delivering in terms of top line, in terms of margins, in terms of profitability. and it's not a one-year thing. Therefore, again, something to keep in mind and some perspective. Let's now look at the balance sheet, and when you're looking at the balance sheet overall, it's not looking like a bad one. You're seeing decent amount of equity to the overall market cap as well, around 2,500 crore of market cap, around 600 odd crore of equity. You're seeing borrowing which is far and few, so very, very low borrowing. But what's locked in really in the assets is 400 crore out of that 600 crore of balance sheet is locked in inventory, trade receivables, cash, and other working capital items. So what you're seeing is a large part of that amount, and cash is obviously good. 97 crore of cash is good. But outside of that, the around 250 crore of the balance sheet is locked in some of the working capital requirements, which is large. And that's a bit of a concern. Neutral from a balance sheet perspective, cash flows.
Now, in terms of where the cash flows are also, we are looking at a negative figure for cash flow from operations in FY25 in comparison with your FY24 picture that we are seeing. Again, a big result of this is also the kind of revenue recognition which has taken place. We've seen a downtick in terms of revenue almost at the likes of 40% or so in FY25, which is reflecting in cash flow from operations. There had been an increase in terms of receivables which were there, so which has resulted in this negative figure that we are looking at. Even net cash flow down minus 152 as compared to a positive 164 crore that we'd earlier seen. So on basis of that, we are also giving cash flow a neutral rating.
Okay, so neutral on cash flow, and that's also because of the build up in receivables which are not unwinding, the build up in inventory which is not unwinding. So some of those need to unwind, and maybe we will see some of that come through. But yes, that's still awaited. Let's now talk about return ratios, and this is a fascinating one, right? You had return ratios at 40% in FY22, and I want to again pull out and highlight that FY22 was a very solid year for the company. The operating margin or EBITDA margin of the company in FY22 was 47%. Chunky orders, right? Something to look out for. But that has tapered down. ROEs are now negative in this year, and we've highlighted reasons why. But otherwise, does the company have a capability of going back to higher ROEs if the EBITDA margins recover? And we spoke with management, we'll give you that perspective. So therefore, the neutral with regard to return ratios. Shareholding, Anushi.
So in terms of where the shareholding is concerned, not much of an activity that we're seeing in the last 3 quarters or so. Promoters' stake has remained at the 29% of a mark that we are looking at, while FIIs have trimmed their stake from 3.5% to 1.56%. So in that 1% of a range is what we are seeing. DII is playing around the range of 2 to 2.5% is what we are seeing, while public holds about 67% of stake in the company. So on basis of that, we've given a neutral rating to this one.
Okay, let's quickly look at street cred now, and this doesn't look pretty at all. Let me be very frank. 11% down in the last 6 months, but even when you look at it since the day of the listing, stock is down 56%, down 29% on the last 12-month performance, and therefore clear thumbs down with regard to this one. It's looking very difficult from a street cred perspective. You want to talk about valuations, Anushi?
Right. So in terms of where the valuations are, we've just discussed that, in FY25, the company had clocked in a loss in terms of where the EBITDA was concerned and net profit was concerned. So to get a better perspective for comparison, we have taken the market cap to sales approach for this one. If you look at Idea Forge over here, it has a multiple of 15.4 times. This is based on its FY25 sales number that we are looking at in comparison with Paras Defense and Zentech, who operate in similar spaces, which have about 18.8 to 18 times of a multiple is what we are seeing. So we are giving it a neutral on basis of that number.
If execution were to improve and if margins were to improve, you could well see this number change. And that's something you want to keep in mind, and which is why we're giving this a neutral, because the upside to this could well be good because the base was higher and it's come off very sharply due to whatever macro factors. Could that change is the question. Let's look at outlook now. Government expected to drive procurement as well as drive the larger market size. Expected EBITDA margins of 20% plus is what they've guided for. Blended gross margin of 45 to 50% is what they've guided for. R&D capex of around 77 crore annualized for FY26 is what they've guided for. First demo of the US defense drone is done. Now They need to try and work more, get their early adopter out of the way and start getting orders. That's the US expectation. Do not expect to take on debt. Expect a soft Q1 FY26. This is basis Q4 commentary and execution readiness. They are waiting for order inflow is what they say. But we spoke earlier with the CEO of Idea Forge, Ankit, and here's what he had to say. Listen into the whole conversation. I want to first talk about the 150 crore order pipeline that you have. And I'm not asking with regard to Q1 FY26, but for the full year. What's the outlook like? How quickly can you execute this order book? Because your capacity utilization, at least basis Q4 commentary, suggested you can execute fairly quickly. So trying to understand that.
Yes, absolutely. I think the attempt and the target is to execute it as quickly as possible insofar as this is concerned. And we are going to essentially, do it also not just because we have capacity, but I think it's also a very immediate need for our country. So our focus will be to get the capability in the hands of our user as early as possible.
Hi, Mr. Mehta. This is Anushi joining in as well. So last year, if we take the order book in context, it was around 14 crore that we saw. This quarter, you recorded more than 100 crore plus of an order win. Just want to get a sense from FY25 to 26, what would be different in terms of where the order inflow picture is considered, and how do you expect to close the year with the FY26 order book? If you can give us more details on that front.
Yeah, so I think, Anushi, if you look at what has been announced recently regarding the next emergency procurement post the Operation Sindoor, Indian Army has been given a 9,000 crore budget to quickly induct more technology, particularly replenish what was consumed, as well as induct more technology in their ranks and forces so that we can be more prepared for any eventuality. And therefore, we do expect that that conversion will also happen sometime in this year. And once those conversions happen, we will have to also rush to deliver the capability to our end user.
Mr. Mehta, if you can just quantify the numbers for us, if we can take from FY25 to 26, what would be the growth picture be in terms of where the inflows are considered? And also a sense from these 14 crore of an order book that we saw in FY25, where do you see this number heading towards in FY26, considering that you have a 400 crore of a visibility as well in terms of order pipeline?
Anushi, the visibility that I can provide right now is that there is a good amount of capital earmarked for purchase of drones and counter-drone systems by the Government of India. Having said that, how much of it will convert to Idea Forge's bucket is something that we will sort of only talk about when we have those orders in hand, because in this space, it is very important to be a bit more conservative in terms of what we are projecting because of the vagaries of the business and the processes.
Mr. Mehta, then give us a 2 to 3 year outlook, if not FY26. Because what your shareholders and investors will want is how quickly can you execute. The potential seems large at 400 crore of L1 potential, which you've highlighted. But how much of that converts is really the question. Again, on the Indian defense as well, the budget seems large, but how much of that converts to drones and specifically to you? Just give us that broad picture. It gives us better perspective.
Sure. So Harsh, what happens is that typically, the procurement for drones is earmarked within the overall budget that the government has. What we understand over the next 2-3 years is that there is an intent to look to buy this technology in large numbers and to buy it consistently. That's the view and the vision that we have from our forces. And therefore, we can expect that a lot of conversions will happen within the drone industry. Within the industry, we are not serving each and every use case. So we are serving the use case for ISR and we are serving the use case for multi-role assets. And within that, we will have to carve out, what is the picture that is converting for us. Our win rate within what is attemptable by us is usually very high, and we are able to grab a good market within that because of our capability that we've built, as well as now a new vector has come in, which is resilience to electronic warfare. That's an area that we've been talking about in all our calls. We've been talking about the technology that we're developing there, where we were working towards frequency hopping, multi-frequency communication. We've been talking about working on GNSS denied navigation, and all of these capabilities become very real and important and will become an integral part of what the government is going to buy. So we do find ourselves in a leading position insofar as that capability is concerned for the kind of drones that we build. So between these, 3-4 vectors, we feel very confident that we have a good possibility of converting a substantial amount of the pipeline for our domain in our favor. But what are the exact numbers, how many orders and how many units are the government going to procure is something that we'll only get to know once the RFPs are out and we start bidding for them.
Understood, Mr. Mehta. So this is in terms of where the order conversion and execution is considered. But if you take the order book visibility, it is very important to focus on that, considering that if you look at the last 3 years of revenue growth, that has been more on the muted side. It's almost flat. So just want to get a sense on the revenue visibility also for the next 2 to 3 years. What is the kind of growth? Is it a double teen kind of a growth, or more than that growth can we expect? And the margin range also, because if we look at the margins, there has been variation in terms of whether quarter or the financial year performance has been. So give us a sense on these two metrics as well.
See, what we look at in terms of blended margins, Anushi, is that we are typically looking at between 40 to 45% of gross margin expectation on a blended basis from our pipeline. But please, account for the fact that when an individual opportunity closes, it may have a higher or lower gross margin depending on the nature of the competition in that bid and what that product is all about. So, we should expect that individual opportunities that convert will have the variability, but on a blended basis, our margin expectation is remains the same. And yes, we can expect growth in this year. We do expect conversions from our pipeline, both the L1 pipeline and our opportunity pipeline, which is significantly larger than the L1 pipeline as well, to happen this year and subsequently in the forthcoming years as well, from whatever we understand of the intent of procurement by government, particularly in defense. And we are seeing that a lot of work is also going to happen in the homeland security and in the civil domain as well. And therefore, on a overall basis, we believe that India is going to see a rise and a better, opportunity for the industry as well as for us in the next couple of years and beyond. And we expect that in this time frame, we will also start responding and start receiving orders from international markets. So overall, we expect growth from this overall diversified approach of what we have been planning and what we've been building towards over the last couple of years.
But again, coming back to the numbers, what can we expect in terms of top line? Is there a broad level thought process, given that now you don't just have India to look at, or maybe an election year which will drag your numbers? It will be global. You have traction coming in from Europe, UK. You have now a decent presence in North America as well. You started ramping up there as well. So you've got diversified presence. Is there better visibility on top line, sir?
See, there is better internal visibility, but for me to talk about it, we're not there yet. Let me put it this way.
Okay, sure. And are the margins in exports better than domestic?
See, we are currently pitching, the more capable products in the international markets, because we believe that differentiation is very important when we go out there and we present ourselves as a credible player. Because, if we are looking at the run-of-the-mill capability or performance, then, there is a lot of competition everywhere in the world. And therefore, because we are pitching our premium products there, we should expect good margins and healthy margins there. But we will only sort of, know when we convert some of these opportunities in practice.
Sorry,
but there is a tight governance happening on that. We should expect closures as well.
Right. I want to close the loop with regard to margins. So you're guiding blended 45 to 50% blended. Where does
but
that
it doesn't show up. So Harsh, sorry to interject. It doesn't show up year on year, because in a particular year, if I have a specific, like it happened last year.
Yes.
So the idea is that, typically the pipeline looks of that nature, but what converts in the pipeline will show up slightly differently. We've had years where we have much better margins, and we've had years, particularly 1 year last year, where we had slightly more muted margins. So it depends on what we are executing in that year more than anything else.
No, for sure, Mr. Mehta. So we've explained that to our viewers as well. So that is well recognized. But But say you're at 45-50% blended gross margin, at least that's the visibility today. Where does that leave you on the EBITDA margin front? Because your fixed costs have also gone up in relative terms. So wanting to understand visibility with regard to fixed costs, ESOP, and therefore the net EBITDA margin, where should that lie?
So between the last 2 years, if you actually see our expenses on the people front were relatively flat. There have been minor increase in expenses on the other expenses, which is expected as you expand your facilities and a little bit more effort goes into maintaining what we are working towards. So overall, expenses actually remained relatively flat, and it was the impact of the lower base that hurt us more last year than real change in the cost in a very big way. And therefore, as the revenue base grows again, we will start seeing improvement of EBITDA margins, and we may get back to healthier EBITDA margins of at least 20+% and healthy PAT margins as well. So I think it's a matter of revenue base at this point in time than the cost base, because we aren't increasing the cost base as aggressively at this point in time.
Okay, so 20% is the kind of margin levels that we should be watching out for Idea Forge. Understood. Now, just want to get an overall industry outlook, Mr. Mehta. Drones, after the recent developments, it's an upcoming area in focus. Just want to get your sense in what usually is the kind of market share that you hold in this particular space, and how many players are there, domestic, international. If you can give us how, in terms of bidding also, how many competitors are there, how competitive is the space?
See, I'll start with the competitive sort of landscape in the space. In every opportunity, you have a very large number of people who bid. But in the end, when it comes to actually demonstrating capability, you will find that only 5 to 6 people actually turn up to demonstrate something to the ground. And within that, there are various sophistications, capabilities that the consumer demands. And I don't think more than 2 or 3 players typically meet that capability. So while there is a lot of noise, a lot of competitive, you can say, pressure from the point of view of how many people want to be in the domain, but people who can actually meet the requirements of the end customer, typically you will not find more than 2-3 people qualifying, depending on what the opportunity is and what are the areas. In fact, in some cutting edge capabilities, there is no competition to what we build. So it entirely depends on what is the specific opportunity. Usually, there are not too many players who qualify those opportunities when it comes to real testing on ground.
We also spoke about working capital. That seems to likely get better going forward. But completely out of time on this edition of KYC. From Anushi, myself, everyone who puts the show together, thanks so much for watching.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
Imports become the exception rather than the norm, and increasingly we do almost, last year for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold ICICI for the long term?
Buy.
Markets seesaw to trade with minor gains. Nifty hovers above 25,500 while Sensex above 83,600. Sectoral action makes Nifty Auto leads the gains. Meanwhile, SEBI intensifies crackdown on stock manipulation, probes tips being offered by unregistered influencers via WhatsApp and Telegram channels. That's an NDTV Profit exclusive lined up on the show. And another NDTV Profit exclusive, sources tell us that the GST Council is actively considering reducing the number of tax slabs to 3 by doing away with the 12% slab entirely. Meanwhile, an interim trade deal between India and the United States is likely to be finalized by July 4th to 5th. Negotiations continue in Washington as Indian team extends stay. And Indo-Gulf Crop Sciences shares list flat at IPO price on NSE. The 200 crore rupee issue was subscribed over 25 times in the primary market between June 26th to 30th. Good afternoon, you're watching Markets at 12 with me, Shreyansi Singh, and this is the show where we get you a snapshot of everything that is happening with the markets. Let's begin by doing just that. When you take a look at the Nifty as well as the Sensex holding on to minor gains as we speak, let's take a look at the sectoral picture as well. Tilted in the favor of advances, so there's a whole host of sectors that are in the green at this point in time: auto, oil and gas, pharma, media, FMCG, energy, as well as IT, exactly in this order. On the flip side, you have PSU banks, finance, as well as realty lagging behind in trade. So that's something that you're looking at on a sectoral basis. Let's take a look at some of the top gainers from within the Nifty 50 pack. So there's ONGC, Hero Motocorp, Apollo Hospital, as well as Dr. Reddy's that make it to that list. On the flip side, when you take a look at the list of losers as well, there's maybe an SBI Life, Kotak Bank, Bajaj Finserv, Bajaj Finance, as well as Trent making it to that particular list. But tell you what, let's take a look at the top story of the hour, and it's an NDTV Profit exclusive. Let's zoom in on that. Market regulator SEBI, in fact, is intensifying its crackdown on stock manipulation and tips being offered by unregistered influencers via WhatsApp and Telegram channels. We have Charu joining in with that update in terms of the key details.
Hi, so the Market Regulator Securities and Exchange Board of India is currently in the process of curbing a lot of, unsolicited and unregistered advice by a lot of flukes, a lot of people who call themselves influencers. While the regulations around this are already in place, SEBI is currently investigating several such issues and is also on its way to come out with final orders in about 3 to 4 cases. And the regulator basically is concerned about the volume of such cases, because there are a lot of investors who get lured into these channels on the pretext of high returns, and a lot of people who lures these investors. So it's a pretty large network that the regulator is actively trying to curb, and has already brought out regulations and provisions and is working towards investor awareness as well. But this remains to be an issue, so let's see what exactly happens and how it plays out.
Well, absolutely. Let's try and get a little bit more context when it comes to this particular story. We have Pooja Patel, who's a certified financial planner, joining us on the show. And along with her, we also have Madhavan Srivatsan, who's a senior partner at Emerald Law Offices, also joining us. A very good afternoon to the both of you. In fact, the first question that I wanted to take was to you, Mr. Srivatsan. I wanted to understand, what are the legal remedies, sir, when it comes to an investor? What are the legal remedies that they have if they have been duped in such issues? What do you make of this as well?
Okay. See, actually, this issue, which has been recently highlighted in all across the media, from a legal point of view, this issue has always been there. Like right from inception, when SEBI Act came and all the regulations for the last 10 years, 12 years, SEBI has always trying and regulated the market, who tried to disrupt the market by unpublished information and all of this. Now, recently, the SEBI has made certain amendments. So any investor who feels that he or she has been cheated or duped, they can immediately file an online complaint with SEBI portal, and SEBI is definitely going to look into it. And even suo moto, SEBI has been taking a lot of actions. SEBI has also circulated certain consultation papers, and SEBI has also come out with a public guidance. I mean, that's something which is a very positive step, that informing the public of being aware of this so-called finfluencers who give unsolicited advice, because as per law, any person who is registered with SEBI, only that person is authorized and allowed to give advices on with respect to securities and stocks. So any person who feels duped can definitely file a complaint with SEBI, and SEBI will look into this.
Well, absolutely. So that's what is in terms of that's what we're broadly expecting in terms of SEBI also cracking down on these influencers. But I also wanted to understand what this really means. Being an advisor yourself, what do you think, Pooja, is your opinion when it comes to this? What do you think is the true responsibility of an advisor as well? Because there's a lot that is that the advisor should be doing, and that's clear from this particular crackdown.
Yes, of course. Being an advisor point of view, it's like it's hard to deliver that kind of advice also, and I would say it's hard for the audience also to find the right advisor and the right, I would say, influencer, if I talk about. Because there are many misleading activities going around. If we specifically talk about the unregistered influencers who are randomly sharing stock tips or stock recommendations without any unregulatory regulatory body or anything, at times they are deliberating misleading investors, and not only they are misleading the investors, but they are actually harming public trust and the integrity of a market. So I think they should have more accountability and transparency in place. And I believe SEBI's action is like both timely and necessary at this given point of time, like with the growing influence of social media platforms like Telegram and YouTube is really shaping how the retail investor looks at this particular things. And however, while we are, regulating the space, of course, that is an important aspect, but it's also, equally essential to create frameworks that, don't stifle genuine education and awareness efforts. Like many creators, are adding value through simplified financial content. They are breaking down the financial jargons for normal public to, manage their money better, probably. But I guess this is the biggest challenge, to differentiate between those who genuinely wants to educate people and those who are just manipulating via any recommendations or providing trading tips or something like that.
Yeah, so I would like to ask you, you just outlined what are the, core responsibilities or the true responsibilities for an advisor and what they are adding to the system, the value they add. But do you not feel that, this could also hamper the kind of future any financial influencer or financial content creator might have? And it could also hamper the amount of trust that investors or the audience in general might have on people who are on social media and giving advice?
I believe if the SEBI is taking this action, this would be a positive step towards both the parties, even if we talk about specifically advisors and even if we talk about audiences, because they will get genuine advices from genuine advisors probably. And here we are also talking about their hard-earned money. When we talk specifically about finance influencers or advisors, we have to check on both the levels. Like we have to check on the advisor front, we have to check on the retail investor fronts also. So we have to check both the aspect. And when I talk about this particular step which SEBI is going to take, for that, I would say that, it's like more kind of a trustworthy digital investment ecosystem they are building, where investors can easily access information that is both credible and compliant. So it's benefit for, it's a benefit for both of the parties.
So, Pooja, just one more thing I would like to ask you, because you have been involved in this space for so long. To the investors watching you, what are the particular cues or the easier to understand red alerts or red flags that a person should look at and understand, okay, this might be something that is not correct? The cues.
Okay, basically, if I talk about the cues, first thing is the investor should look out whether the particular person is not giving you any direct tips. Like let's say they are giving you to buy XYZ shares or XYZ mutual funds, or they are straight away without any research or without any regulatory body or without any certification, they are telling you that you go ahead and buy this or buy that. So that is if they are giving you any pure recommendation for any particular stock or any particular mutual funds, that is, I would say, a biggest red flag that an investor should think of. Because from an investor perspective point of view, each and every investor have different goals, different time frame of investment. So that cannot be generalized for all. So if anybody is recommending you straight away the names of stocks or mutual funds, that's the biggest red flag.
So, Mr. Srivatsan, my next question would be for you. So, being a lawyer, you already are aware that there are regulations in place, there are circulars in place. But do you think that there can be more done on the implementation front?
Absolutely, absolutely. I mean, so SEBI is absolutely doing a lot, but there is a lot which can be done. Now, what we have to say in a crux, who are these kind of people? Who are these influencers? Broadly, you can categorize them into three buckets from a very broad point of view. First is that they can be people who are backed by the actual promoters of listed entities who try to manipulate the stock prices of their own company, right? That can be the first category. The second category can be these influencers are backed by certain SEBI registered intermediaries, which are either a stockbroker or investment advisors who want to play on the market. They can be those people. The third category of influencers, which I think, in my view, Pooja can correct it, is that, which is the majority part, is that just for the return of money or return of fee, they start giving advices, even though they are not registered with SEBI. But for some reason, they feel that they have got enough information and knowledge to pass on certain tips and marketing and investment advices. They may not be targeting a specific company, but at the end of the day, the consequence is that they are disrupting the market. They are creating a fake price. Now, I feel that SEBI should try and crack down more on this third category of so-called influencers who have come up. And anyway, they have come out with a consultation paper on the digital platform. So it is, as of now, as per the consultation paper, it is optional for any of the social media platforms like a Facebook or a Twitter or an Insta or whatever you name it, to categorize them as a specified digital platform. If they want to categorize them as specified digital platform, they have to take care of certain IT issues. They have to take care of certain preventive and curative measures. If they're able to qualify in those criteria, then SEBI will allow these so-called influencers or SEBI registered intermediaries to directly interact with the users on this platform. But if these platforms, whether it is Facebook or Twitter or anyone, if they don't categorize themselves as an SPD, as a specified digital platform, then anyone who goes and gives advice there will have to be taken down. So I feel that SEBI is already doing a lot, but what more can be done is directly taking heads on these so-called influencers who have come up suddenly in the last 5 years. Maybe because after COVID, people have got easy access from social media. So this is the area where SEBI needs to plug a lot.
Madhavan, just quickly, some very important points here that I wanted to follow up on. Firstly, what are the repercussions for people who engage in such activities, and what happens to the illegal gains made through the investors by fooling them on the pretext of high returns? These two things.
See, as per the SEBI Act and as per various regulations, there is definitely an imprisonment. There is definitely a cancellation and debarment of licenses of these so-called intermediaries. So first of all, let's spend just half a minute on understanding what exactly the regulations have. What is the SEBI regulation which came in August 2024? So right now, the regulations which have come right now are not so much directly on the influencers. What SEBI has said is that any intermediary which is registered with SEBI, whether it is an investment advisor, whether it is a stockbroker, whether it is a merchant banker, they are not supposed to associate themselves directly or indirectly with any person who is not registered with SEBI with the purpose of giving any information, any investment advice. So these regulations are applicable on SEBI related intermediaries. Now, tomorrow, if there is a violation, SEBI can cancel their licenses. Imprisonment is there. SEBI can also impose a very heavy fine. And to some extent, investors who have been duped and lost their money, SEBI also has certain powers to return their money.
One thing, Madhavan, just while you really explain to us what the repercussions are, can you just make it a little easier for the viewers to understand how can they get their money back? Is there any provision for them to, sort of work out an arrangement to get their own, assets back in any way?
Okay, so anyone who has been duped, they should immediately log on to SEBI website. they have a very clear, very simplistic form of investor portal. They should immediately log in there, file their grievances. SEBI has a very strong redressal grievance mechanism. File your complaint there. And yes, it may take a little amount of time because SEBI will have to really crack down on who exactly was the person who duped. But the first step should be, like in any case of a criminal case, wherever it happens, please immediately report it to SEBI. Thereafter, you may follow it with your local police station, police jurisdiction. You may go for a cyber fraud and all of that, which is okay. But immediately first, because the ultimate authority and the most important authority in this kind of a fraud is SEBI. So immediately register a complaint with SEBI, and it may take a certain amount of time, but your money will come back to you.
All right, and so all is not lost. Your money might come back to you, and that's very important commentary coming in terms of the crackdown, detailed perspective, in fact, from Pooja Patel as well as Madhavan Srivatsan. Thank you so much for taking time out and joining us this afternoon to help us understand this crackdown and what it really means. But moving on then, and it's time for an NDTV Profit exclusive, another one at that. A major overhaul of the goods and services tax regime is on the cards. In fact, sources tell your channel that the GST Council is actively considering reducing the number of tax slabs to 3 by doing away with the 12% slab entirely. Shrimi joins in with more details.
Yeah, hi. So, yes, the proposal to eliminate 12% tax slab is actively under consideration, and in fact, this is a part of major overhaul of the GST restructuring exercise, which is currently underway, and we are probably moving towards 3-tier structure from the current 4-tier structure of GST, which is 5%, 12%, 18% and 28%. So at present, items like butter, ghee, fruit juice, almonds, footwear, solar heaters, processed food and even budget hotels attract 12% of GST, and the discussion around is going on between center and states, and officials from the GOM, the state panel, is about how to, move the essential items, the non-sensitive items into the lower bracket of GST, which is 5%, and how to sort of move those items which is not very sensitive in nature to the upper bracket, which is 18%. The another discussion on around also that whether to retain the existing rates of GST without tinkering with much of the rates. So for example, 5%, 18% and 28% will remain intact. There would not be any change in that. However, it is important to note that these all are in discussion phase, and the proposal will be taken up in the upcoming GST Council meeting, which could be convened very shortly, is what we are indicating. We are getting indication from sources, and the discretion at the GST Council level to decide and take a call on the rate rationalization exercise. And one more important point which is under consideration on the future of compensation cess, where we are getting sense that the GST Council may introduce green and health cess on sin goods and luxury goods item, which would definitely move up the rates of products like tobacco products, cigarettes, carbonated drinks, and in fact high-end automobiles. So again, these all are in the discussion phase, and we will see definitely some action coming in the upcoming GST Council meeting, which is expected end of this month, is what sources indicating us.
All right, thanks Srini for joining us and helping us understand what the regulations could also have in store for us. But moving on then, let's take a look at V2 retail, because that's the one that is going to be beating the revenue guidance number of 45 to 50%. That in fact is the word coming in from the management. Let's go across and listen in to what else they had to say.
There are 3 levers that we're working on. So one lever is the one that we just mentioned, is moving from 1,000 rupees per square feet sale to a 1,200. So that helps with the EBITDA margin. The second lever is, you're spreading out the head office and the warehousing cost to an even larger store footprint. So that also helps increase the EBITDA margin. And the third lever is a better product mix and selling more at full price. So that increases the gross margin by 100 basis points. So that is another lever to increase EBITDA. Even with the shift of the Eid, we showed a 51% revenue growth. So I think we will beat those revenue guidance numbers that we spoke about.
Right, and that's a take coming in as far as B2 Retail's management then is concerned. But let's also take a look at water infrastructure companies. They are witnessing a slide in the past 6 months. We have Anushri standing by with the key takeaways.
So it's an important update that we are seeing in terms of where the water infra companies are doing, and these companies have seen major cuts in these last 6 months period itself. So what are some of the factors which are affecting this? Let's break that down. Firstly, is this the key reason on the Jal Jeevan mission cuts that have happened this year? Let's understand the overall stock performance if we are seeing for some of these key water infra players which are there. EMS, Enviro Infra, Concord Enviro, Ion Exchange, Tenta Water and Just Engineering are some of these stocks in focus which have seen significant cuts over these last 6 month period itself, which ranges from the likes of 8 to 35%. In fact, in the last 1 month also we've seen about 7 to 10% of a cuts over here. But what is leading to this kind of and downtick in terms of where the water infrastructure is? Key concerns here remain in terms of increase in receivables, which poses concerns on the cash flow picture going forward for the business, which we'll address in a deeper sense in the later. Along with that, we are seeing delayed payments from Jal Jeevan mission, which has impacted the working capital. So working capital has in fact led to this kind of cash flow picture deterioration as well that we've seen from these last fiscals. Also, what is hurting the overall space is the muted order inflows. This is in comparison with the market pricing which has happened. So there's excessive bidding which is leading to compression in terms of margins as well. Even if you look at the budget for the Jal Jeevan mission, that has been cut significantly in budget 2025. So let's look at how this cut had impacted the performance so far. So if you are looking at the budget estimate, so that stood at 70,000 crore for 25, which came to 22,694 crore. So it's a 67% of a drop that we'd seen. 67,000 crore is the estimate. So while it is an uptick from the revised estimate number, it's still down from the 25 budget estimate number which was given. Moving on, if you are looking at some of the other key plays that we have to focus on is the receivables. Now there has been an increase in receivables if we see for across the key stocks that are there. EMS Limited, Enviro Infra, Concord Enviro, they've all seen an uptick in terms of increase in receivables, which has impacted the cash flow picture as well, which in case also was will affect the revenue picture forward as well. In terms of how the receivables have posed a challenge, there are other concerns as well. If you look at the order book positioning of the company, that has also seen an uptick. Most of the order books, if we have seen, has remained in the range of 1 to 2 times over here. So 22,000 crore is the kind of range that we are looking at, 2,236 crore for this, which has resulted in a downtick, which shows revenue visibility going forward for some of these companies may pose a challenge. In fact, let's look at the key operational metrics to get a better sense and compare it to the 3-year picture to see how that has performed. So if you are taking FY25 revenue growth in context with the past 3 years, we are looking at a downtick in terms of where EMS and Enviro is concerned. From a 68% of a CAGR in terms of revenue, that has shifted to 46% for Enviro. For Concord also, we are seeing a similar kind of a range, but it's Denta wherein we are seeing some deeper cuts over here. Denta had recorded a 15% of a drop in terms of where the revenue was concerned, while if you look at the 3-year and PAT CAGR and the revenue CAGR, that remained on the healthier side of 19 to 11% is what we are seeing. But what's the outlook going forward is something that we should be watching out for along with the valuations, because if you take valuations in context with the 2-year picture, they have majorly remained in line. So this is the kind of picture mostly in the range of 19 to 20 times is what we are seeing if we take the current P with the past 2 years of data, if we are accumulating that. So let's focus on the outlook forward. So payment cycles will remain on the higher side at 90 to 100 days. So working capital is a challenge that we will continue to see for some of these water infra companies. In fact, companies like Enviro Infra are now trimming the exposure to Jal Jeevan mission projects to improve their cash flows. We just seen the budget cuts and the delayed payments on account of these projects, so they are trimming their exposure over here. Bidding activity has also seen a pickup from Jan 25 levels. This is in comparison with the muted ordering seen in FY25. So this is the overall kind of pictures that we are building, and in fact, companies are now diversifying their presence from pure water play infra-related projects to other sectors like renewables, powers and road as well. This includes companies like EMS in focus, which is doing so. So this is the overall picture that we are seeing for some of these water infra companies and why they are seeing these significant downtick in terms of where the revenue and in terms of where the stock price is concerned.
All right, and that's the growth roadmap when it comes to some of those water infrastructure companies. But tell you what, with this, we're completely out of time on this edition of Markets at 12. But before we wrap this edition, Navy veteran Gauri Mishra pedals to glory as she wins big at the World Masters track cycling meet. The former Navy officer, in fact, won 2 golds and a silver at the World Masters track cycling in Taiwan. We do have my colleague Gopika who spoke to her about this victory. Let's go across and listen in.
Gauri Mishra, a former naval officer, has won 2 gold medals and 1 silver medal in track cycling in the World Masters Games 2025 in Taiwan. How special are these 2 gold medals and 1 silver medal for you?
I picked up track cycling at the age of 40 when most of the people, they plan to leave track cycling. I picked up track cycling, and competing on a world stage is very, very difficult, you know, because we are competing with all the masters athletes who were once Olympians and medal holders at international platform. So competing with them, learning with them, and being with them is itself a great feeling. And let me tell you, I feel so special that I could win 2 gold and 1 silver medal in track cycling.
How did your naval career shape this passion?
You know, Indian Navy defense is all about discipline, and being served in Indian Navy for around 2 decades gave me that kind of perseverance and discipline. I'm very thankful to services that they gave me that kind of discipline. This sports also demand discipline, hard work and practice, lot of practice. Out of then, if you have all these, then comes the mental strength also.
Ma'am, your son Ryan is also a cycling champion. So is there a mom-son race?
Ryan was 6 years old when he made his first world record. And we have a mission. We pedal for planet. We want to reduce carbon footprint and encourage children, women to take up fitness. So then Ryan picked up track cycling. I also picked up track cycling because I wanted him to learn.
That's huge. That is a biggie. It's on the
गोल्ड ग्लास क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Hello and welcome to NDTV Profit. A very good afternoon to all the viewers here watching Profit Buzzers. I'm Hiral Dadia and with me is Puneet Javeri. Puneet, good afternoon. Interesting day of trade. A lot of things that are happening across markets as well. And the clear exclusive that we have as well in terms of India-US trade deal, the mini deal probably could be struck between the 3rd and the 4th and the 5th. So the weekend is something which is going to be absolutely interesting, and that's what probably the markets will be waiting out as well. From the day's highest levels, you have Nifty 50, which has given up gains. We've hit a high of around 25,576 and a 60-point downtick from there, but you're still trading in the positive with gains of around 0.2% coming in there. Let's pull up Bank Nifty on the screens, and then we'll have the sectoral heat map to see which are the sectors which are giving that support and which are the ones which are pulling you lower. There you go. Bank Nifty nearly inching towards the day's lowest levels, pretty much on the borderline as we speak. In terms of individual sectors, Nifty Auto is an interesting one to watch out for. 1% higher is where Nifty Auto is trading at, and this is post the auto sales numbers that have trickled in for the month of June. In fact, Puneet did put out an interesting story with Tata Motors, which has hit a 42-month low in terms of the June number, so we'll dwell deeper into it. Consumer durables is up in trade. Media, healthcare, oil and gas, FMCG are the other sectors which are trading in the positive. The PSU Bank Index, I think it's the second or the third consecutive session where the pressure is continued. Realty is trading under pressure as well. Metals is down and about in trade. In fact, metals 6 or 7 month high, and now you've started to see some bit of profit booking that has come in there as well. Let's quickly look at the broader markets, Puneet, because the action has been in terms of where broader markets go. There you go, clearly outperforming.
Well, definitely, and it's been a very strong, positive momentum from both the mid-cap 150 as well as the small cap. We've actually seen a lot of outperformance from the small cap index as well compared to the mid-cap today as well, both trading in a very similar range of 0.4%. Let's quickly pull up the BSE 500 as well. There you go. The mid-cap 150, small cap 250 mirroring their movements today. Even though when there's been some pressure on the mid-cap 150, we've seen the small cap try to take the baton and go forward with the positive momentum as well. Let's quickly look at the BSE 500 as well as some key stocks as well which are reacting positively. We have DCM, Shriram, Motilal Oswal also reacting very positively in trade today. Bosch is up almost 5% in trade. It's a strong move. Something like Blue Star is also up 4.4%. Largely, brokerages is writing on Blue Star that a lot of the negatives are already in the price. So that's one key aspect. On the negative side, we've seen some pressure on FS and e-commerce, which is essentially Nika. We've seen a block deal there. VST Industries is down in trade and could be because of one of the key stories that we've been putting out on GST rationalization and possible increase on the cigarette makers. So that stock is down in trade today. We've also seen some pressure on something like a Star Health, interestingly, as well as the other ones are PNB, and PNB also possibly reacting on their quarterly updates for Q1. Let's pull up Star Health and look at the 1 month chart, because post a recovery from roughly about the lows of 350, the stocks actually down almost 10% right now in this particular time frame. Let's look at the 1 month type. There you go, almost 11.6%. Let's also quickly pull up HDB Financial as well, because we saw the IPO yesterday up 13%. Today as well, let's just pull that up very quickly. Yeah, there you go, 3.8%, again a positive move as well. But let me get my colleague Anushi as well now. We have a corporate conversation with Marathon NextGen lined up. Before we go to the management, Anushi, what are some of the key aspects of this conversation as well as for the company?
Well, the stock has been in focus, and this is on the back of the QIP news that we are looking at, wherein the company has raised about 900 crore. It was an interesting QIP. We have some important names coming in this picture that we are looking at. So in terms of where the QIP is, it was a company had issued about 1.6 crore of an equity shares, representing about 30% of their equity. Fund usage for this includes investments in their subsidiaries, debt repayment, along with acquisition of land as well as development rights that we are looking. So this is the overall picture that we are seeing. But the other highlights of this also includes the merger in place, wherein the company aims to bring more land bank into the picture. So that is something that is interesting to watch out for.
And I think right now, real estate. In fact, there was a HSBC report as well, which was clearly indicating that the pre-sales in terms of the first quarter are looking spectacular. So I think that's going to be an aspect we need to consider as well. But let's get in Mayur Shah, Vice Chairman at Marathon, next gen to discuss more. Mayur, good afternoon and welcome to the show, and always a pleasure to speak to you at NDTV Profit. My first question coming to you is with regards to the QIP. You've managed to raise 900 odd crores. If you could help us understand the usage of funds firstly.
Yeah, good afternoon. We've been able to raise 900 crore. The 340 crore is going towards the debt reduction, and the balance is the growth capital. So close to 600 crore is what we are looking at launching our new projects as well as acquisition of new land parcels. Particularly, we are looking at the society development, JDA, JV model, and cluster redevelopment, in the central South Mumbai specifically. So, so basically the use of the funds are mainly for the growth capital and retiring debt.
This is Anushi joining in as well. Just want to get a sense on in terms of where the debt picture is concerned. Now, from the last couple of quarters, we have been seeing a consistent reduction in terms of where the debt is concerned. If we see the last figure, that was around 542 crore. With this debt repayment of around 340 crores or so, it brings it down to 200 crore or so. Just want to get your overall take in terms of where the final debt level should be by the end of FY26.
Yeah, so we had a robust FY25 where we had a record 190 crore PAT and liquid cash flow available, out of which we actually retired 200 crores of debt. So from 750 we really almost came to 540 crore. And going forward also, we really want to retire debt significantly going forward in the next year. We may retain close to 200 or 250 crores of asset base like LRD kind of a debt at the end of the year.
So 200 to 250 crore is the kind of figure that we should be watching out for. Other than that, are there any more fundraisers on table? We've seen this one was a considerable one. We've seen dilution also in terms of where you were holding about 73% or stake in the company, that is promoter stake which is there. So just want to get a sense on the fundraising part as well.
Yeah, see, thing is, we have done a very major corporate action 3 months ago, whereby the group entities having a lot of land bank has been merged into the Marathon with the almost 418 acres, which has a sales potential of almost 4.5 crore square feet in MMR region. So with this, Marathon really poised for a new evolution in the next 3 to 5 years with a strong capital base, good cash flow, and MMR-based land bank, and the strong execution capability of Marathon and a strong brand equity amongst the markets, micro markets, particularly Panvel, Bhandup, Baikala, where we are in top 5 supply as well as sales. So, with this, in next 3 to 5 years, Marathon is really poised for a big growth.
Can you give us more context in terms of the scheme of arrangement that you've seen now? There are some ongoing projects. Along with that, you just mentioned some of the land from Dombivli and Bhandup being added in your portfolio again. Give us a sense in terms of where the potential is in terms of gross development value for these, and what is the kind of potential that you're seeing from these acres of land addition in your portfolio?
Yeah, so typically, as I mentioned to you, that that land translates into the potential of almost 4.5 crore square feet. Going forward in next 10 to 12 years, we really want to exhaust this development with our own capability as well as JDA JV model to exhaust all the potential which available with us. As far as possible, we really also looking at land additional projects acquisition, mainly focusing into asset light model like JDA JVA in the society redevelopment and cluster redevelopment. Couple of cluster redevelopment projects have also been tied up. At appropriate time, we will really announce those projects also.
So considering all these projects that you have in picture, can you also give us a sense in terms of execution of these projects? When are some of these key projects expected to be launched in this financial year, and what is the kind of launch potential that you see from this?
So during this year, we are definitely looking at launching one big commercial project in the Baikala, close to around 1.2 million square feet of a commercial office space. Lately, we just completed our Marathon Future X at Lower Parel, and the traction in commercial market is really gained substantially high. The vacancy level across the micro market of Lower Parel and BKC are at the lowest level of around 15% or 20%. So we are seeing a very big upside in the commercial office market going forward. So one of the launch will be in the commercial. Similarly, we'll be launching around 1 million square feet of a residential space in the Marathon Next Zone Phase 3, Panvel. Panvel is also seeing a lot of traction post Atal Setu coming up. The airport is also planned to be starting very shortly. The potential of Panvel market, we are seeing very high. As a matter of fact, Government of Maharashtra also looking at Panvel to Raigad as a Mumbai 3.0 with a lot of infrastructure thus coming in that location. And we have a very large land bank, close to 200 acres of land bank. And so we will slowly monetize all those land bank in coming years.
Mayur, I have a couple of questions to take with regards to overall growth that you're expecting in terms of FY26 with all the plans that you have. And once the merged entity comes at play, then what is that combined debt expected to look like, along with the repayments that will happen through the QIP money as well as your internal accruals?
Yeah, so I will address the debt part first. The net debt in a combined entity will be close to 1100 crore. 550 crore is coming from the merged entities. However, merged entities have a lot of ready assets which can be liquidated very quickly in 1.5 years. So overall, we are looking at in a couple of years, the debt level will be around 0.3 to 0.4 ratio will be achieved, close to 250 to 500 crore. In that range only will be remaining, even with the merged entity coming in. And with the merged entity coming in, as I told you, that all these outskirts land, which are now accessible to through the big infrastructure push, will come into the development in next 2 to 3 years. That's what the vision is for the Marathon.
Okay, and in terms of your FY26 revenue picture, because my read is next 9 to 12 months is when the merged scheme of amalgamation will happen. Around little over 400 odd acres will come into Marathon Next Gen as well. So taking all of this into consideration, what's the accretion that you will see on the revenue front, margins front, and on profitability?
So basically, the merged entity, the land banks are going to come in 9 to 12 months. So, those numbers will start reflecting in the subsequent years. However, the group already, the Marathon itself right now are doing a 65 lakh square feet construction, as well as there is a acquired land of MNRL, listed entity, has another potential of 50 lakh square feet. And through that, we are looking at least 20% upside on the top line. And our Marathon's margins have been, EBITDA margin have been consistently between 35 to 40% over the last 2 to 3 years.
Okay, so Mr. Shah, considering these merged entities which will be there in the picture, just want to get a sense in FY26 or 27 also, if you can take both the years in consideration, what is the kind of pre-sales and collections growth that you expect, considering in FY25 we'd see that downtick, about 20% of a downtick in terms of where these two metrics were concerned?
Yeah, see, thing is actually the reflection of a downtick is actually not real, because we are having certain JVs where the turnovers are not reflected in the Marathon Next Gen, particularly Bhaikala project, where the Marathon share is 40%. So if you consider the proportionately, we have grown even there also. So pre-sale numbers were 873 crore, considering the JV numbers for the FY25. And from that number, we are looking at a growth of at least 20 to 25% under a 26 number.
Okay. Mayur, a quick two-part question. Post the merger, we spoke about little over 400 acres of land that will get merged, right? So what is the value of that land bank that will come in, and what does that take you in terms of the overall value of your land bank? And secondly, how does the promoter shareholding then move, because you have seen some amount of dilution which is in higher double digits right now already in your early, little less than 20%.
Yeah. So right now we, with the 900 crore QIP, we have actually reduced our 17% stake. The promoter stake is come down by 17%. However, when we merge the group entities in 9 to 12 months, we are coming back, the promoters will come back to 74.5%. The value of the land bank of which is going to getting merged is approximately 3,200 crore.
Very quickly, the value of the land bank that you will have with the 400 acres?
Yeah, that's what the net asset value which is getting transferred are in the vicinity of 3,200 crore. The valuation itself is a very exhaustive exercise with multiple entities which are getting merged, and that's very difficult to explain. But net asset value is 3,200 crore. And with that, the promoter entity will come back to 74.5%. So, to sum up, with a great asset which is there in the MMR region, a very strong capital base which we already have, and strong execution capability, the Marathon is really going to evolve in a next level in next 3 to 5 years.
We're waiting out for in terms of what the Q1 numbers look like as well. Thank you, Mayur, so much for joining us on the show and sharing the views. In fact, that Anushi is still with us. Anushi, the aspect that we spoke about earlier with regards to HSBC expecting a blockbuster, what are the key expectations that you have, and how does that tie up with the way you've been looking at the sector?
So in FY25, the big takeaway was that there were lack of approvals and which led to delays in some of these project launches that we'd seen, which led to some of the companies missing their FY25 guidance, while some of them did make it up in the fourth quarter. But the Q1 expectation is that the FY26 growth number is to be higher than what the expectation is considered, and this would be aided by these large launches which were deferred in the fourth quarter that we are looking at. In fact, the expectation is for a 50% of sales, pre-sales growth across coverage universe, which includes the likes of Godrej Properties, Sobha, DLF, and something like Oberoi Realty as well. Just speaking on some of these big launches that have happened in the first quarter, this includes the likes of DLF Privana South, North in Gurugram, which was at the scale of 11,000 crore, almost half of the sales figure that it had guided for made up in this by this one project itself. Oberoi Elysian was another project that we've seen with a number of 970 crore. This is the booking value that we are looking at. The much awaited Prestige Indirapuram launch was also in focus, making up for 3,000 crore of bookings as well. Now, this one was the project which had been deferred since the last 2 quarters, which was ongoing. So, Prestige Estates has a tall figure in terms of where the bookings are concerned, and even Godrej Properties, there are about 2,000 crore plus bookings that we are looking at. But even if we take the overall residential market outlook in consideration, so while there are expectations that the overall residential demand is beginning to decline, and this is on account of steep price increases that we've seen in key markets like the NCR, Gurugram markets, the overall picture for the luxury and the premium side of house property continues to remain strong. In fact, if you look at the unsold inventory levels also, they continue to remain low at 15 to 18 months of levels. So there would be expectation of pickup in terms of where the launches and the pre-sales momentum is concerned for FY26. Now, considering HSBC's top stock picks, if we are looking at Godrej Properties right at the top, they're seeing a 49% of an upside here. Sobha also, they have a buy rating with a 27% of an upside. DLF, the target price is around 920, and while for Oberoi, they have a hold rating. So this is the overall picture that we are seeing with these 4 stocks in particular focus.
That's going to be interesting to watch out for. In fact, thanks Anushi for that. Let's get in Lancelot Dikuna as well to discuss more on this. Lancelot, good afternoon and welcome to the show. How are you looking at the real estate space, taking into consideration the expectation is that Q1 is expected to be strong? How would you play this game?
So I think most of the companies in the real estate space have been fairly valued. We've seen a good run up over the last couple of years. But if one looks at it from a, let's say, 3 to 5 year perspective going forward, I think the margins are going to be a little bit, the margins are going to normalize or maybe even reduce a bit. And there is going to be pressure from, from unsold inventory on the real estate companies to look at reducing prices a bit in order to liquidate some of this unsold inventory. So I think the next couple of years is going to be a bit challenging for the real estate companies because on the one hand, they have costs going up and on the other hand, they will find demand slowing, which will mean that they will have to reduce prices in order to push sales. So it is going to be a bit challenging going forward. So one has to be a little cautious of the valuations and what levels you are entering this sector or entering these companies.
Got that, Lancelot. But one of the first investors in Nika, the Banga family, is selling their stake at a discount. Let's get my colleague Mahima to give us more perspective on the company. Mahima.
The idea was that they were supposed to sell a stake of 2.1%, but finally the block deal took place and Mr. Banga has sold around 2.3% stake, so around 60 million shares were exchanged. The floor price was set at around 200 rupees, which is at a discount of 5.5% from its yesterday's closing price. The overall deal value is roughly 1200 odd crores. Just to give viewers a perspective, Mr. Banga held around 4.97% stake in the company as of 31st of March, so now his stake will come down to around that 2.5% mark. Prior to this, HS Banga, Indra Banga also offloaded their 1.4% stake in the company in August 2024, and viewers should keep this in mind because these were the earliest investors in Nika when Nika as a company started. So this is the overall view with respect to where block deal is concerned for Nika.
Got that, Mahima. Thanks so much for that. Lancelot, Nika actually since the listing hasn't done very well for its investors. Do you have any specific view on the company?
So I think the segment in which it operates in is a very exciting segment because there are a lot of players who are entering that segment and who have entered that segment. And that's where the growth is really, we are seeing good growth coming in from the beauty, fashion, as well as, from the fashion clothes segment. But what has happened is that because of the competitive pressures and the fact that Nika, started with its online presence and then slowly moved offline, and hence had to operate for a lot many years without really generating profits. It is, the valuations were a little bit rich for the last so many years because everyone was only looking at the top line growth and not really seeing how the bottom line will play out. But now with Nika coming into profitability and we can expect to see growth coming in, I think the next 3 years this company should do well and it should consolidate its position in the industry, and then investors should be able to see better returns going forward for the next 2 to 3 years.
Okay, so that's with regards to where Nika goes. But staying with the consumptions pack, you have Avenue Supermarts, which is actually trading under pressure on the back of the business update that has come in. But what's interesting is the stock has recovered from the day's lowest levels to trade at the highs, but still trading in the negative. In fact, brokerages also remain bearish on the counter. Mahima is here to tell us. Mahima, what's interesting is, the stock was under pressure. It has recovered right now. So that's an interesting move that you're seeing.
Right, absolutely. And I think, it's the reverse that is being seen in other retailers like V2 Retail. But with respect to where Avenue Supermart is concerned, sales growth was slightly on a moderate note. However, the store additions were largely in line with what the management had guided. But in terms of the overall revenue growth, they had said that they'll do around 18% mark, but they've done it at 16%. I think that's something that that has disappointed the street, and it stands around 15,900 odd crores. The total number of stores as of June 30th stand at around 424. Now, with respect to what brokerages are making of this, Macquarie has maintained underperform with a target price of 3,000. They're saying that Q1 sales growth has moderated slightly from Q4. There's healthy pace of store additions though. Q1 has seen stronger gross margin given the product mix. Plus, they're saying that they believe competitive concerns linked to quick commerce are not yet behind us, and this is one of the major overhang on Avenue Supermarts that's been the case since quite some time now. In terms of Goldman Sachs, they've maintained sell with a target price of 3,400. So the target price is slightly higher than that of Macquarie, but they're saying that sales growth is weaker than what they were expecting. Overall store additions were in line, and they expect margin to contract. So margins is that one area where both Goldman Sachs and Macquarie are contradicting, but this is everything with respect to Avenue Supermarts and the business update that it has come out with.
Okay, so that's Avenue Supermarts. In fact, we did speak to V2 Retail as well on the back of that strong guidance that they've come up with. Let's quickly listen into a chunk of that conversation.
There are three levers that we're working on. So one lever is the one that we just mentioned, is moving from 1,000 rupees per square feet sale to a 1,200. So that helps with the EBITDA margin. The second lever is, you're spreading out the head office and the warehousing cost to an even larger store footprint. So that also helps increase the EBITDA margin. And the third lever is a better product mix and selling more at full price. So that increases the gross margin by 100 basis points. So that is another lever to increase EBITDA. Even with the shift of the Eid, we showed a 51% revenue growth. So I think we will beat those revenue guidance numbers that we spoke about.
Right. Lancelot, a quick view in terms of how are you looking at this entire space in terms of retailers, and what would your view be?
So I think, I think Avenue Supermart is one of the best or most efficient in the retail business and has been doing well so far. Now, of course, with the challenges relating to the e-commerce delivery, quick delivery, and as well as people coming, more and more people buying their groceries online, I think, they are going to face challenges both in terms of volume growth or sales growth, as well as in the margins. However, given their low cost operation model and their model of trying to maximize and, sales based on their understanding of, the customers, I think they still have a longer term, they still have an edge, but over the next short term, the next 2-3 years, it's going to be pretty difficult for this company. In terms of valuation, it's already trading at close to 100 times earnings. So it's a very rich valuation for at the current price to pay for buying into this company. But maybe if it declines 10-20%, then it does give an opportunity to buy into the company at that point in time.
Lancelot, but we'll just take a very quick commercial break and be back on the other side. Lancelot, stay with us for more views on these stocks. Come back to Profit Buzzers.
That's huge. That is a biggie. It's out of it.
Gold Plus Clear Glass. Far ho ya near, sab kuch dikhe clear.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold ICICI for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Imports
Markets see seesaw in trade today with minor gains. Nifty hovers around 25,500 while the Sensex is about 83,600 levels. We've seen sectoral action that's largely mixed while the Nifty Auto is currently leading the gains. Avenue Supermarts facing pressure in trade after Q1 business update. Brokerages flag growth as well as margin concerns in Q1. Nika slips over 4% after the Banga family announces almost a 1,200 crore stake sale. SEBI intensifies crackdown on stock manipulation, probes tips being offered by unregistered fin influencers via WhatsApp as well as Telegram channels. That's an NDTV Profit exclusive. Another NDTV Profit exclusive, sources tell us that GST Council is actively considering reducing the number of tax slabs to 3 by doing away with the 12% slab entirely. An interim trade deal between India and the United States is likely to be finalized by July 4th and 5th. Negotiations continue in Washington as the Indian team extend their stay. Indo-Gulf Crop Sciences shares list flat at the IPO price on NSE. The 200 crore IPO was issued subscribed almost 26 times in the primary market. The IPO was opened between June 26th as the 30th. Welcome back to Profit Buzzers. Let's first pull up the Nifty Auto and see how the index is doing, because we've actually spoken about the auto preview, the review as well, and what's happening within that. Let's look at the constituents as well very quickly, because we're putting the spotlight right now on something like a Tata Motors as well. So we've seen Bosch being one of the big gainers. Tata Motors also just slightly, almost 1% in the green as well. But the key focus area is looking at some of the key developments post the auto sales, and Tata Motors was one of the biggest laggards in this particular month, down 15% sales for their passenger car business compared to the same time last year in June. Now, why is this important? Because this sales number of about 37,000 units is the lowest in the last 42 months for the company. We've done an analysis, seen all the sales of the last 42 months, and we've presented the last time this number was below the June 2025 number. So in December 2021, just post the upliftment of the pandemic and people started to get out as well, almost 35,000 units were sold in December of 2021. That level is very close to what the June 2025 level is as well. So since then, almost 42 months has been passed, and that level is now again in threat. When you look at the quarterly performance as well, it's a similar disappointing trend. They've sold almost 41,600 units in Q1 of FY26, and that's much below the average of roughly about 46,000 units that it saw in Q1 of last year, as well as Q1 of FY24. And that's one of the key concerns here, because while they've launched new models such as the Altros as well as something like a Tiago, the key aspect is that the hatchback segment reported negative sales in the last year, and that seems to be not be picking up just as yet. So the key, and in terms of FY26 outlook, we've seen Siam come out with just a very minuscule growth of low single digits in this year. While we spoke to the management, post their AGM and the press meet, they highlighted that they are looking to significantly outperform the industry with new launches. We've seen the Harrier EV launch already. They are also looking to launch the Sierra in this year, sometime around Diwali. So that could put some boost on the sales, but definitely, it's definitely a concerning number to say the least. Let's also pull up something like a Bharat Forge. We saw that the stock opened, in the green in the morning, almost 1.5%. Let's see if Bharat Forge has been able to maintain that. No, it's actually slipped in the red, and there's enough news flow actually about this. It's fallen from the highs because we've seen the preliminary numbers for the Class 8 truck sales come in for North America. Now, the key reason for this and why we track this so aggressively is also because of the outlook of Class 8 trucks. Now, these are essentially heavy-duty trucks which are used in North America, and all the forging companies make components for these Class 8 trucks. So currently, in the month of June, it's a 36% fall that's happened in the Class 8 trucks. Just about 8,900 units was sold in June. That's also a 25% drop from an already low number of May 2025. Now, so this data is reported by FTR. Now, they've highlighted that the market uncertainty has been led as many fleet operators have scaled back some of the key orders, as well as the tariff uncertainty amongst others. When you look at the 10-year average for June as well, it's about 19,000 units. So this 8,900 units is definitely a concerning number and something to watch out for as well. Let me bring in Osho Krishnan as well right now. Osho, a very good afternoon and thanks so much for joining in today. Any specific view that you have on charts for both Tata Motors as well as something like a Bharat Forge?
Very good afternoon to both of you, and firstly, thank you for inviting me on the show. Well, yes, looking at the technical perspective of Tata Motors, then obviously this counter have not seen much of traction in the recent period, but overall, if we have to see on a broader term time frame, then the counter have been consolidating near to the zone of 680 to 720 kind of a zone. So I expect the momentum to continue, or momentum to trigger on the positive front only once it surpasses the zone of 725 to 730 on the higher end. Then only we can see some positive traction coming back in the counter. Until that time, the stock is likely to stay in the consolidation zone, which dips to be augured well for the buyers, while on the higher end 720-25 could be seen as the resistance zone for the counter. While comparatively, Bharat Forge is looking quite positive on the chart, because this counter has seen a decent traction in the recent period, has evolved above the 200-day simple moving average, and has been consolidating above the same from over 3 weeks. So I'm expecting that in the coming period, there is a high possibility for the counter to give a fresh breakout around the same levels. 1300, 1320 is the breakout zone for the counter. So I expect that any sustained buying above 1320 can provide a continued momentum to the counter, and on the higher end, nearly 1440 to 1450 could be seen as the short-term target for Bharat Forge.
So, Lancelot, we are going to be seeing the demerger of Tata Motors this year as well. While we've actually seen that the CV segment of the company could be one of the biggest beneficiaries coming out of the demerger because of very strong return ratios, as well as EBITDA margins almost double of that of the passenger vehicle vertical. What's your view on Tata Motors on the passenger car side, as well as within demerger? Do you expect that the CV business could see a re-rating post its listing again?
So I think, as far as Tata Motors is concerned, on the passenger side in India, they will have to come out with new models, because if you look at all the data that has been coming out over the last couple of months, there's a clear shift in terms of the luxury car segment. And where you're seeing is in the small car segment, where there is a slowdown in terms of sales or in terms of numbers. And this is across the different companies which are in the business. So this trend is definitely going to accelerate, and Tata Motors will now need to focus on the luxury side and the high-end side in terms of offering a value proposition to the customers, and that would be probably only when that happens you will be able to see a growth coming in terms of earnings. As far as the CV side is concerned, yes, there will be a value unlocking when they demerge the CV from the passenger side. And the other thing that we also have to understand is that Tata Motors, majority of its income on a consolidated basis comes from its JLR business. And JLR business is subject to so many issues which are global in nature, and that could have a bit of a negative impact. One could be tariffs as far as the US is concerned, then the slowdown in China, as well as their production and sales growth in China hasn't been that good. So I think all these factors are weighing on the stock, and even today, while it trades at a low multiple, I mean that multiple seems to be attractive. Unless some of these issues are addressed and we have visibility in terms of growth going forward, both in the global business as well as in the local business, it becomes a bit difficult call to try and see whether one should add it in the portfolio at this point in time.
Got that, Lancelot, but let's look at another Tata Group company, because at its annual general meeting, Tata Steel laid out a strategic roadmap focused on cost reduction in Europe and an aggressive expansion in India as well. Let's get in my colleague Vansh to tell us more about this.
Right, so let's understand the entire details from the AGM. Firstly, for the Netherlands operations, the company are targeting significant cost reductions of 500 million euros for FY26, and the company is in plans for making further investments in the mining assets to boost capacity. They're looking forward to enter into the iron ore segment. Secondly, let's look at the cost and volume guidance from the company. The company anticipates UK operations to achieve positive EBITDA in 2026, while they also expect 2 million ton volume increase in FY27. This important thing to note is that it is an increase from the previous guidance of 1.5 million tons. Let's also look at the outlook and the margins for the company. Company has guided that despite a decline in the coking coal prices, high steel supplies had continued to keep their margins under pressure, and the company expects the coal prices to remain range bound, and simultaneously the company expects the spreads for the company to remain constant. Also, let's look at the expansion plans for the company. The blast furnace at Kalinganagar is fully operational, and the company is planning to add additional expansion of 5 million tons for this. And secondly, the company is focused on the maintenance of existing steel plants in India. And when it comes to EAF, that is electric arc furnace, company is the electric arc furnace in UK is scheduled for completion by FY28, and the electric arc furnace in Ludhiana is scheduled for completion by end of 2025. So this is how the overall picture is shaping up for Tata Steel.
Got that once, thanks so much for that. But why is Tata Steel among the favorite stock of Aditya Welekar of Axis Securities? Let's listen to what he had to say.
In steel names, definitely Tata Steel still have some value even from these levels. SAIL, we see that the valuation is now almost full. We see value in Jindal Steel and Power. JSW Steel, the valuation also appears slightly full. So in the pecking order, Tata Steel followed by Jindal Steel and Power. In non-ferrous, aluminium prices and copper prices as well as zinc prices, they have withstood very well within this volatile tariff escalation phase, and aluminium prices on the contrary have increased, so also as copper prices. This is because of the fall in the inventories at London Metal Exchange.
Osho, on Tata Steel, we've seen some secular move on the stock price since its lows a couple of months ago. Is there any kind of leg up that you're seeing from these levels as well?
See, from current levels, from a fresh point of view, the risk reward is not very much favorable, but overall, on a broader time frame, the counter has given a very strong breakout, and I expect that in the coming period, 175 to 178 is the target that one can expect in the short-term period. So overall, the technical setup is very positive, but any dip towards the zone of 160 to 155 should be seen as a buying opportunity in the counter, while on the higher end, I am expecting again 175 to 78 as the immediate target in this count.
Got that, Osho. Lancelot, any specific view that you have on the metal space, and do you have any view on Tata Steel as well?
So I think Tata Steel, with the new growth plans that is announced, is looking to reduce the losses that it's making in its European operations, and and will look at turning around those operations. And then going forward, you still see a very strong demand for steel as far as India is concerned. So I think we will see an improvement, but the stock over the last 3 years really has remained in a very narrow range because we haven't seen much improvement coming in as far as the profits growth is concerned. But now going forward, with these new plans in place, I think there could be an opportunity to look at slowly adding Tata Steel to the portfolio, because as the commodity cycle improves and then we start to see, the international situation normalize with the imposition of tariffs, and every country then starts getting used to a certain level of tariffs. I think international businesses will stabilize at that point, and then we could see significant improvement going for Tata Steel as well going forwards from there. So I think over the next 3 to 6 months would be an opportunity to look at slowly accumulating this stock for long-term growth.
Got that, Lancelot. But let's quickly pull up AIA Engineering as well. It's a stock we don't discuss that often, but the company has actually received a major boost from one of its key export markets, Brazil. Let's get my colleague Anushi to give us more perspective on this one.
Okay, so it's a big update that we are seeing for AIA Engineering now. Countervailing duty in Brazil has been reduced from 6.5%, which was there earlier, to 2.9%. Now, this is a story that bats from 2018, if we are looking at. In September 23, this anti-dumping duty that we are looking at was removed, and the countervailing duty fell to 6.5%. This was earlier, we saw that in 2018 they had imposed this duty in Brazil that we are looking at 11.8%. So from 11.8% to 6.5%, and consequently this falling to 2.9% is the kind of levels that we are looking at. This implies improvement in terms of where the volumes could be going forward. If you look at the FY19 peak volumes which were there, that were around 25,000. In FY25 they had clocked in volumes of around 5,000 or so. So meaningful recovery in terms of where the volumes are concerned is something that we should be watching out for AIA Engineering. Along with that, there had been multiple headwinds in FY25 which had impacted the performance. So some bit of those headwinds now being in favor is something that we should be seeing for the company. However, what remains in focus is the company's progress in their pilot plants, which is in Ghana and China. So that would be something that we should be watching out for. But this is the overall update that we are seeing on AIA Engineering.
Well, thanks so much for that, Anushi. Lancelot, I'm not sure if you tracked this one. Any view that you have on AIA?
So I think it's the stock is trading at about 28 times earnings. It is in a good industry because it has been doing well because it provides parts for grinding in the mining and cement industry. So that business is growing. However, it's a very localized business. Like Brazil is a big market for them, and some of the places where there is huge mining areas, those are the growth areas. But if you look at it from a perspective that are there better opportunities in the space to buy rather than buying this company, there are better opportunities. And from a company perspective, while this news is positive, it will take at least 6 months, for the company's performance to start reflecting some improvement on this space. So I think it's it's fairly valued at this point in time. So we should just wait and look at how it plays out.
Correct. The flashes on the bottom of a screen coming thick and fast, but let's address one of them that was just flashing a little while ago. The NSE IPO could likely come around Diwali. That's a key question now. Now they've received SEBI's no objection certificate to come after the settlement order. My colleague Shrimi is now joining in on the phone line. Shrimi, what are you picking up?
Yeah, so sources indicating us that, NSE is inching closer to its, long pending IPO, which could materialize around Diwali, subject to regulatory clearances. In fact, the crucial step, still remains securing a no objection certificate from SEBI. And SEBI NOC, as you know, a mandatory requirement for market infrastructure institution, all MIs, to list publicly, and will only be considered after the conclusion of an ongoing settlement process involving the exchange. Now, The sources also indicated that NSE has proposed a 1,600 crore payout to settle its ongoing regulatory proceeding related to its past compliances lapses, including co-location, dark fiber, etc. But this is the largest settlement amount ever offered to SEBI. This is very interesting also. So what we are also learning that the proposal is currently under examination by high-powered advisory committee, which will submit its recommendation to SEBI whole-time member for a final decision. And once the whole-time member clears the proposal, SEBI is expected to issue a formal settlement order, and only after that the order will be finalized, and the market regulators will take up the NSE request for no objection, paving the way for the IPO. So according to sources familiar with the matter, the entire process could take up to 2 months, aligning the timeline with the festive season, and NOC being non-negotiable requirement under SEBI regulation, seeking to go for public. Until the settlement is completed and the order is issued, the process cannot move forward, is what source is telling us at this point.
Well, thanks so much for that, Shimi. Lancelot, the NSE actually has been focused after their change in expiry day as well. That impacted BSE stock for a while. But do you have any view on the IPO as well as something? How could that? Do you think any material impact on BSE, or do you expect that to kind of pivot both the companies into growth area from year onwards?
So I think, the IPO is good for NSE, it's good for the market because, you're obviously deepening, the availability of good quality companies stock in the market. And if you look at exchanges per se, exchanges are companies that will grow because they have, with the growth in the number of demat accounts and trading, there is a huge revenue that they generate in terms of transaction charges and various other facilities that they provide to members and investors. And based on it, because their cost structure is relatively flat with marginal increases in terms of fresh investments, they are actually good businesses. So I think it's a good thing that NSE will list as far as, and I do not think that by NSE listing is going to impact BSE, the valuations of BSE as such, because anyway, BSE was already competing with NSE when it was unlisted. So whatever valuations, premium it may get, maybe there'll be some impact for a while on the premium that NSE gets over its valuation of BSE. But over a period of time, that would get normalized.
Got that, Lancelot. So Lancelot doesn't feel any kind of impact on BSE valuation at least. But let's pull up something like a Tata Power, because the company is in focus now because it has been directed to pay close to $490 million in damages to Kleros Capital. Now, remember, this is coming under the Singapore International Arbitration Center rules. Let's get in Varsha to give us some more context on this. Varsha.
Yes, thank you for that. So yes, they've ordered Tata Power will pay Kleros Capital Partners damages worth $490 million, and which also includes simple interest of 5.3%. Now they're also reviewing the awards content contents and evaluating all options, including challenging the award. Now this was initiated, so Kleros initiated the proceedings on November 30, 2020, and oral hearing for the case concluded in Feb 2024. All this case relates to, or all this is because of dispute originated from proposed coal mining project in Russia, wherein Kleros claimed that Tata Power breached clauses in their non-disclosure agreement, and the breaches pertain to confidentiality and non-circumvention clauses within the NDA. So this is because of all this issue, because of coal mining project in Russia, Kleros has been demanding damages of $490 million, which Tata Power will pay.
Well, Varsha, also just highlight us very quickly this one key update on what China has been saying to its industry players regarding overcapacity and utilization as well, and how does that could essentially hamper or benefit India in the solar industry space.
point is the Chinese authorities have initiated efforts to reduce output in sectors like solar, and the core motivation behind this is to combat excessive competition, and prices are also falling below production costs for many products, onto the which companies will be benefited from this. So you have solar glass manufacturers will be benefited from this. For example, Borosil Renewables, wherein the first and they are the solar glass manufacturers in India with significant capacity, and also they are also focusing on exports, particularly to Europe. So this is one company which may benefit because of this Chinese decreased production.
Varsha, thanks so much for that. Osho, Tata Power, any specific view, because stock's down almost 1.6% today. Any specific view on the stock?
See, overall, looking at the recent developments in the past 3 to 4 months, the counter has been in a formation of higher highs, higher lows. So overall, the technical outlook is quite positive for the counter. After a very long period, the counter have surged above the 200-day simple moving average also. So such kind of blips are okay for this counter, because already the counter have seen a steep correction, and after that the counter have started gaining some kind of lost ground from the lower level. So I expect that on the lower end, till it sustains above the zone of 390, there is no sign of caution in the counter. While on the higher end, 410 to 415 is the resistance level. Once it breaches the zone of 415, then we can see further continuation of the same higher highs formation in the counter. While on the lower end, 390 to be seen as a very strong support for the counter.
And Lancelot, we're just running out of time, but a very quick answer on Borosil Renewable as well, because of the China capacity, being reduced, or they're looking at overcapacity. Any specific view that you have on that one?
So generally, whenever there is a reduction in capacity, it means that there is a lot of destocking will take place, and that could impact, prices for Borosil Renewable. So you could see some impact of that playing out in the performance of Borosil Renewable over the next couple of quarters.
Well, Lancelot as well as Osho, thanks so much for joining in, giving us the whole host of views on a bunch of stocks. We look forward to our next conversation. But with that, it's a wrap on this edition of Profit Buzzer. Stay tuned to NDTV Profit for more.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
imports become the exception rather than the norm. And increasingly we do almost, last year for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the
Hello and welcome. You're watching Top Trades on NDTV Profit with me, Soumit Sarkar, and my co-anchor Varsha. Well, Varsha, if you look at the markets, Nifty is not doing much of an action. It's just up around 30 odd points. It's dragged by the bank and the metal index, while led by FMCG, I believe.
Yes, actually. So, in a percentage form, if I were to talk about, it's up 0.2%. Let's see what the gainers. You have Hero Moto, you have Apollo Hospital, Maruti Suzuki, ONGC, which are gaining when it comes to Nifty 50. On the loser side though, you have SBI Life, you have Kotak Mahindra Bank, you have Bajaj Finserv, Bajaj Finance and JSW Steel, which are on the losing trend when it comes to Nifty 50. But let's see what's happening on the sectorial view. As Soumit was saying, barring Nifty Bank and Nifty Realty, everything is in green. Nifty Bank is down 0.08%. Nifty Realty is down 0.38%, while if you see Nifty FMCG is up almost 0.4%, Nifty Auto is up 0.95%. On the, let's see what broader markets are doing. Nifty Midcap 150, if I were to talk about, is up almost 0.28%. Honeywell, KPR Mill, Oil India, Motherson Wiring are some of the gainers when it comes to Nifty Midcap 150. So on the losers side though, you have Nika, you have Endurance, you have Bandhan Bank, you have Tata Communication and Lupin, which are losing when it comes to Nifty Midcap 150. Let's see what Small Cap 250 is doing, and then we'll head to our management for the day. Small Cap 250 is up 0.39%. On the gainer side though, you have DCM Shriram, you have Aster DM, Motilal Oswal and Jai Balaji, which are buzzing when it comes to Small Cap 250. But Soumit, the interesting conversation that we're going to have is India pesticides.
Well, yes, the stock has been quite buzzing. You have more information, right, I believe?
Yeah, so yes, the stock has been buzzing now because of some recent news and of course the outlook when it comes to overall company. Well, on the recent news company, there was an imposition of anti-dumping duty on imports from China, and there was the anti-dumping duty was one of the herbicides which is used in rice fields to control weeds. But to have more on that and what's the outlook ahead, we are here joined by Mr. D.K. Jain, who is the CEO of India Pesticides. Welcome, Mr. Jain, to the show, and pleasure to have you. Soumit and I was just speaking about, the anti-dumping duty on one of the rice herbicides that was announced recently. Just wanted to have a view on what is the opportunity size for that herbicide and what is the current contribution from that product and where you want to take this.
Yeah, thank you very much for giving us this opportunity, and we welcome the step taken by the government of India to support the Indian manufacturers of this product. This product, Pedilachlor, is one of the major herbicides used for rice cultivation, and this herbicide as well as its major intermediate by name Peda was primarily being imported into India from China at a throwaway price. So Indian manufacturers were having a very high disadvantage in this. We have started making this product, and the government has just put this anti-dumping duty, which has now given us a level playing field for this product. And the overall consumption we feel should be around 12 to 13,000 tons of petroleum required in India. Our capacities are now quite high. We have presently 6,000 tons of pera production, which is going to increase by another 2,000 tons, about 2,000 tons. So it will go to around 8,000 to 8,500 tons per annum of the capacity, which will be almost equivalent to about 10,000 tons of petroleum. So part of this intermediate we will be using for our own in-house petroleum production, and part we will be making available to our other manufacturers in India. And this is going to be a major contributor to our turnover. We feel that if we are able to do about 6 to 7,000 tons of this product, it will contribute to a level of 300 to 350 crores in our overall revenue for this year.
All right, got that view. Also, sir, so now because of the early monsoon this year, now we are already in July. Just wanted to know how is the demand that you are seeing when it comes to domestic as well as export size, number one, and number two, how is the pricing on the raw material, because we know that agrochemical industry is overall chemical industries is going through the pricing pressure. So just wanted to have view on these two questions.
Madam, actually, this season now, the monsoon has been expected to be quite normal or slightly above normal, and with good monsoon, we expect an increase in the consumption of all the agrochemicals, and so that is why we feel that it will be good even for our own industry as well as the overall industry. And though there has been pricing pressure, last year it was substantial, but now they are getting slowly stabilized, and now the reduction is not substantial, and they are more or less stable now. So we feel the coming year should be much better than last year.
Are you saying that the export volumes henceforth won't drop on a YY basis and will start increasing right from now on?
Yes, sir. I think the export, we are getting better inquiries from export department also, and the exports are also increasing. And slowly the geopolitical situations are also improving. So there has been now a better inquiry and more requirement of these chemicals worldwide.
20% revenue growth target that you had given for FY26, are you revising it upwards?
I think it will be slightly more than that, sir. Because of this increase in our particular volumes, we feel that it will be slightly more than that. What we have given is a target of 1,000 crores, we will certainly pass that revenue number.
Any growth number that you could share with us, sir, for FY26 and for FY27 as well?
Sir, we expect around 15 to 20% growth every year. That's what we have forecasted for the coming 3 to 4 years with our existing plant as well as with our wholly owned subsidiary, which is coming up in Hamirpur. With combined of these, we should be able to achieve around 15 to 20% growth every year for the coming 3 to 4 years.
Got that view. Also, sir, so you had also given a guidance when it comes to margins, because if I see in FY25, your margins were almost 15% EBITDA margins, which you want to take it to 18 to 20%. And now, are you on track, number one? If yes, what would be the levers when it comes to margin expansion? Because I believe that though there has been increase in the volumes per se in the agrochemical industry, but pricing pressures still persist. So just wanted to have your view on that.
Yeah, madam, we have given slightly better margin guidance for the coming year based on two facts. Number one is that there is going to be an increase in the volume. Our capacity utilization is going to increase, which will decrease the per ton production cost. That will add to our margins. Number two, we are working very hard in our R&D department to reduce the cost of the overall production in terms of raw material consumption, in terms of energy consumptions, where we feel that we should be able to get 1 to 2% more margin levels.
Okay, so 18 to 20%, you're still on track for FY26?
Yes.
All right. And also, just I wanted to have your view on capex plan. So, what is the number that you have targeted when it comes to FY 26 and also 27? And number two, what kind of number that you have when it comes to your product pipeline? How many products you're going to launch in 26?
Yeah. We have planned about 116 crores for FY 26, out of which around 52 crores we will be spending at our existing site at Sandila, and remaining amount we will be spending at our subsidiary Shalby Specialities at Hamirpur. And similar number we are targeting even for FY 27. We have in plan for backward integration of our products. So we will be producing one more intermediate at our existing site, and we will be adding one more technical product at our existing site. And at our Hamirpur site, we would be adding at least 3 products this year.
And lastly, all the capital expenditure that you have just mentioned will be funded by internal accruals?
We are primarily getting it from internal accrual with a very small amount of bank finance, very small amount nominal.
Right. And sir, my last question to you would be the formulation business that you have, it's growing 20% if I'm not wrong.
Yes.
What is the contribution currently you have from that business, and do you see this 20% growth to sustain over next say 2 years?
Formulation growth, we are seeing more than 20% this year also. Last year also we have seen better growth in formulation, and this year we have increased our formulation capacity by about 3,000 metric ton, about 3,500 metric ton, and we announced recently also that this news, and we feel that we should be able to utilize this capacity fully this year.
Right, sir. Thank you for joining us, sir, and thank you for explaining your business to our viewers and to us that in a detailed manner. Thank you for joining. Well, moving on, Style Bazaar is another stock that remains in focus. Despite reporting a 30% plus revenue growth, the stock is down around 4% in trade. Why so? Let's get in Mahima with more details on the same.
Right, so in terms of the Q1 FY26 business update, same-store sales growth has been on a disappointing note, whereas there's good revenue growth. Revenue growth stood at around 37% at 377 crores. The sales per square feet was hardly up 0.4% for the counter. They opened 22 new stores this quarter and closed 4 stores that were not working for them. The average store size also saw an increase, and that increased by around 20% to around 10.7 lakh square feet. In terms of the same-store sales growth, that degrew by 3%. And of course, this is because Eid got pushed to Q4 earlier. But overall, normalized same-store sales growth stood at around 11%. And in terms of what JM Financial is making of this business update, they're estimating a 180 basis points EBITDA margin contraction in Q1 to around 6.2%. And this will be due to weak operating leverage. They're saying that EBITDA is expected to grow at 6%, PAT is expected to decline by 7%, and EBITDA per square feet is also expected to decline around 22% for them. So this is the overall view as to how Q1 FY26 has fared out for Bazaar Style.
Right, thank you Mahima for giving us all those details. Well, let's welcome in our guest for the show today, Mahesh M. Ojha, the market expert. Mahesh, coming to you on Bazaar Style, do you think the market should have taken this so negatively, the minus 3% same-store sales growth, given the fact that if you balance it for or adjust it for the Eid, the SSG would have been around plus 11%?
I think numbers are not in bad shape, but yes, some kind of disappointment from the numbers. What market expecting is higher, and the number was some kind of disappointment type. So that's why we are facing some downside in the stock. But yes, stock has a much more potential for upside. I think the 375, 389 issue price was 389. So that could be easily come, and these are the part of business. So some months are not doing good. So these are the part of business. I think stock has a potential for some upside, and investors should be hold on from these level also. So 375, 380 could become very easily.
Right, and there are reports which are suggesting that margins could have also declined in the first quarter, which means that discounting was on the higher side. How are you looking at the margin front when it comes to Style Bazaar?
These all are the part of a strategy. So I think from that point of strategy, we can see some margin pressure. But after that, what their sales can improve and many things can be improved. So these are the part of a strategy. So I think these number can be improved in upcoming time. So these are the part of a strategy. So that also we should keep in our mind.
Right. Thank you for that view, Mahesh. Well, let's pull up the chart for Saxoft because stock is up almost 10% in trade today, and we have Jasmeet to tell us why we are seeing this uptick. Jasmeet, over to you.
Well, yes, rightly said. The stock is up 10% in trade today. And let's understand more about the company to understand why is the stock buzzing. While in volume-wise, the company is running at a 30-day average volume of 32.33 times, and the market cap of company stands at 2,900 crores. While now, what does the company do? Company is basically into digital transformation and IT services. They serve mid-tier companies in USA and UK, and they're into industries like fintech, healthcare, utilities, and so on. As per FY25, the financials, the revenue stands at 80 odd crores, while the margins are around 16 odd percentage. Company drives major revenue from its digital engineering sources, and the major sectors are BFS. Now, what's the management outlook for the coming time? The company expects a strong growth in FY26 as results are on the edge, while they also vision to reach $500 million revenue growth by 2030 with 42% revenue based out of USA. It'll be interesting to watch out how the company's Q1 turns out.
Right. If you look at Saxoft, in fact, they have guided for a strong double-digit revenue growth for FY26. They are also seeing a CAGR growth of around 25 to 30%. Their FY26 revenue guidance stands at around 1,000 to 1,100 crore rupees revenue, which is a growth of clearly 13 to 25%. And they are seeing a strong momentum when it comes to the BFS and emerging vertical segment. For margins, they are expecting margins to stabilize around the 16 to 17% mark over the next 12 to 18 months. Mahesh, coming to you on Saxoft, have you looked at this counter? What are your views when it comes to the growth targets that the company has given?
This stock is fundamentally very good, and if you're looking on the last 5 year data of the company, the sales have also improved, their growth also improved. Last 5 year growth is to, approximately 23%. Also, management guided smartly some good upward side. So I think a stock has much more potential. At least 275, 300 level could become easily on these stocks. And in past, we have also seen some kind of good performance from the stock. So this is a good stocks, and investor can hold. And if anyone want to buy if any correction come, they should add in their portfolio. Stock has a potential of 275, 300 level at least. So this is the good, and also management guidance was superb.
Right. Got that view, Mahesh. Well, let's pull up Coromandel International. Let's see what that stock is doing. The stock is down 1.44%, but let's see NACL Industries is what is doing. I think the stock was up almost 4 or 5%. There you go. It's up 5%. Now this is on the back of Coromandel Industries, which has received approval from CCI for the acquisition of NACL Industries. Now Coromandel will be acquiring 53% stake in NACL Industries for rupees 820 crore, and they're going to also acquire additional 26% stake from public shareholders, of course, in the open offer. Now if you see the FY25 revenue for NACL stand at around 1,235, though company has been making losses when it comes to EBITDA. When it comes to EBITDA level, which Coromandel Industries, will be turning it around. And what Coromandel Industries will be gaining from this, from acquisition of NACL is, this will position Coromandel as one of the leading players in the Indian crop protection sector with a wide range of technicals and pan-India presence in the domestic formulation market. And this will also help in expanding Coromandel's scale, accelerating entry into the contract manufacturing business, fast tracking new product commercialization, and expanding its product portfolio. Well, Mahesh, your view on Coromandel International, because of course NACL, though it's it's under pressure when it comes to financials, but has a good portfolio, and of course the contract manufacturing services also, which will help Coromandel International. So your view on Coromandel International for long term?
I think still long-term view of Coromandel is high, and I think if any correction from these level on these region coming, then they can add. I think 2,100, 2,150 level could be a good adding opportunity from these level. Upside potential could be 2,350, 2,400 level in near term. So overall, it's a buy on dip still, and I think the collaboration sounds good. And if you're looking over NACL, their 5-year return, if you're looking at the very fine return.
Also, Mahesh, for NACL, the stock is up. The stock has hit at upper circuit. But what is your view? Should investors, be in NACL, or they should, exit the stock? What is your view?
I'm not surprised if any profit booking can come in a higher level, because I'm tracking this stock from very lower level. I think from 50 rupees 50, I'm tracking these stocks. That this last 5 to 7 year back, that was the level of stocks. And after that, what we have seen some kind of good upside momentum. Fundamentals are very good. So on these level, these are higher level. On upside levels, at least 260, 275 on profit booking can come. But yes, fundamentals of company are very good, and collaboration now looking very sound. So it's still some upside potential could come. But yes, profit booking on upper side could also visible.
Right. Link is another stock that remains in focus. Let's get in Jasmeet with more details on what does the company do here.
Right. The Link stands at a market capital of 882 odd crores. While what does the company do? Company is basically into selling writing instruments all over India, and it stands third in number in India when it comes to writing instruments. While the company is present over 50 countries, and they have a range of products starting from pens, pencils, roller pens, rectangular pens, and dark pencils. While as per FY25, the revenue stands at 531 crores and with a huge margin of 12% as per FY25. There's no majority of the revenue coming from South, but the company has major source of revenue based in North India. The US contributes roughly 9 to 10% of the total exports, while as per the outlook, the management is looking to have 15 to 20% growth in the coming years, while they also expect 100 BPS margin expansion up to 10%. It'll be interesting to watch out how does the Q1 turns out for this particular company.
Well, the management is also aiming to address nearly 50% of the total addressable market in the next couple of years, and the total addressable market for the company stands at around 38,500 crore rupees. So large expansion plan seems to be coming up for the company. They're also expecting their margins to expand by around 100 basis points for every 10% top line growth, and they also see expansion into adjacent categories beyond pens, including markers, highlighters, pencils, and crayons. Mahesh, when it comes to Link, how are you looking at this counter? Would you advise any investor to enter Link at this juncture?
Definitely, if anyone looking for a longer term investment, they can enter on these level. And if you're looking from a dividend yield perspective, that's also attractive gold, very low debt or debt free type of companies. And if any upside potential come, then we can see some more upside till 200 level at least. So, and on last quarter, I think promoter have also increased some stakes. That is also positive for stock momentum for upside. So these levels are still attractive, and I think 200 level could come in stocks for a 6 to 9 month horizon.
Right. Well, moving on, PACA, right? PACA stock has jumped 25% in 1 month. The company eyes 15 to 20% of future growth rate. Well, Jasmeet still with us, will give us more details on that.
Well, right. The stock is up 25% its last month, and with market capital wise, the company stands at 946 crore. Now, let's understand what does the company do. Company is into food packaging and service industry, while the company is present in 45 plus countries. And as per FY25, the revenue stands at 400 odd crores, and the margins at 19% for FY25. It'll be interesting to watch out how does the company's Q1 turns out, given that the majority revenue comes from pulp and paper business. That's almost 80 to 85%.
So, just to add on that, well, thank you, Jasmeet, for that. But their US market strategy, which I wanted to highlight upon, was they plan to appoint distributors in the US to enhance, market reach. And there's been ongoing trials for flexible packing materials in the US with initial orders anticipated soon. But Mahesh, what is your view on PACA Limited? What do you advise investors?
See, if you're looking from a last 4 to 5 year of PACA Limited, then see their sales and numbers are improving steady. So these counter are if any correction on these counter are coming, that is the opportunity for adding. That could be as 160, 170 order. But in the upper side, if you're looking for upper side, then could be 250, 260 range could be come on upper side range. So buy on dip, and if you're looking for a longer term horizon, 250 to 260, ideally 1 year targets can keep in your mind.
Right, Mahesh, for the last 1 year, if you look at the share prices of Pakka Limited, has been down around 19%. So, what is that factor that is giving you confidence that the share prices might go up to 250, 260?
If you're looking from management strategy, that is the last 4 to 5 years. We are looking for a 4 to 5, not looking for 1 year. But 1 year we have seen some kind of downside. But yes, if you're looking for a last 4 to 5 years, that is a steady and smartly grown company. So still some kind of distraction. So I have suggested a buy on dip. So that is the ideally good, and company is very good. So I think fundamentals of company good, then they can do good in coming time.
The next stock on the list is Swan Defence. Now, it's an interesting counter here for the last on a year-to-date basis. If you look at the share prices have jumped nearly 568%. Yes, 568%. But do remember that the stock has been hitting a upper circuit, and the volumes are quite low on this counter. So even if a retail investor wanted to enter this share, they would not have been able to do so. To give us more details on what this company actually does and what's the growth outlook going forward, let's get in Anush here.
Right, so if you're talking about Swan Defence in particular, what is in focus is that the stock has been hitting an upper circuit, just as you've highlighted, and this is during every trading session that we've been seeing since it has started trading again since Jan 20 that we are looking at. So it is up over 600% from its discovery price post the recommencement of its trading in its share prices that we are looking at. But as you pointed out, the volumes have remained particularly low in this counter is what we are seeing. Now, just a bit on that, the company did list under the T group of securities and the mandates delivery based transaction. But if you look at the intraday trades, BTST or STPT transactions, they are not allowed for this counter. This is again, the company had recommenced trading on exchanges from Jan 20 itself. Just a little bit about the company, it is engaged in the construction of vessels, repairs, refits of ships and rigs, and along with that heavy engineering as well. It was formerly known as Reliance Naval and Engineering. NCLT had initiated insolvency process on this company in Jan 2020, but it has started recommencing its on stock exchanges. So that's why the stock is in focus, since it has seen this upper circuit day after day.
Right, thank you Anishi for giving us all those details. Mahesh, I know that we cannot buy into this counter, but even if there's an opportunity, would you advise retail investors to consider Swan Defence, Swan Defence as a stock in the portfolio?
Yes, definitely. Still, we are trying to get from 40 levels. Around 40 level, we think that is very attractive. After that, what we have seen some upside continuous. Still, we are not getting much share on market. So I think still steam has left, and particular sector is doing good. They have opportunity, more opportunity in sector. So still the stock has some steam left. I think some upside could come. But yes, after the some kind of volume, the clear picture will emerge for the stock. So I think still very low volume and not looking much more upside from these levels. But yes, some kind of upside we can see at least 280 to 85 range could come.
Right, Mesh. Just one final question. I know that you speak to multiple market experts and multiple market stakeholders. So, what is your understanding here? For how many more trading sessions would this stock continue to hit an upper circuit? Any idea on that front?
No, I think it's a kind of some kind of upper circuit could also going on after that. But if exchange will go for a 2% upper circuit, that could also be possible. But currently, stock is very low volume and not looking much more opportunity for investor to grab the shares. So it's a I can't comment much more, but yes, still some steam left in counter.
Right. Well, thank you, Mahesh, for joining this conversation. Pleasure to have you. Well, viewers, this is all the time that we have on this edition of Profit Top Trades. Stay tuned to NDTV Profit.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
imports become the exception rather than the norm. And increasingly we do almost, last year for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy.
Hello and welcome. We continue to move sideways in the market. You're watching India Market Close on NDTV Profit. I'm Harsh Saita. We continue to move sideways. 25,500 is where we are at the moment, 50 points higher from where we were yesterday. And we'll pull up the heat map as well. The Nifty Bank essentially doing nothing to aid the index. In fact, you'd see some of the financials actually lagging. A couple of heavyweights are actually pulling the index a little bit higher, but outside of that, we're not seeing a very large positive trend, at least in trade today either, and that's been the kind of week that we've seen as well. Apollo Hospitals, Hero Moto are the two top gainers, as you can see on the index. Some zing in auto counters, Hero, Maruti there, M&M also up there, Tata Motors also up there. So some bit of zing. Tata Steel is doing well, and I say this because we saw 4% on Tata Steel yesterday. A positive 4% move, and on top of that it's up 0.7 again today, 0.5% on both Reliance and HDFC. But look at the laggards, some of them being financials. JSW Steel was the other big gainer yesterday, but sitting in the red, 1% lower. And we're seeing some more with regard to retail, which is consumption facing names, and again then you have HDFC Life sitting right there. So that's the broad trend that's playing out on the Nifty. Let's pull up sectors now very quickly, and again you're not seeing any major movers either in the gaining side or on the losing side. Just 0.5% lower on the PSU banking index, no major move there. The Nifty metal down around 1/3%. Auto is the one which is standing out in trade today, and that too is just less than 1% higher. I mean, that's what's really standing out in trade. That's what I mean to say when I say that there's no big gainer or loser. Nifty IT 1/3% higher, Pharma also nearly 0.5% odd higher. So those are some outperformers in this market. Let's talk now about the broader markets, and let's pull up the advanced decline, see where that is headed, and we'll also see where the mid cap and small cap indices are headed. It's been a largely stable advanced decline ratio and very close to 1:1 right from the get-go, which is the start of the day after those initial jitters. But let's look at the Nifty mid-cap and small-cap indices. The Nifty mid-cap largely in line again, 1/5% higher off the day's highs. and the Nifty small cap around 0.5% higher. Some bit of outperformance being seen on the small cap index, but it's a very, very range bound day of trade, as you can see. So plenty playing out nonetheless, because there are some movers. BSE 500, if you can quickly pull that up before I bring in Kush and get some perspective. Those are some big movers in trade. So it's not like in the broader markets there's no action. There is some action, and we'll talk about some of those counters as we chug along on this show. But let me bring in Kush Bora to give us perspective. Kush, it's what's the direction at this point? We're not seeing a clear direction. You seem bullish, at least the last we spoke. Does the bullish trend continue in your view, or are you playing wait and watch?
Hi, Harsh. First of all, very good afternoon to you and to all the viewers. Yes, the bullish, the bullish view very much continues. If you see, we spent nearly 6 weeks trying to cross above that 25,200, 25,250 mark, and last week we did cross above that with some force, with some gusto. So some profit booking, some cooling off was par for the course. We are seeing that also. This is what VIX at 12.5 does to the market. We've had a couple of sessions of fairly muted moves, barring yesterday. But this is what a low VIX does. So despite the kind of moves that we are seeing in the last couple of days, I remain bullish on the market, where 25,400, 25,500 still remain that support zone. As far as the expiry move for today goes, I think that's perhaps already done, because you had a good up move at the start of the session today. But now if you see 25,600, 25,500 has had a good call writing throughout the day, but also 25,500. So perhaps 25,500 is the pivot level, 50 points here or there, where the expiry could play out. But if you see positionally, I think there is still some upside, and I still maintain that 25,750, 25,900 should be your targets on the upside. Maybe just under 25,400 is where you keep that stop loss and create a positional long on the Nifty. The VIX caveat, is something that you just want to be mindful of, because a spike in VIX usually associated with fall in the markets that could perhaps play out in the coming days, but nothing to suggest otherwise that there is a major downtrend that is around the corner, at least as long as 25,250 is held.
Okay, on the Nifty Bank, Kush, what's the view there? Because a couple of days where we've seen it weaken a bit.
So, Harsh, the way I would see it is, even this had a good move, hit all-time highs, even when the Nifty hasn't yet, and 57,500. That's the level that, it has to cross before it makes those big moves, in the next coming days. Now, the concern, as always, lies in the components. HDFC Bank, after crossing 2,000, has given up, that level continues to consolidate. ICICI Bank also not doing much. But the major concern now remains PSU banks, and in particular SBI, which is finding very difficult to cross that 820 mark. So big three consolidating, not giving any kind of a breakout. Perhaps that could be the norm for Bank Nifty as well, where on the upside you play for 57,500, 57,800, but perhaps with a sluggish kind of a momentum. On the downside, the key level to watch is first 56,500, where there is a 20-day moving average, and if that is taken out, 55,700 also comes into play. So yes, I remain a little bullish on this, but given how the constituents are shaping up, the momentum could be in question.
Okay, and your picks for this kind of a market?
Picks remain long. Plenty of action, Harsh, in the broader markets at least. So now, if you see the metal space, which has been doing well, and we've given a couple of calls, on Hind Copper and SAIL in the past, and they've done well. Today, it's on Jindal Steel and Power. This stock too has had a good run. It's finding some resistance at higher levels, but for now, if you see, the upside trend remains very much intact. So for targets of 985, 1000, you could consider a long trade on Jindal Steel and Power with a stop loss at the 955 mark. The other one is Jubilant Ingravia. Here too, the stock has taken support multiple times at the 50-day moving average and rebounded higher. We've had the golden crossover of the 20 and the 200-day moving average come about a few sessions ago on the back of good volumes, and the stock continuing to gain strength. So for targets of 795, 815 with a stop loss around the 755 mark, Jubilant Ingravia is also long.
I want to talk about a couple of names, Coach. One is an SBI Life, and second is a Kotak Bank. SBI, slightly on the longer term chart, has done very, very well for itself. Kotak Bank as well. But do you believe that this is a pause for a renewed rally, or do you believe that now things look tough and there's going to be a bit of a cool off in these two names?
So SBI Life, I continue to remain bullish on. In fact, the entire pack, the life insurance pack, including the likes of ICICI Pru and HDFC, have done very well. Yes, what we are seeing on SBI Life could well be a brief pause because the weekly setup is suggesting a mild negative RSI divergence, but the volumes on the upside continue to remain healthy. This week, the stock is seeing a bit of a downturn, and the volumes haven't really picked up as much, so that's a healthy sign. So yes, the stock could well consolidate within that 1775 to about 1850 band. But as long as that is held, I think the medium-term structure for SBI Life remains bullish, and in 1925, 2000 remain the target. If someone's holding positionally, Kotak Mahindra Bank, on the other hand, slightly different. It gives you those spurts, and this goes into a longish consolidation phase. So has rarely formed a part of my pick, maybe once or twice in the last couple of years. So the same view continues, that the downturn that it sees is sharp and the consolidation phases are much longer. So I would prefer to stick to HDFC, ICICI, in the private names. And when it comes to the other banks, then you might as well look at Canara Bank, PSU in the Canara Bank and PNB in the PSU bank. So Kotak doesn't really fall very high on my pecking order. And yes, this profit booking round could turn into a consolidation phase for some time.
How do you play financials, Kush, therefore?
Very positively. Anything that is happening in terms of a mild downtick is more of a profit booking. Look at something like an LTF, L&T Finance, something that we've been bullish on for a while. 2 sessions of downturns, but on the back of very low volumes. 200, 195 zones still a strong support. So if you do get it closer to those levels, you should consider an addition in something like an LTF. Canfin Homes is the other candidate that can be considered for a long trade. So what we are seeing now is profit booking and some consolidation, because the run up in the financial names and across the board, be it home financiers, be it the insurance players, be it some of the NBFCs, they've had a good run and they're consolidating. Could be the July 9th effect. Investors want to stay light. Could also be the upcoming result season where you might want to just book some profits, stay a little on the sidelines. But other than that, the medium-term structure for some of these names is very much intact. And the dips that I see are more of profit booking than anything else.
Okay. Kush, thank you for those preliminary views. Stick with us. It's that time of the show where we go across, speak to corporate. It's management voice that we bring in at 2:10. We have Amit Jain, who's the Chairman Managing Director, Arcade Developers, joining us this afternoon. Good afternoon, Amit. Been a while since we spoke.
Good afternoon. How are you?
Very well, sir.
Thank you.
So I wanted to start off with this new acquisition of Filmistan. It brings around 3,000 crore odd of GDV, but give us timelines. How quickly do the approvals come in place, and how quickly does development start there?
So we've already started with the approval process, and 2025 by this year end, we are expecting the approvals to be in place. And early next year, we expect to launch the project, 2026. The acquisition is complete and the plans are frozen on drawing board.
Okay. Where does that take your total GDV to, Amit?
So this is in addition to the Thane acquisition that we did recently last month.
Yes.
So both the deals combined should touch a GDV of 5,000, and along with the other projects, we are looking at a GDV of 10,000 crore in coming times.
Okay. And how quickly do you execute the full 10,000 crore GDV?
We've set a target of 5 years from here to complete this pipeline.
And what's the margin like on this?
On an average, the margins are 20% in our company for the projects that we've done here.
And why Filmistan in particular, Amit?
Because this is amongst the last land parcels that is left in a matured market like Goregaon West, 4 acres of land parcel without any tenant. Majorly the projects that you see in suburbs or in MMR region are of redevelopment category. There is hardly any land parcel available. So this is amongst the last of clean land parcels available in Goregaon West, which is a very mature market. And it allows you to build a much premium product in terms of flexibility of planning. It allows you to build a very upmarket product. which normally is not possible in smaller land parcels, or redevelopment has a constraint of planning as per the earlier members, which is not there in a freehold land parcel.
Amit, how should one look at GDV? Because you've got 10,000 crore of GDV pipeline, 20% odd in terms of your margin guidance. How much of this is JDA versus fresh projects? And how should one look at GDV even in a JDA? Does it include the houses you have to allocate to existing tenants or not?
No, our 10,000 crore is only out of the sale proceeds of our goods, and the distribution is broadly 50-50. We do not have JDS, but we have redevelopment, society redevelopment projects, which is a pipeline of 5,000 crore, and the land side is another 5,000 crore. So it gives a clear visibility of raw material, for the company for the coming 5 years. Raw material is a very critical thing in real estate. So once you have these lineup of such good projects, it makes certainty of the ongoing year-on-year revenues.
And Amit, how quickly does the cash flow start to come in? Because 5 years is a long time for execution, and that will be your top line over the next 5 years is what I would assume. That ought to be the case. How does the cash flow stagger in is what I want to understand out of this 10,000 crore.
So once we start the project, once you have your approvals in place and once your project is RERA registered, we start the project, and no sooner you start the project, your cash flows start, and the cash flows keep coming in as the progress of the project takes place, on an ongoing basis. And we are not dependent on a single project for this 10,000 crore. It's split fairly balanced across a list. And so the cash flows, very healthy with us.
Okay. So, believe we have you on a patchy line, Amit. While we fix that, it's very impressive guidance. What I want to also understand, in fact, from Amit, as he patches back in, is they've done 2 big projects already this year. So, what's the outlook like with regard to projects? That stock is perked up 4% in trade. There are 4 project launches in FY26. At least that's the expectation. And just to try and highlight for you, Arcade in general is broadly a low debt company. We've got just about 100 odd crore of debt on the balance sheet at the end of FY25. And they've done around 700 odd crore of sales in FY25. Amit, just trying to understand from you. So you've done 2 big ones this year already. How many more in the pipeline and how quickly do they translate?
We are having a couple of redevelopment projects in the pipeline in coming times to come. And it's an ongoing process. Business development is an ongoing process. The BD team keeps on scouting for projects, and the launch team keeps on launching the projects. It's very cyclical. For now, we have a good lineup of projects. We are looking at 4 launches this year, as you just mentioned.
Yes, and what would be the completion time? How many projects get completed this year, and therefore, what's the revenue recognition which will happen likely this year? What are you estimating?
So we look at a 20% growth year-on-year basis. Last year, you just mentioned we did 700 crore of sales, and this year, basis 20% should be around 850 crore.
Okay, and will that continue for over the next 5 years? Is that the glide path?
Yeah. In fact, we are looking at a spike once these bigger ones are launched.
Okay.
It may beat that percent. Yeah.
And what about pricing? Is pricing holding up at all? You cater largely to Mumbai for viewer context. Is pricing holding up in Bombay?
Prices are very stable and consistent. Post this repo rate correction, in fact, the home loans have become very attractive, which is further helping the prices to sustain. Yeah.
Okay. And what's the kind of escalation you're seeing in prices going forward? Because some of the launches that you do today, a lot of the sales may actually happen a year or 2 from now. So just trying to understand how, what are you seeing in terms of price escalations? Is there any scope for that at all?
I wouldn't be speculative, but it should be minimum. It should beat the inflation. That is what I consider,
And
if not more. Yeah.
right, and you have a great understanding of inventory as well, of course, because you have your ear on the ground. So what's the inventory looking like? How much is the pipeline, both you plus competitors plus the market, at least in Bombay? How's the pipeline looking like? And do you see this traction which is there currently to sustain? Because that may well impact price. So how are you seeing all of those dynamics?
Our selection of the project, we are very choosy to pick the projects. Our selection is such that they are lesser affected by the abundance in supply. We choose very mature and premium markets. The location is marquee, so it should not be affected by the abundance in supply. And majority of the supply is on paper. By the time you get occupation for the project, the inventory is almost sold most of the times. People have become very aspirational, the per capita consumption of real estate has gone up. People are looking at bigger flats. They are looking at changing the apartments very soon. It's become very aspirational. So all of the supply is being taken care of.
All right, Amit, thank you so much for coming in, speaking with us. Always a pleasure speaking with you. Thanks so much.
Thank you so much. Yeah.
Okay. All right, so that's with regard to Arcade. That stock is booked up 4%. I'm going to take a quick call from Kush on that one. But before that, we have something interesting lined up for you. A lot of promoters have been selling their stake, and we've been talking about them on the channel, of course. But many have also been increasing their stake. The past couple of years, Anushi is here with all of the details with regard to the stake increases that are happening. So promoters on a buying spree, Anushi.
Right, for promoters on a buying spree, that's the accurate way to describe it. And we have collected data over the last 8 quarters to see which are some of the companies in which we've seen highest change in terms of where the promoter ratio is considered. So if you take the BSE 500 in consideration, 24 companies have seen promoters increasing their stake. However, on the flip side, 149 companies have seen promoters decreasing their stake is what we are looking at. Of course, all this information has been collected with the help of Prime database is what we are seeing. But let's see some of the top 5 companies wherein we have seen the highest increase. If you take BSE 500 in context, there has been a 58% of an increase since this March 23 levels. So in that context, we have Route Mobile right at the top, wherein there has been an uptick in terms of 16.5% in promoter stake increase. While in contrast to that, if we see FII and the DI change in positioning, FIIs have offloaded about 16% of their stake there. Polymedicure is another stock, 9% of an uptick here, followed by Bombay, Burma, GMR Airports and IFCI, seeing promoter picking up stake in the ranges of 6 to 8% from March 23 to the current quarter, that's March 25 levels is what we are seeing. While we are seeing some bit of changes in the FII and the DI stance as well, Polymedicure, we are seeing more of these enhanced changes in terms of the FII and the DII stake change, followed by GMR Airports also, wherein there's been a 13% of a downtick in terms of where the FII stake is in comparison with the promoter stake increase. But let's take this in context with the recent 4 quarters as well to see if these companies come in that list as well. So in this last 1 year, if you are looking at, we have Route Mobile, Polymedicure and GMR Airports in the list again, wherein the ratio that we've seen in terms of the 16% or odd so in Route Mobile, we've seen this change happening in the last 1 year period or so, followed by Polymedicure and GMR Airports as well. But we have 2 other counters in focus as well, which includes the likes of Adani Green and Adani Power, wherein promoters have picked up their stake by 3 to 4% as well. So these are the companies in which we have seen this activity in terms of where the promoter stake increase has taken place. But let's see how they have performed in terms of BSE 500. So BSE 500, why we did highlight that it has seen about a 56% or also of an uptick in the last 2 years. We have Polymedicure, Bombay Burma, GMR Airports and IFCI all recording strong gains in these last 2 periods, with IFCI seeing almost a 4x return in terms of where the stock price is concerned. Route Mobile being the only laggard in this list, seeing about a 31% of a downtick in terms of their stock performance is what we are seeing. In terms of how they fared in the key financial metrics in comparison with the 3-year revenue and the PAT CAGR picture. FY25 growth, if we see for Route Mobile, of 14% of an uptick. This is in contrast to the 32% of a growth it had seen in these last 3 periods itself. Polymedicure majorly in line in terms of where the 3-year CAGR is concerned. Same with Bombay Burma is also what we are looking at, but it's GMR Airports in which we've not accounted for the PAT CAGR because of the negative numbers there. But in these two, we have seen comparatively growth moderating as compared to where the 3-year revenue CAGR is concerned. But moving on, moving to the next metric, if we are looking at, it's the valuations. Now, in contrast to the 2-year picture that we are seeing for the valuations, Route Mobile majorly in line, same as the case scenario that we are looking for Polymedicure and Bombay Burma as well. For IFCI, we have taken the PB ratio in context, which is 2.6 times, again in line with the 2.7 times of a multiple that we have seen in this 2-year average period as well. So this is in terms of where the valuations are concerned and the overall picture of these 5 counters which have seen the most uptick in terms of where the promoter stake is concerned.
That's a very, very interesting piece. Thank you so much for that, Anushi. At least the kind of numbers that were flashing on your screen were super interesting and definitely stocks that we should keep on our radar. But Kush, over to you. I want to first ask you for a quick take with regard to Arcade, recently listed, but the 4% move today, does it change anything structurally, and if you have a call on the stock?
So not one that I've been tracking particularly in this space, Harsh, but a quick look at it would suggest there is a range on the downside 185 and on the upside about 200, where the stock hasn't really been able to break past for the last 15 odd sessions. But structurally, no, nothing changes. It was in an upturn, volatile market, but the stock has held its fort. So I would suggest, if you have a position, not a bad idea to continue holding on to this one. The stocks that we like in this space are Marathon, NextGen Realty, and Valor Estate. Some profit booking around the corner, but that is on the back of very thin volumes, so not too worried. In fact, that could be a level. These could be levels to enter into some of these names that have run up quite a bit in the last 3 months.
Okay, Kush, I'm going to cut this conversation short, slip into a break. Before I discuss this entire promoter buying spree that we just spoke about, but what we're going to do just before we go into break, we're going to listen in to Sridhar Sivaram. We spoke with him today morning of Inam Holdings. He's flagged that China's stronghold on global manufacturing as Foxconn pulls top Chinese talent from Apple's India plants is what he's spoken about. He's also fairly bullish on banks' financials in India. Let's listen into a slice of that conversation. We'll slip into a short break. See you on the other side.
China's annual exports to the US is say 450 billion. Add another 200 from Mexico, add maybe 100 odd from Vietnam. You're talking of $700-800 billion of exports a year, and all these get affected with the tariff. So this is the arm twisting that China is trying to do. Rare earth is the other one that they're trying to arm twist. As the D-Day is coming, they're trying to show who the boss is. But to be fair, their manufacturing is at such a scale and they have reached such heights. It's very difficult to believe that the world can live without manufacturing happening in China. So it's I think very interesting times ahead. It is not going to be easy for India to suddenly ensure or to hope that a lot of manufacturing will shift. Some will definitely shift, but there'll be a lot of challenges, roadblocks on the way. We like even the banks. We know that the next 2 quarters may not be that great, but the governor has given some bonanza in terms of CRR cut, so that helps them in terms of the earnings pickup. So even the banks, if you're willing to ignore the next 2 quarters, and we are hopeful that credit will pick up in the second half. So that's how we are looking at it. So we are okay with private banks, some few PSU banks.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world.
Welcome back. You're watching India Market Close, and it's the time of the show when we bring in Somit to give us all the insights that he's been getting from dealing rooms, and that's on our segment Heard on the Street. Somit.
Well, yes, Bajaj Finance is the first stock that is on the list now. Dealers are indicating that there are buy flows at lower levels for Bajaj Finance. HNIs have been accumulating this counter because 900 is oftenly seen as a strong support zone for Bajaj Finance. So around that level, we have seen some buying coming in, and off late the stock has corrected on expectations of a weak Q1 update. But now we are seeing some buying interest at lower levels is what dealers are indicating. When it comes to Tata Communication, now this is an interesting stock. The stock was up around 5% yesterday after Macquarie initiated coverage on the counter with an outperform rating and a target price of 2,300. But today the stock is down nearly 2% and dealers are indicating that there's a buzz on the street that the first quarter numbers could be on the weaker side, and hence we are seeing such kind of a downtick when it comes to Tata Communications in trade. For MTNL, dealers are indicating that there could be an order announcement very soon that could come in. For Natco Pharma, dealers are indicating that there could be an announcement that could come in from the company's side related to some acquisitions that they are looking to do, some international acquisitions that could come in in Natco Pharma. When it comes to delivery and ACC, dealers are indicating that there are buy flows on institutional desk for both these counters. Both FIs and DIs have been accumulating these counters in trade today. And lastly, when it comes to UPL, dealers are specifically saying that there are strong buy flows on the FI desk for UPL, and delivery volumes could be on the higher side for this counter in trade today.
Okay, thank you for that, Somit. Let's talk about all the ones he's spoken about buy flows on. One is a Bajaj Finance, then there is delivery, ACC and UPL. Kush, out of these four, are any of these looking interesting?
All of them.
All of them.
I think you missed out one. You missed out one other interesting one, which is Natco Pharma. Very interesting moves, and I must say, as is already well known, it's a very interesting segment, and in fact, even I look forward to this one. No, but just on a serious note, see, Bajaj Finance has a rising trend line support near the 900, 910 zone, as even Somit was mentioning. So yes, some buying could emerge, but my concern is on the higher side where 950, 960 is a bit of a resistance. So maybe a positional bet, 3 to 6 months view. But if you're looking for a breakout candidate, then yes, Natco Pharma is one, has a gradual, steady up move. Today it's given a breakout on the back of good volumes. Could have something to do with the chatter Swami just mentioned. So this is something that I will keep an eye out on for levels of 1025 and once that is taken up 1100 as well. That's the kind of risk reward ratio it's offering. Stop loss comes in close to the 900 mark. So Natco Pharma, very interesting. Delivery, yes. ACC also, giving a good move, but very keen on the moves that Natco Pharma has given. So keep an eye on that in particular, at least from a technical standpoint.
Okay. Let me switch over. We have Aditya Shah also joining us, Hercules Advisors. Aditya, Bajaj Finance at 900 odd. What do you make of it? 5 times price to book. Does it look interesting? It seems to be the case that there's a strong support at 900. I'll confirm that with Kosh specifically. But your view on a Bajaj Finance first off.
So really very expensive, but a great company to have inside your portfolio. Will be long-term compounder. Will continue to extremely well. The consumer finance boom that India is seeing, Bajaj Finance will be able to capture it over the next 5 to 10 years. So a good portfolio stock. The growth will slow down to 25% at some point, and that will be the steady state for Bajaj Finance. So good company should be inside your portfolio, but valuations are expensive at this stage.
900, Aditya, very simply put.
Sorry?
So do you buy at 900? Very simply put.
Yeah, so very expensive. So you need to buy I have a buy rating on the stock, and you buy it in a very staggered manner. You don't jump in and buy it all in one go. You buy it in a staggered manner so that if there is any fall, you can take advantage of it. Mind you, Bajaj Finance has had a time correction where valuations have corrected over a bit of last 2 to 3 years, post which the stock has now broken out and is moving up. So buy it with a staggered in a staggered manner.
Kush, your view on BAF?
So as I said, interesting moves. Rising trend line support comes in 900, 910, the levels at which is at currently, maybe a little lower, 890 as well, has acted as a support zone from where the stock has rebounded 3 to 4 times in the last month and a half. So yeah, if you want to accumulate, major concern actually on this one is momentum, and on the upside 950, 960 zones being a supply zone. So not an immediate trade, but if you're in for a 3 to 6 month kind of a positional trade, then yes, you can consider, because it's closer to the lower end of that range.
Okay. The other one that's really done extremely well, Aditya, is a UPL, and that's made it to Somit's list as well. From those 400, from those mid 400 kind of levels in April 2024, the stock has only gone one way, and quietly, that too. Is UPL something of a turnaround at play, and at nearly 700, would it really warrant a look?
Unfortunately, over the last 3 months, I have not been able to track the stock, so will not be able to comment on it.
Okay, and what's your take with regard to this one, Kush?
Good moves, has seen a good accumulation in the last 5 sessions, price and volume action both supporting. But now for me, 690, 700 remains a zone where, you might want to perhaps wait up a little. So at this juncture, it's a hold, not a fresh buy. If you have a position, keep a stop loss at the 670 mark, continue to hold. Once it clears 695, 700, perhaps, then you could see fresh leg of up move. But up until then, there could be some supply that could, come in at higher levels.
Kush, what's the take on Bosch, up 6% today?
So I think there has been some traction in the sector. Even this stock has consolidated for a good month and a half. If you see 32,700 was a bit of a resistance on the upside. Today it's broken out of that. Now that said, however, not too disturbed by the 6% move. It's the next levels of 34,500, which are a resistance band. So I will not want to initiate fresh positions. However, if I would continue to ride on to this momentum with a stop loss near the 33,700 mark. it's given a breakout after a nearly month and a half of consolidation, so could well continue. But for fresh positions, doesn't offer that exceptionally high risk reward ratio.
Okay, so that's the take on Bosch coming in, but stock of the day for sure is a Blue Star. The stock is up 5% as we speak, and Mahima joins us with what's keeping the stock in focus. Mahima.
Right, so there's a very interesting note by MK on Blue Star today, and basically the note summarizes their meeting with the management and key takeaways with regards to that. They've given their expectations with respect to how Q1 FY26 will fare for them. What they've said is that they're expecting 20 to 25% YY revenue drop in the room AC segment. This is because of early monsoons. And this is also on the back of high base as well. The revenue drop, however, will be overall partially be offset by a steady growth in commercial refrigeration is what the management has said. In terms of Q2 FY26 expectation, they're saying that they will see a slower offtake due to channel elevated inventory because of sales not happening in Q1. In terms of the RAC segment, they've said that the demand could rebound in second half of FY26 by festive season momentum, and plus the B rate, the B star rating will also have some impact there. So pre-buying could happen before the second half of FY26. In terms of the management guidance for RAC growth, they have said that they'll grow anywhere between 10 to 15 odd percent, and EBITDA margins will be anywhere between 8 to 8.5%. In terms of the B rating that I was talking about, that is a government rating that will come out and will mandate a particular amount of star ratings for the AC companies, and this could possibly have a cost hike of roughly 7 to 8% for all of these AC players. So that could be one of the impact on Blue Star as well. Lastly, in terms of what MK is making of all of this, their view, they've retained buy with a target price of 1850. What they've said is that 15 years trend analysis, according to them, shows that weather-led demand volatility eventually slows down. It is cyclical, and weak summers typically are followed by sharp rebound in both volume as well as in terms of the stock prices. Plus, largely they're keeping their estimates also unchanged for now. And lastly, as I mentioned, the target price is 1850 for Blue Star right now. So this is the overall view as to why Blue Star is seeing uptick in trade today.
Okay, thank you for that, Mahima. Both Blue Star, Voltus, both of those buzzing. Aditya Shah, do you have a view with regard to the AC sellers, if I can call it?
So all of these companies should do well over a period of next 3 to 5 years. Mind you, I talk from a long-term perspective. From a long-term perspective, the demand for refrigerants, particularly AC and refrigerators, is only going to move up. So companies like Blue Star and Voltas will continue to do exceptionally well. However, the valuations on particularly Voltas are really very expensive. So I'll tend to wait for any correction and then enter. But the outlook for both of these companies continues to be really very strong.
Push, we've seen a sudden downtake with regard to the Nifty. Expiry day move or anything to be worried about?
No, purely expiry day move. I would read it as that. We were talking about how 25,600, was seeing some call addition. Now what's happened is 25,500 has had the highest base as we speak right now on the call side, but the put base for 25,500 has vanished. So I would wait and watch. 25,400 still remains, as a significant put base. But this is more, I would attribute this more to expiry than anything else. So I wouldn't be too much perturbed, especially if you see the VIX, which is not really perked up, only about half or 0.6% higher. So not too much to be worried about. Still in that 25,400, 25,500 consolidation range.
Tamanna, are you building positions right now? Would that be a call to take since you have 25,400 breached on the lower side?
Hi, Taman. I missed the initial part of the conversation.
I'm saying that is it the right time to build positions since we've seen a breach below 25,400 on the lower side as well?
Yeah, I remain bullish even now. I mean, how we spoke earlier, which is 25,250 was the key resistance level. We took that out and we are now consolidating with a negative price for the last 3 sessions. Positional bet, the risk reward ratio is still favorable. 25,250, keep that as your stop loss and play for higher levels. So I would play for a long trade, a positional long trade on the Nifty even now, at least till 25,250 is held. Bank Nifty on the other hand is consolidating, and the constituents aren't really playing out, as strongly. HDFC, ICICI, and SBI, all three of them. So perhaps a wait and watch on Bank Nifty, but Nifty, as long as 25,250 is held, a long trade can be considered.
Okay. Let's take a bit of a global view as well, and a good time to pull up what's happening in European markets as we get to Michael Ingram, market strategist, who's joining in on the show. Mild positive on the DAX. Remember, it's all about trade deals right now, and clearly Europe is not on the list of trade deals we might see in the next 48 hours or so. India definitely is. So, Michael, thank you so much for speaking with us here at NDTV Profit. And let's start really with that big factor which is being watched. A possible mini trade deal is what we're hearing between India and the United States. Would it be seen as a big boost after what we've heard about the Vietnam deal?
Well, I mean, we obviously have to see what the details are. The devil, as they say, is always in the details. I mean, it's significant in as much as that Vietnam is a significant offshoring country for China over the last decade or so. So that this also has implications for a possible US-China trade deal, which I think is probably going to remain the most intractable of the sort of bilateral negotiations which are taking place. That said, in terms of the actual market impact, well, the market's really looking at a sort of a glass half full situation anyway. You're seeing most stock markets at or close to all-time highs. In many markets, particularly the US, they've already assumed that earnings growth this year is going to slow significantly, maybe 5% on the S&P 500, but it is convinced we'll see a significant acceleration into 2026, maybe 15% growth. So the market's already discounting really a soft landing. We're also seeing this on the rates market because the rates markets are also discounting an acquiescent Fed. They're assuming a degree of policy error from the Fed after the last FOMC, and perhaps looking up to 3 quarter-point cuts on Fed funds rates by the end of the year. Now, whether or not any of this bears out, of course, is a big question. Yes, I've said that the stock markets are looking buoyant, but you do still have, for instance, gold still trading at very elevated levels. You're still seeing a very, very weak dollar, which has implications for the global financial systems. And interestingly enough, even though you're seeing sort of retail enthusiasm for risk assets, you're also seeing a lot of insider selling as well. So some mixed pictures out there and relatively elevated valuations.
Michael, hi, this is Harsh here. So did I hear you say that you're finding gold elevated, and this is at a time when there's heightened uncertainty, and that uncertainty is likely to persist given the US administration and its stance, and also the fact that central banks are continuing to stack up on gold? So give us the thesis there.
Yeah, well, your observations are absolutely correct. I mean, you talk to reserve managers. Yes, there has been some leakage into non-dollar assets. We've seen that in terms of flows into the Eurozone, but fundamentals of the Eurozone aren't great either. I mean, if you look at the most recent PMIs, yes, they've been tracking up so far this year, but we've spent almost 3 years in below 50 on a European manufacturing PMIs, which is not great. So this is a rebalancing to some extent. But, as I say, growth isn't great in much of the Eurozone. India, I'd have to say, remains a standout in terms of, raw GDP growth at this point. But yeah, I mean, by default almost, because they can't go into treasuries, because we haven't seen this decline in interest rates that was being anticipated rather for the last 2 years. I mean, the rhetoric from Powell remains, yes, we're patient, but there's a lot of uncertainty out there. So it's meant that a lot of the reserve rebalancing has gone into gold, and that's what's helping to support the gold price above $3,000 a troy ounce. So yeah, it's a real dilemma for asset allocators at the moment. There does seem to be the equity market is painting a very different picture from the other assets, I would say. And at some point, this bifurcation is going to be resolved, and generally speaking, it's resolved in a relatively painful way. But one thing I think I'm fairly sure is that we are going to see a significant uptick in volatility as we make that particular journey.
Just on a completely separate note, Michael, because your perspective on this would be interesting. What's happening with the London Stock Exchange right now? Reports that AstraZeneca, one of the most valuable companies listed on the FTSE, might be looking to move its primary listing to the United States. And this will deepen a crisis there. For our viewers who are not familiar with what's going on, please add some perspective to this.
Yeah, well, this is part of a broader decline, I would say, of the UK as a listing venue. My personal feeling, but it is mirrored by a number of other commentators, is that the UK, both as a real economy and as a stock market, remains over-regulated. We still have an archaic taxation scheme called stamp duty on stock market purchases, though there are ways around that, dealing on swap, for instance. And I think the fundamentals of the UK economy are looking, frankly, quite shaky. I think the fiscal situation here is increasingly in focus. And I think if we didn't have this sort of dollar weakness actually helping non-dollar asset markets, particularly UK gilts, then we've had a much more difficult time of it at the moment. But yeah, we've got a budget coming up, I think probably in October this year, and I think that could well be a flashpoint for a broader sterling crisis. But in terms of the narrow, your question in sort of a narrow sense, it's quite simple. People who are listing in the UK feel they could get better valuations elsewhere, and bearing in mind what sort of valuations we're seeing in the US right now, I can understand how AstraZeneca is looking to shift its primary listing.
Okay. Thank you so much, Michael, for speaking on all of this and more. Markets are completely flat right now. In fact, there was some weakness there on the key indices, of course, but even so, Nifty seems to have recovered a fair bit. Let's just pull up the Nifty chart for the day. Yeah, topsy-turvy, all over the place. No direction till we don't know exactly what's happening with the India-US deal. In fact, Rishabh is joining us. He's tracking that story very, very closely on NDTV Profit. Rishabh, what is the kind of timelines we're seeing? You reported this morning that we could see some kind of a mini trade deal in the next couple of days.
Correct, Tamanna, that's what we're picking up from official sources, is that within the next 2 days, we will have some sort of a mini trade deal or an interim trade deal at least. This is before the first tranche that is expected in either September or October of this year. This is what the two leaders had agreed to, Trump as well as Prime Minister Modi. What we're seeing also is that these are the faces that you're seeing on your screen right now. These are the faces that are behind all these Indo-US trade talks that are going on. From the Indian side, of course, there's Prime Minister Narendra Modi. After that comes Commerce Minister Piyush Goyal, and after that is the chief negotiator, who's also, by the way, a special secretary in the Commerce Ministry, as well as the incoming Commerce Secretary. He will take charge as the Commerce Secretary this September. That is Rajesh Agarwal. On the American side, we'll see that it is obviously President Donald Trump that is leading the charge there. Then we'll have Piyush Goyal's counterpart on the other side of the Atlantic is Howard Lutnick, the Commerce Secretary for the US, as well as the chief negotiator for the US. On their side will be Brendan Lynch. He is the assistant US trade representative for South and Central Asia. So all these trade talks that have been going on for a while now, it has been Rajesh Agarwal who has been spearheading these negotiations for India. Over the past week or so now, they've still been in Washington. And from the American side, it's obviously been Brendan Lynch who is leading these negotiations.
Inside there, so you could expect something. Rishabh, would it be wrong to say that we may see something on Saturday evening India time?
No, not wrong at all. In fact, what we're seeing, what I'm also listening is that it could be as early as tonight. So we have to be all on all fours. We need to be very, very alert on any time it could be made public over this weekend.
Okay, thank you so much for that, Rishabh Bhatnagar. On top of that story, and NDTV Profit will be getting you every aspect of that story as we move ahead. All right, let's take a look at what's happening in the markets. I mean, a very, very dull day. Harsh, and I'm seeing the biggest hit coming in, I would say, from PSU banks, thanks to, of course, Punjab National Bank. Those updates far from giving any comfort. Indian Bank, we saw some updates coming in. That wasn't great as well. Just pull up PNB if we can, PNB and Indian Bank. in that aspect, in that it will be in that index, but also M&M Finance. All of it looking a little dismal.
Yeah, it did, Tamanna. In fact, what I wanted to actually do is take a quick rapid fire with Aditya Shah on his views on some of these, because he tracks lenders closely. Aditya, do you have a quick view with regard to PSU banks and the kind of numbers that have been coming out? At least Indian Bank was half decent. PNB was a bit dismal. But quickly, your take.
Very contradictory to what the finance minister advised the PSU banks last week, that they should be really very aggressive. I don't think that PSU banks, anybody should be invested in PSU banks at this stage. Whatever re-rating on the PSU banks had to happen has already happened over the last 2 to 3 years. I do think that SBI and Bank of Baroda are two companies, and for that matter, Canara Bank also. These 2-3 companies are the ones where on the PSU bank you should really be, particularly SBI. I think they will continue to do really well. The entire pack, other than this, is a clear avoid for me at this stage. There's not enough traction available. There's not enough valuation comfort available now. Mind you, these many of these banks still trade below book value, but there's a reason for which they trade below book value. So from my perspective, sticking to SBI would really help.
Okay, so within PSU, stick to SBI. What about the NBFCs? You've spoken about Bajaj Finance. M&M Finance also came out with its numbers. How are those looking? And especially on the asset quality side, do you expect a flip this time around, an improvement where NBFCs is concerned?
Agro lending NBFCs again will see a sharp drawdown in their asset quality. That asset quality will start to stabilize from this quarter onwards, and the asset quality will see an uptick over a period of next 2 to 3 quarters. So I don't expect any fillip in this quarter. What I do expect is that the formation of new NPAs will start to slow down. So from my perspective, if you are looking at an NBFC, then Bajaj Finance will be at the top of the radar. Something like an Arman Financial, which is now available at 1.2 times price to book. That looks really very interesting to me, but that's a whole play or microfinance lending NBFC. So you need to be really very careful. Then again, Cholamandalam Finance is again a very fantastic company where you can be invested for the longer period of time. So Bajaj Finance, Cholamandalam Finance, Arman Finance are some companies where you can look at for building positions.
Any of these on the charts for you, Kush?
For me, I think it's the LTFs and AB capitals of the world, that stand out. So yeah, I will take these dips that come about in some of these names as an opportunity to create fresh longs.
I just want to see what's happened to HDB Financial, the new listing from yesterday, and is it really holding up? If you can just pull that quickly before we get to other buzzers. Not how bad. 863 right now for HDB, another 2.5% up. So slow and steady, but definitely an upward move is what we have been seeing. All right, there are a lot of buzzers this afternoon, and Jasmeet joining in for more details on, let's start with Bajaj projects, Jasmeet. Why is it in focus?
Well, right, the stock is up 5% in trade today on the account of mega order win by Power Grid. Well, the order is to provide transmission lines of 400 kilowatt at the range of 99 kilometers. While this mega order ranges between 300 to 400 crores and the time period for this order is 18 months. While company recently also received an ultra mega order for 400 crores for 400 kV transmission lines. While the next one is Saxoft. While the stock is up 10% in trade on the account of volumes, while it's been running at a 30-day volume average of 33 times. Now, understand what does the company do? The company is into providing digital transformation and technology management solutions, and its mainly business caters to mid-sized firms in USA and UK. While as per the financials, the company's revenue stands at 883 crores as of FY25 and EBITDA at 16% margin. While company's outlook is pretty strong, where they expect a strong double-digit growth in FY26, and the vision is for 2030 is to reach $500 million revenue. While the last one on my list is NACL, while the stock is up 5% in trade today, and it was 5% up yesterday as well on the account of Coromandel Industries, while they received an CCI order for acquisition. The company is set to acquire 53.13% stakes in NACL, and the FY25 revenue for NACL stands at 1,200 odd crores, while the revenue for Coromandel stands at 24,000 odd crores. These are the stocks and the reason why they are buzzing in trade today.
Okay. So some buzzers there. Coromandel has completely given up all gains. NACL is fine, the acquiree is fine, but the acquiring company with 53% stake is just lost all of its buzz today. Kush, before we let you go, any top calls that you're seeing at this point, and would you want to place any bets for tomorrow's trade?
The bets for tomorrow's trade would be on the long side on the Nifty, but you might just want to wait because we are close to the low point of the day. That's the only concern. Otherwise, not an issue. And Jubilant Ingravia, the call that I gave at the start of the show, still doing well, still holding up. And while the market's volatile, this one's gained ground in the last 4 sessions. So continue holding on to Jubilant Ingravia. To reiterate the targets, 795, 815, and 755 is where you place that stop loss.
Okay. All right. So, Kush, thank you for those calls. Aditya, I also wanted to quickly have your view with regard to a couple of other buzzers which have within the financials itself. And RBL Bank, there's been plenty of chatter. Is that a pocket where, or rather one of the stocks where you're seeing value? And within even the small and mid-cap banks, as CSB came out with numbers, how are you seeing those? Just give your quick views with regard to a couple of those.
There is some minority investor who's going to come in and take some stake. RBL Bank has been grappling for many years from NPS. The new management has come and cleaned up the book. Now it remains to be seen who comes into the bank in order to take some stake. So from my perspective, this is a stock on the radar. It's a stock that you can watch out for. Then the next stock is CSB Bank. Fantastic numbers, 20% deposit, 36% gold loan growth, 31%, AUM growth. Fantastic numbers. That's why the stock has done pretty well over the period of last 6 to 12 months. So from my perspective, I like the strategy that CSB Bank is employing, being very aggressive on the gold loan side of it and building up the secured book while also lending to unsecured side of. So positive on CSB Bank, watching out for RBL Bank.
Okay, so that's the take with regard to a couple of those lenders. But let's go across. Time for bull versus bear. Nika is the stock in focus with regard to bull versus bear. Mahima's here. There's obviously some bit that has happened today morning, and 4% lower. It stayed that way, but it's a great day to get that perspective. Mahima.
Right, so the stock is down today because Harinder Pal, who is one of the early investors in Nika, has exited his share partially, around 2.3% stake he's sold. His stake stood at around 4.97% in March, so his stake will come down to around that 2.5% mark. Earlier in August 2024 also, his family had offloaded around 1.4% stake in Nika, so that's why the stock is down today. But with respect to where the bull versus bear case stands for this particular counter, recently in their investor presentation, they had mentioned that they aim to grow at mid 20% levels, but considering that beauty margins will see pressure because of higher delivery costs, and this is because of the new Nika now expansion that they're doing. So margins will be under pressure going forward. The next one, in terms of the overall fashion growth expectation, they're expecting break-even by FY26, mid to high single-digit growth in terms of the Nika fashion margins by FY28, and by FY30 they're aiming to grow margins at around 10% for Nika fashion. But overall, they have moderated their guidance for Nika fashion in terms of net sales growth. Now the guidance stands at around 2 to 3 times, which was earlier around 2.5 to 3.5 times. So that is something that CLSA and JP Morgan also did not like, and even Macquarie did not like. In terms of their overall store expansion, they plan to expand to 500 stores by FY30, but in terms of the overall competitive outlook, that is something that could overall go ahead and put pressure on Nika in terms of margin as well as profitability, because they will have to go ahead and increase their marketing spends. So that is one concern here, and of course the competition coming in from Tira could also be something to most certainly watch out for. Lastly, in terms of their ambition to grow overall their organic portfolio at a CAGR of 30%, they're growing and the gross merchandise value that they've targeted is 6,000 crores by FY30. But even if we look at the FY27 estimated valuations, that stands at around 127 times. Currently, it stands at a P of 880 times. So Nika in the near future, even 2 years down the line, not looking very cheap. Lastly, in terms of where the street cred stands, there are 13 buy calls, 4 holds and 9 sells right now, upside of hardly 3% for Nika. The street right now is also a little cautious with respect to where the entire growth aspect is and plus where the valuation stands. So this is with regards to where the bull versus bear case of Nika stands.
Okay, thank you for that, Mahima. So Nika, the stock in pain today, obviously, because there is a block deal and one of the early investors is exiting their position. Rajesh Palve now joins it in the conversation. He's SVP Technical and Derivatives Research at Axis Securities. Of course, Aditya Shah continues with us. Welcome, Rajesh, to the conversation. Since we've been talking about Nika, let me start with your view on Nika. Is there a buying opportunity here?
Good afternoon. So there is some profit taking is happening in this counter, and now stock is approaching again back towards 20-day moving average support area, which is placed at around 198 zone. So I think 198 is a very crucial level for near-term perspective. If it breaks below 198, we may see furthermore, supply pressure up or down move towards 192 kind of zone. But at this juncture, if it's able to defend this 198, some pullback action should be there, because if we analyze the overall structure for near term to short term, there is a series of higher top higher bottom formation, so which indicates that buying action is sustained buying action is there in this counter. So around 198 one can buy with stop loss of 195. In the pullback, 210 to 212 would be the immediate hurdle. If it's able to take out about 212, then rally can extend towards 225.
Okay. So, okay, that's the story with Nika. Aditya, is this something that you track?
Yes, I track this company. Okay, the growth is not spectacular. However, the valuations of the company continue to remain really very expensive. So in the near term, I would like to avoid the stock. Wait and watch. Let the valuations take a time correction. From there on, you need to look at the stock. For me, it's just too expensive right now to invest.
Aditya, sorry, want to quickly get this piece out of the way. DCM Shriram, any idea what's happening there? Fertilizer company, stock up, what, 12% in trade today? And any pick within the fertilizer space at all that you would have?
I don't have a view on this company or this space, so I will not be able to comment on it.
Okay, fair point. Okay, Rajesh, zooming out, or rather, give us your take with regard to a DCM Shriram. What's your view with regard to what you're seeing on charts?
So there is a fresh breakout in this counter, almost consolidation, long consolidation. Now stock managed to view breakout of almost 12-month kind of consolidation, and looking at this breakout, we believe that till stock is now holding above 1380 zone, there is a possibility that we may see furthermore follow-up buying action towards 1460, 1470 kind of zone. So those who have already long in this position, so can hold the position. Trailing stop loss would be around 1400 to hold the position.
Okay. What are your levels that you're seeing on the indices, Rajesh, and your picks at this hour?
So Tamanna, yeah, there is some profit taking at high level for Nifty. Looking at the data, the major call writing activity is happening at 25,500, 25,600 strikes. So these levels are likely to act as an immediate hurdle for the stock, for the indices Nifty. If we able to take out about 25,600, then there would be some short covering action we may see in the Nifty, and then possible rally can extend further. But overall structure is bullish. Buy on dips would be the strategy at this juncture also, as we have weekly option expiry for Nifty. So some profit taking at high level, as call writers are very well intact at 25,500, 600 strike. On the downside, we are almost trading near to the major put-based concentration of 25,400. So these level may act as an immediate support area. If we break below 25,400, then a possible down move of another 50 point towards 25,350 would be there in the especially due to this expiry. So 25,350 may act as an immediate support area if he breaks below 25,400. overall buy on dips would be a strategy. Your stop loss should be placed at 25,300 for positional trader. For Bank Nifty, the immediate support is now placed at 56,700, 56,600. So these two levels are very important and critical for Bank Nifty. If we fail to hold 56,600, then we may see furthermore supply pressure. But looking at the overall structure on the short-term charts, I think 56,000 should be intact in this corrective move, and some pullback action we may see from those level. On the higher side, 57,300 is the key supply zone. Until the 57,300 not taken out by Bank Nifty, we may see some consolidation in range of 56,700 to 57,300.
Okay, and top picks this afternoon?
So Biocon is looking attractive. Stock managed to give breakout of its multiple supply zone on the weekly chart, and looking at the breakout and long built up in derivative data, we believe that Biocon may extend its gain. Possible target towards 394 to 400 we could see in the near term perspective. So Biocon is buy with stop loss of 369. And second stock that we like is CSC, series of higher top, higher bottom formation in CSC. Stock is comfortably holding above to all its long-term, short-term moving averages. The way stock has managed to give breakout of its previous swing high of May 2025, I think here also we may see furthermore continuation of up move 187. We are projecting target for the stock. One can buy with stop loss of 175.
And news flashing at the bottom of your screen with regard to MobiKwik, Tamanna, that they've got a securities broking license to operate as a stock broker. That stock is clearly seeing an uptake on the back of that announcement.
Yeah, that's a big one. And it's just the entire space. By the way, since we're talking about this announcement, Jio BlackRock has got its license last few days. Motilal Oswal, just look at that stock. AUM has crossed $1.5 billion. I think there was a figure.
1.5 lakh crore.
1.5 lakh crores is what the AUM has crossed on Motilal Oswal. So that stock is buzzing. But this is a big one actually. MobiKwik Securities Broking has got its SEBI certificate. Let's pull up the one MobiKwik stock for you also. And interesting segue. Now this is a company that you see, it's in the payment space. I don't know, this is a natural progression for them. Does it make sense? Why do you want a broking license?
Because you have a large customer base to cater to, and this is easy pickings. It's value-added financial services which you're trying to get into. Because MDR is not coming in, some of these companies may want to leverage on their platform business to try and do more business with their customers and get in that, or rather grow faster through these ancillary services which they do. Aditya Shah, AMCs as well as one MobiKwik Payments, anything that interests you within this space and anything that's looking attractive from a risk reward perspective as well as from a growth perspective, growth at the right price?
Particularly not. So what the payment companies are really doing is that payment particularly per se is not profitable. You need to build services around it which are really very profitable. For example, selling insurance, selling broking services, selling mutual funds. That's exactly what companies like MobiKwik or even Paytm are really doing, where Paytm is building up a loan platform. So from my perspective, there's nothing to get excited about here. Brokers have a challenge. Jio is coming in, and we've seen wherever Jio has entered, they tend to disrupt the services. And just as zero, the broking percentage or the money that brokers make can all set to be shrink if Jio starts and gives a lot of freebies to customers. So from my perspective, I am not positive on any of the capital marketplace per se. Mutual funds, yes, mutual funds, something like an HDFC AMC or for that matter, a Nippon AMC do look good to me. For a period of next 3 to 5 years, these companies will continue to do exceptionally well. So capital markets, no. Broking services, capital markets, no. Mutual funds, yes.
Top picks, top favorites here in this space. 361 WAM also buzzing today. Quite a few coming in. Competition heating up. We know that some in the pipeline for IPOs. What are you liking right now, Aditya?
Where in the broking services?
Yes.
In the broking services, nothing as such, nothing I want to invest in right now at this stage. As I said, mutual funds is something that looks really very interesting to me, not in the broking space.
That space, in your asset management space.
Yeah, in the asset management space, as I said, HDFC AMC, Nippon AMCs, these both continue to look really very good. And as we know, ICICI AMC is also set to launch its IPO. So that one also looks really very interesting too.
Nippon AMC and HDFC AMC. Rajesh, what about you? When you're seeing some of these capital market plays buzzing today, are you thinking this is a good opportunity to exit if you've made that kind of move or have managed to be on part of that move?
So I think capital market related theme is is doing good, and the way most of the stocks are shaping up, it clearly shows that this trend is likely to continue furthermore. The way Aditya Birla Sun Life AMC is now trading, now it's moving in upsloping channel on weekly chart. The same kind of behavior we are seeing in the UTI AMC 361 as well as Motilal Oswal. All these stocks are moving in upsloping channel on a weekly chart. So that clearly shows that there is a sustained buying action is happening in this counter, and I think we may see continuity of trend for all these stocks. Looking at the technical structure, if I want to go for any fresh buying, so I think Motilal Oswal Financial is looking attractive. The fresh breakout is taking place on a weekly chart, and the way stock is now trading above 900 level, I think if it continues to hold above these level, possible up move towards 980,000 kind of level we may see. So one can buy this stock with stop loss of 900. Again, from AMC perspective, Aditya Birla Sun Life AMC is also looking promising. And here also we believe that till stock is holding above 800 mark, there is a possibility of 860 to 870 target in the near term perspective.
Okay. And within this space, would also be good to understand, Aditya, do you have a view with regard to a JM Financial? Because that one was the other one where there's been plenty of buzz. Stock has also seen a decent rally.
Really interested in JM Financial as well. We have seen a lot of problems for JM Financial also coming up. So rather than JM Financial, I would tend to be interested in something like a Motilal Oswal or an IIFL Securities, IIFL for that.
Okay, so since we're talking about the capital market space and new entrants coming in the capital market space, we have an exclusive update on the much awaited NSE IPO. Sources tell my colleague Shrimi that the IPO is likely around Diwali. Listen in.
While NSE is inching closer to its long pending IPO plan, which could be materialized around Diwali, there is a crucial step remains, which is NOC from SEBI. Now, sources tells us that NSE, which offers 1600 crore as a payout for settlement, the NOC, the no objection certificate, which is a mandatory requirement for any MIIs to come after the settlement order being weighed and issued by the regulator. Sources also hinting at that currently the settlement review is with high-powered internal committee, and after this committee will review the process, the suggestion will go to whole-time member of SEBI and the discretion at the whole-time member to take a call on accepting that settlement order. But in a nutshell, the NOC will come only after the settlement order will be issued, which is hopefully 2 to 3 months time, which typically takes in such processes. Now, this is also somewhere we are getting sense that since all the pending cases are being hanging for some time, that also includes some past court cases. So that will take a lot of time to sort of have a view on that, and that is why the order will maybe taking some time here in this particular case as well. MIIs having a mandatory requirement to have NOC if they are looking for public listing. So in this case as well, the NSE has to wait for the settlement order, and then only no objection certificate can be secured from the regulator.
Okay, thank you for that, Shrimmi. That's, of course, an interesting update coming your way. Aditya, is there a view you have on the exchanges, a BSE?
Yeah, so NSE is a fantastic company. Once IPO comes in, it is a great investment. BSE particularly is really very expensive. It has run up massively over a period of the last 3 to 5 years. So I tend to avoid BSE and tend to wait for NSE's IPO to come into investment.
Okay. Rajesh, do you have a view with regard to a BSE and where you expect it to go, what levels to look out for?
So BSE is in a uptrend only. There was some corrective move, but again, stock has resumed its upward journey again. And looking at the near-term, short-term structure, we believe that till stock is trading about 2650, 2700 zone, I think trend is likely to exhibit on the bullish side, and possible rally can extend again towards 2950, even 3000 level. So buy on dips would be a strategy for BSE. Even for MCX is also looking very promising, and the way stock is now consolidating after a sharp rally, I think if it's able to hold above 8900, 8850 zone, so I think here also we may see resumption of rally towards 9200 to 9300 for MCX also.
Okay, BSE in focus, MCX in focus. I mean, that entire space, that capital market space is doing okay, not so much the rest of the market. Range bound, I wouldn't say too much to worry about either. Some retailers are doing fine. I want to pull up the V2 retail stock, and we had an interesting conversation today with the company. It's come off its highs, about 0.5% still in the green, because the business updates that have come in were very, very strong for V2 retail. Listen into a slice of this conversation we had with Akash Agarwal, the company's whole-time director.
There are three levers that we're working on. So one lever is the one that we just mentioned, is moving from 1,000 rupees per square feet sale to a 1,200. So that helps with the EBITDA margin. The second lever is, you're spreading out the head office and the warehousing cost to an even larger store footprint. So that also helps increase the EBITDA margin. And the third lever is a better product mix and selling more at full price. So that increases the gross margin by 100 basis points. So that is another lever to increase EBITDA. Even with the shift of the Eid, we showed a 51% revenue growth. So I think we will beat those revenue guidance numbers that we spoke about.
Okay, so this was extremely interesting, the entire conversation, and if you haven't heard it, I'd urge you to go listen.
Can I tell you my favorite part of the conversation?
Please.
He was very clear about what his strategy was, because unlike other retailers who put out business updates yesterday, Bazaar Style and Avenue, V2 has been, an upside and very positive. Strategy is very simple. He says we sell items for 300 rupees that look like they're worth 1,000 rupees. Simple. In a nutshell, it tells you what this company is about. They've not gone in for an e-commerce strategy yet. They are not too keen. They're saying, let's think about it. Now, at a time when everyone wants to sell online, they're clear that they don't want to. I thought that was pretty interesting. And their average selling price is also very, very affordable. You spoke in detail to this company recently as well.
Very impressive. In fact, they've said they have sub 200 stores currently. They plan to go to 700 by FY30. They'll only do 100 stores every year. They'll allocate 100 crores to stores, 100 crore to inventory as a result of the store opening. So it just looked extremely simple in terms of the way the conversation went. But it trades at 90 times. And this is where Aditya comes into the picture. And I want Aditya's view on this. Aditya, if I were just to run the numbers for the next 2 years, it's 20 times FY27. Of course, risks are there on that 20 times earnings, but it looks excellent because thereafter there are 3 years of very strong growth, which they continue to pencil in. How do you look at the business, and how do you therefore judge that this is an appropriate value? And within the value retailers as well, if I zoom out, are there any favorites on your list?
So who knows what happens in FY27? So from my perspective, if you are trying to pay a 90 times multiple for a company penciling in the growth, and if the growth really slows down, the stock market will smash the stock. So from my perspective, the company is doing fantastically well. The update that they have given, they've grown 51%, really very good. But the stock price is too expensive. Amongst all retail companies, the stock price continues to remain really very expensive. You say Trend, for example, that is also very expensive. It trades at about 200 times price to earnings multiple. super duper expensive. So I tend to avoid this entire space. If growth slows down for some reason or the other, there will be a problem. Mind you, growth may not slow down because RBI is pushing in a lot of liquidity into the market, and the monetary policy is also very beefed up. But that cannot be a reason to buy these stocks at super expensive valuations. So from my perspective, these stocks are a clear.
As a query coming in from one of our viewers on our YouTube page, and by the way, you can watch us on YouTube as well. We're available everywhere for you to watch. So Chumki Banerjee Mishra has written, guys, is it still worth buying HDB Finance shares? I thought that's an interesting question. Aditya, you'd like to take that?
Yeah. So fantastic company, HDB Financial. Over the past 3 years, it has done tremendously well. However, of the valuation at which the company has IPO'd, is about 3.5 to 3.7 times price to book. Really looks expensive to me at this stage. You need to wait a little bit for correction. Once a correction comes in towards the region of 750, that's a good opportunity to buy. But a good company will do well over a period of next 10 to 15.
There will be correction to 750. That opportunity should also come.
Never say never in the market. Now, in the market, a lot of things can happen. We're going through a phase where NPS has spiked up for a lot of smaller lenders. Particularly, HDB Financial has had a difficult phase, let's say in 2020 and 2021, when their NPS spiked up. Mind you, HDB Financial borrows at about 8% and lends at about 12 to 15 to 16%. So they are lending to a highly risky class of borrowers, and it cannot, and it is not immune to NPS also. So NPS can come, stock price can go down, and anything can happen in the market.
Anything happen. Never say never for an upside or a downside in the markets. I thought that's interesting. Your BTST calls, Rajesh.
So Aster DM is looking very promising. Stock is almost trading at all-time high trajectory. The way stock is making high top, higher bottom formation, and the way throughout this session, if we look at the behavior, there is a sustained buying action throughout the day. So Aster DM, one can buy for BTST point of view, 665 to 670 would be the BTST target. Keep stop loss towards 628 to buy Aster DM.
Hospitals. Aditya, do you like hospitals? From an investment perspective, apologies.
From a valuation perspective, my topic here would be an Apollo Hospital. Yatharth Hospital also looks interesting to me, and a KEM also looks interesting to me. But right now, both of them are in a middling phase. So I would keep a close watch on them. But Apollo Hospitals continues to be a steady compound.
Okay. Aditya, if I were to ask you to pick one sector in this market that you'd buy at this point.
Capital goods is something that could be very interesting within the capital goods space. You can look at something like a road builder, an NCC, Ahluwalia contracts, or a PSP projects for that matter. A value pick Adani has come in here, and over a period of next 3 to 5 years, the company will further. So capital goods continues to be one of my top picks. Stocks priced reasonably well as something that would be interesting.
Okay. If you're going to see, Aditya, in the next couple of days, maybe by Friday, Saturday, if you're going to see any clarity on the trade deal, would there be any positional bets that you're seeing? Auto, pharma, IT, these would be some sectors that come to mind?
So pharma and IT are two sectors that are going to benefit out of a trade deal. Particularly, IT was pricing in a rise in cost of doing business. If that settles down, that is extremely good. And pharma, particularly the generic companies, the companies like Sun Pharma, Lupin, or Aurobindo Pharma, these companies are at a risk of Trump tariffs. And if pharma tariffs settle down and India has a trade deal with the US, these stocks could really see a push. Also, pharma and IT continue to be two places where you have to be, which could benefit out of a trade deal between India and the US.
Okay, so Lupin is one of those. Rajesh, for you, top pharma picks, I would say, because since we're talking about identifying pharma as one structural idea there, Sun Pharma especially.
So from pharma space, if I go with the technical setup, DV's lab is clearly outperforming stock, and I think here we may see continuity of uptrend. We are projecting target towards 7,200 on a positional perspective for DV's lab. So this one can focus on this with stop loss of 6,700. Another stock where we are focusing at this juncture, that is, Dr. Reddy. Dr. Reddy is also looking promising after a corrective move. Now stock is almost holding its 200-day and 50-day moving average. So I think some pullback action from the current level is likely to be there in this counter, and one can buy this stock with stop loss of 1,240. On the higher side, we believe that 1,350 to 1,400 would be the target for Dr. Reddy in this pullback.
Okay, so those are a couple of pharma names for you, but thank you so much, Rajesh and Aditya, for joining us this afternoon. We'll let both of you go on that note. And it's expiry day, but the move isn't really strong that we've seen. And that's, I don't know, glass half full, glass half empty. But we're closing at the day's, very close to the day's low, maybe not at the day's low. 0.25% lower on the Nifty. Let's pull up the intraday as well. The Nifty Bank is where some of the pressure actually resides. There you go. Just off the day's low, 25,384 was the day's low. We're just about 10 points from there. So very, very close to the day's low and well off the day's high. And that fall from the day's high is likely the expiry day move that we've seen. Let's look at the Nifty 50 heat map as well and see what pockets have done badly. Financials clearly one of them. As you'll see, Kotak, SBI Life, Bajaj Finserv. So the Fin Nifty clearly seeing some bit of pressure, no doubt about that. But pharma, auto are a couple of pockets which have actually done well on a day like this. 1.8% up on a Dr. Reddy's, Apollo Hospitals up 1.8 as well. I want to quickly mark out a Hero, Maruti, as well as an M&M and a Tata Motors, all of which have done reasonably okay on a day like this. So that's the couple of pockets which have actually done well. Outside of that, well, it's been a tough day, frankly. And, it's not been a tough day, but it's been a flat day. But that's just how the week has also been. We're in a bit of a consolidation mode at this point. Let's look at the sectors as well, and let's pull those up very quickly. The consumer durables has done well yesterday, continues to do well today. Auto, pharma, no surprises there. IT flat, in fact, it's closed in the red as we speak. FMCG also mild positive. But PSU banks, metals, realty is where a bulk of the pressure is, if I can call it that. Frankly, it's far and few in terms of pressure. Media is the one that's standing out today, 1.5% higher. Let's look at the advanced decline overall on the NSE, on the exchange, and that's how the advanced decline had. It was quite stable for most part of the day, and then it's reversed a bit. But we've closed close to the 1:1 ratio where the advanced decline is concerned. Let's pull up the Nifty small cap and mid cap indices as well. Well, flat on the mid cap, very, very close to flattish on the mid cap. Let's pull up the small cap, and that has seen some bit of outperformance and no jitters whatsoever, and that's likely the positive, at least on the broader end of the spectrum. Let's look at the BSE 500 top gainers, top losers. Those are some names for you. That move from DCM Shriram, just volumes driving that move, 19% higher. Aster DM was the other one, 8.5% higher. Motilal also doing very well in trade for itself. VST, Raymond and FSN, which is Nika, seeing some bit of a cool off. Raymond, not surprised, because the kind of moves that stock has shown this week, that 5% downtick, not looking too bad for holders from last Friday. Let's now quickly look at what to look out for tomorrow in trade. And there you go. Those are some macros for you that you should have on your radar. US unemployment will be one of those. Don't see a major move there. Those are some adjustments in dividend which will come through tomorrow. And those also, SKF, Sona, Axis, Nestle. There you go. Paras Defense, there's going to be a stock split, 1:2. And there's going to be a bonus issue in Sharda Motors. All of those adjustments, and Aztec, there's a rights issue as well. So all of those adjustments to happen tomorrow. But frankly, completely out of time on India Market Close today. From Tamanna, myself, everyone who puts the show together, thanks so much for watching. But do you want to know everything that's happened in markets today? Stay with us. We have Himakshi, who will take you through all of those updates in Market Express.
Imports become the exception rather than the norm, and increasingly we do almost, last year for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold ICICI CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit. Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims?
Hello and welcome. You're watching Market Express and I'm your host Himakshi Bahugna. Now let's get straight into the show, viewers. So today in the Dalal Street, it saw a choppy session of trade. Nifty managed to shut shop near 25,400 levels. Sensex lost over 150 points. Most sectors ended in the red, with realty, PSU banks and realty being the top laggards. Meanwhile, auto and media lead the gains, ending the day in the green. Now talking about the Indian rupee, so it surged to a 1-month high, gaining 44 paise to a close at 85.27 against the US dollar earlier today. This marks its strongest level since May 27, after closing at 85.71 yesterday. The rupee's rally reflects growing investor confidence amid favorable market conditions. Nestle India is spicing up its production game with a brand new Maggi noodles line at its Sanand facility in Gujarat. Now, the company has invested 105 crore rupees in this expansion, which will boost its annual noodles production capacity by 20,300 tons. Currently, Nestle's total Maggi capacity stands at 1,700,000 tons per annum, with about 77% of that already being utilized. Coromandel International is set to expand its footprint in the agrochemical space after the Competition Commission of India approved its acquisition of 53.13% stake in NACL Industries. Now, the deal valued at around 820 crore rupees will see Coromandel buy out the majority share from NACL's promoters with an open offer to public shareholders to follow. NACL, which reported revenues of 1,235 crore rupees in FY25, is known for its crop protection products and contract manufacturing. Coromandel, with a much larger FY25 revenue base of 24,085 crore, aims to fast-track its entry into contract manufacturing, broaden its product portfolio, and cement its position as a leading player in the Indian crop protection industry. Aurobindo Pharma's biosimilars push gets a major boost as its subsidiary Curatech Biologics has received European Commission approval. So the approval is for Dazubliz, a trastuzumab biosimilar used to treat HER2 positive breast and gastric cancers. Now, this marks Curatech's third biosimilar approved by the EMA and its fourth overall in Europe, reinforcing the company's growing presence in oncology care. So the approval follows a positive recommendation from the European Medicine Agency in April. Meanwhile, Aurobindo's Dutch subsidiaries Pharmacin BV and Agile Pharma BV have merged, but with a combined FY25 turnover of just 26 crore rupees, the move has no consolidated impact on the company's financials there. Hindustan Zinc has delivered a record performance in the first quarter, mining 265,000 tons of metal, a 1% increase year-on-year. However, refined zinc output slipped 4% to 202,000 tons and silver production dropped 11% to 149 tons, mainly due to lower input from the SK mine. So on a brighter note, wind power generation surged 24% to 134 million units thanks to high wind velocities and seasonal factors. Hindustan Zinc Alloys also posted its best ever quarter producing 5.1 thousand tons. Despite the challenges in refined output in silver, the company's mine, metal and renewable energy numbers highlight its operational strength this quarter. Bazaar Style Retail has also posted a strong performance for the April to June quarter, with revenue from operations jumping 37% to 3,777 crore rupees. However, the same-store sales growth dipped by 3% in quarter one, largely because of the Eid festival. It shifted to the previous quarter, impacting footfalls and the sales comparisons. A normalized basis, SSSG still rose 11% in quarter one. Though that's a slowdown from the robust 20% growth seen in the previous quarter, the company also continued its aggressive expansion, adding 22 new stores and taking the total store count to 232. Overall, Bazaar-style retail remains a solid growth path even as a festive timing affects quarterly comparisons there. Bharat Electronics Limited, or the BEL, has received a buy rating from Asian Market Securities with a target price of 550 rupees, implying a 30% upside from the current levels. So the firm is expected to sustain strong growth driven by steady execution of its robust 71,650 crore rupees order book and its dominant position as a key platform integrator in India's defense ecosystem. With direct leverage to rising defense budget allocations, BEL is forecast to deliver a revenue and EBITDA compound annual growth rate of 19% and earnings growth of 20% from FY25 to FY28. Currently trading at a price to earnings ratio of 44 times FY28 estimated earnings per share. Punjab National Bank's Q1 business update has prompted Citi to maintain its sell rating with a target price of 101 rupees, citing muted advances growth of 1.3% quarter-on-quarter and deposits up 1.4%. Overseas advances remain flat and Citi expects the RAM segments that is the retail, agriculture and the MSME to drive growth, but projects a 2% QOQ decline in the net interest income and a 12 basis points fall in the net interest margin due to a higher share of EBLR-linked loans. So the Morgan Stanley also remains underweight on PNB with a target price of only 100 rupees, highlighting that loan growth has decelerated and in line with the broader system, domestic loans have risen 1.3% quarter-on-quarter and 9.7% year-on-year, while deposits grew 1.7% quarter-on-quarter and 12.2% year-on-year. The bank is gaining market share, but likely at the cost of lower spreads as growth moderates and margins come under pressure. Tata Power has been ordered to pay over $490 million in damages and interest to Claros Capital Partners after losing an arbitration case. So the dispute stems from a proposed coal mining project in Russia, where Claros alleged breaches of confidentiality and non-circumvention clauses in an NDA. Now, the award includes a 5.33% simple interest from November 2020 and an additional $8.29 million in legal costs. So Tata Power says that it is reviewing the award and may challenge it. The arbitration process began in 2020 and concluded with hearings in February 2024. At its AGM, Tata Steel outlines a focused strategy, tightening costs in Europe while pushing for expansions in India. The company plans major efficiencies at its Netherlands plant and aims to turn around its UK business by 2026. Despite pressure on steel margins, Tata Steel stays optimistic, eyeing stable coal prices and steady spreads. Back home, it plans to boost mining capacity and grow volumes in the coming years as well. Macquarie says Indian financials are stable and resilient, expecting nearly 15% EPS CAGR over 3 years. So margin issues are seen as temporary, with large private banks preferred. PSU banks may lose deposit share and see EPS decline by FY26. Macquarie is also bullish on general insurers but cautious on life insurers due to regulatory overhang. So the brokerage firm's top picks are HDFC Bank, Axis Bank, AB Capital, PSC, Shriram Finance and LIC. Nika is also seeing a promoter block deal as Harinder Pal Singh Banga plans to offload a 2.1% stake worth 1,198 crore rupees at a floor price of 200 rupee per share. So Banga held a 4.97% stake as of March end, and this follows a 1.4% stake sale by HS and Indra Banga in August 2024. Tata Motors June car sales hit their weakest point since late 2021, pulling down the company's quarterly average to a 3-year low. The slowdown raises concerns just as the industry braces for muted growth in FY26. Still, the company stays upbeat, banking on new models like the Altroz and Harrier EV, with Sierra lineup also on the way to rev up demand and regain momentum. CLSA's Lawrence Blanco highlights that Nifty continues its upward march after breaking out of a tight trading range. So the recent breakout supports an upside target of 26,333 with immediate resistance near 26,277. So among stocks, Ultratech Cement is identified as a promising buy candidate in this momentum setup. Kotak highlights a striking trend in Indian equities inside RS are exiting, but retail investors and DIIs are stepping in. So this insiders out, outsiders in pattern is driven by price agnostic buying from retail participants who continue to accumulate despite elevated valuations. The result, well, a changing ownership landscape as public hands grow stronger. Morgan Stanley stays bullish on India, calling fundamentals strong but underpriced. Despite lagging in the global bull run, the firm expects India to outperform emerging markets in the medium term. It favors financials, consumer discretionary and industrials while staying underweight on energy, materials, utilities and healthcare, making it a stock pickers market with focus on domestic cyclicals. Sources tell NDTV Profit that SEBI is stepping up action against stock manipulation driven by social media platforms. So the market regulator is probing several cases involving unregistered finfluencers promoting stocks via Telegram and YouTube without regulatory approval. So with multiple investigations underway, SEBI is expected to issue orders in 4 to 5 cases shortly. In an NDTV Profit exclusive, sources say that the GST Council is considering a major revamp, scrapping the 12% tax slab to adopt a streamlined 3-tier structure. If approved, several goods may shift to either the 5% or 18% bracket. The matter is expected to be taken up at the Council's upcoming meeting, signaling big changes ahead for the indirect tax regime. The government plans to sell MTNL assets to state and central entities without an auction, opting for a simplified valuation process to speed up monetization. So this move aims to bypass the lengthy bidding procedures that often delay asset sales. Initial valuations of select MTNL assets are estimated at 6,000 to 7,000 crore rupees. The sale will be phased to help repay MTNL's mounting debt of 33,568 crore rupees. So separate framework for private buyers is still under discussion, while valuation surveys are ongoing in Delhi and Mumbai. A mini trade deal between the US and India is expected within the next 2 days, with talks intensifying in Washington. So the Indian delegation has extended its stay to finalize negotiations. The US is seeking greater access to India's agriculture and dairy sectors, while India is pushing for relief in labor-intensive exports. Officials say the doubling trade with the US is unlikely without broader tariff reductions. So the deal could mark a key step in strengthening bilateral economic ties. The US imposes a 20% tariff on the most Vietnamese goods under the Trump-era deal. So with coffee notably not excluded. So previously taxed at mid-single digits, the new duty raises costs for US consumers despite falling global coffee prices. Vietnam exports over 35% of its coffee to the EU, while the US accounts for around 7%. Analysts say that the tariff offsets the benefit of lower prices and may prompt exporters to explore alternate routes like Singapore. So the US handling of Brazil, its top coffee supplier, will also be key. IL&FS has approached the NCLT to cancel Brookfield's 1,080 crore bid for its BKC headquarters. So the bid made through Kronos Properties required Brookfield to maintain performance guarantees until a definitive agreement was signed. So however, Brookfield failed to renew the guarantee in April, prompting IL&FS to seek its removal as a successful bidder. So the move could reopen the bidding process for the prime Mumbai property. The Ministry of Information and Broadcasting has revised its TRP guidelines, opening the television ratings market to OTT platforms, digital distributors, and big tech firms. So this shift from a closed system aims to foster competition and innovation in audience measurement. So the new rules eliminate outdated clauses, bar rating agencies from consultancy to prevent conflicts, and prioritize unified, transparent viewership data across TV and digital platforms, benefiting advertisers. Foxconn is reportedly pulling back hundreds of Chinese engineers from its Indian iPhone plant, potentially slowing local training and tech transfer. So the quiet move may tie into Beijing's limits on outbound tech and comes as Apple preps iPhone 17 production, raising concerns about cost and efficiency in India. TIE, that is TIE Bangalore, has joined hands with Aerospace India Association to launch a dedicated platform that connects startups, large companies, and academic institutions in the aerospace sector. So the aim is to fuel innovation, tackle real-world industry challenges, and strengthen India's path to become self-reliant in aerospace technology. Swiggy is likely to shut down its small business platform, Minis, by August 10. So launched in 2022, Minis offered a zero-commission model for small brands and home businesses. It moved from the Swiggy app to a separate site in 2024. Despite supporting over 65,000 entrepreneurs, the platform may soon close as Swiggy continues to streamline operations following the shutdown of Genie and licensing of its private labels. Del Monte Foods, a household name for over a century, is seeking bankruptcy protection. So the 139-year-old company, known for its canned fruits and vegetables, is struggling as more consumers turn to fresher or cheaper alternatives. To keep things running during the process, Del Monte has secured over $900 million in financing. So this will help the company operate as it looks for a buyer and works through its sale. Mahanagar Gas has made it easier for domestic customers to submit their gas meter readings. The company has rolled out a new service that allows users to send their meter reading through WhatsApp. Now customers can also simply reply to a message from MGL's official WhatsApp account by sending a clear photo of their PNG meter. So this is expected to help with timely and accurate bill generation. HDFC Bank CEO Shashidhar Jagdishan has taken his legal battle to the Supreme Court, seeking an urgent hearing to dismiss a fraud case filed against him by the Leelavati Kirtilal Mehta Medical Trust. So the Supreme Court quickly agreed to hear the matter tomorrow. This comes after the Bombay High Court earlier this week refused to fast-track the case, stating that there was no urgency and scheduling the next hearing for July 14th. Dubai has completed its first piloted test flight of an all-electronic air taxi, marking a major leap in urban mobility. The aircraft, developed by Joby Aviation, carried one pilot and is designed to seat 4 passengers. Despite soaring temperatures over 43 degrees Celsius, the test flight was smooth, showcasing the vehicle's resilience and comfort. The air taxi can fly up to 160 km at 320 kmph for offering a 10 to 12 minute ride from Dubai airport to Palm Jumeirah, slashing travel time from 45 minutes by road. So the service is expected to launch commercially in early 2026 with vertiports under construction across key city hubs. Rescue efforts continued for a third straight day in Himachal Pradesh Mandi district, where 34 people are still missing after heavy rain and cloudbursts triggered massive landslide and flash floods. So the torrential rain earlier this week washed away 14 bridges, nearly 150 houses, and left 11 people dead, most of them in Mandi. Authorities fear the death toll may rise as hopes fade for those missing for over 48 hours. The weather department has also warned of a moderate flash flood risk in 6 districts, including Mandi, Kangra, and Shimla, till Friday. The Supreme Court has sent a clear message to those who engage in risky driving. Insurance companies are not required to pay compensation to the families of drivers who die because of their own mistakes during stunts or reckless driving. So this ruling came as Justices P.S. Narasimha and R. Mahadevan rejected a plea from the family of a man who died when his car overturned due to his own high-speed negligent driving. A British F-35B stealth fighter jet remains grounded at Thiruvananthapuram airport 19 days after an emergency landing due to bad weather and low fuel. So the aircraft, part of HMS Prince of Wales carrier group, later developed a hydraulic snag. With local repairs unsuccessful, the UK is now considering airlifting it aboard a C-17 Globemaster, a rare move for such jets. So the $110 million aircraft has become an unexpected tourist magnet and meme sensation. Meanwhile, a 40-member UK team is en route with specialized equipment to attempt final repairs. Markets are also closely monitoring developments on Trump's massive tax cut bill. The U.S. House of Representatives moved a step closer to voting on the bill after Republican leaders managed to overcome opposition from the conservative members who had threatened to oppose it. The bill, which was first passed by the House in May, narrowly cleared Senate on Tuesday by a single vote. So it is expected to add $3.3 trillion to $3.4 trillion to the national debt. Meanwhile, the U.S. Senate also struck an AI regulation ban from Trump's mega bill. The Trump administration is putting a pause on over $6 billion in federal education funding. So this includes money after school programs, teacher training, and English language support. According to a memo from the U.S. Department of Education, the final decision on funding for the upcoming school year hasn't been made yet. Wang Ning, the creator of the wildly popular Labubu dolls, becomes China's 10th richest billionaire as his net worth soars to $22.1 billion, up from $7.59 billion in 2024 as per Forbes. So the collectible toys have taken the world by storm, driven by limited edition celebrity endorsements and the blind box trend. So a rare Labubu doll recently fetched for $150,000 at auction. So the brand's global demand and strong resale value continue to fuel its meteoric rise. China is slashing production across several industries to curb overcapacity and destructive price competition, with the solar sector leading the move. Starting July, major solar glass manufacturers will cut output by 30% as prices fall below production costs. The policy aims to stabilize markets and protect industry health. Indian firms like Borosil Renewables could benefit from reduced Chinese supply, potentially gaining pricing power and market share. Well, with that, viewers, it's a wrap on Market Express, but please stay tuned to NDTV Profit as Sanjana Chauhan brings you Profit 360 on the other side of the break.
Imports become the exception rather than the norm, and increasingly we do almost, last year for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold ICICI for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations?
The Nifty and Sensex closed lower for the second consecutive day. Benchmark indices underperformed the broader market indices. Nifty PSU Bank falls for the second consecutive day, making it the worst performing sector for the day. The National Stock Exchange is inching closer to its long pending IPO, which could materialize around Diwali, subject to regulatory clearance. Sources say an interim trade deal between India and the United States is likely to be finalized in the next 48 hours, with negotiations underway in Washington. Government sources tell NDTV Profit the Foxconn disruption is temporary and will only last a month. This is as Foxconn Technology asks hundreds of Chinese engineers and technicians to return home from its iPhone factories in India. Sources say the government has decided to do away with the auction process for the sale of MTNL assets to state and central government entities. A US-based AI founder accuses an Indian techie, Soham Parekh, of working at multiple startups simultaneously under false pretenses. The INB ministry is looking to bring amendments in the policy guidelines for television rating agencies. Sources say SEBI is speaking with Google and Telegram to curb the activities of unregistered investment and stock market advertisers. Good evening, you're watching Profit 360 on NDTV Profit and I'm Sanjana. Along the next half an hour, we're going to bring you the latest on markets as well as national and international news. So let's dive right into it and have a look at how the markets fared today. Nifty and Sensex closing lower for the second consecutive day. SBI Life Insurance and Kotak Mahindra Bank were the top losers in the Nifty. Benchmark indices, meanwhile, underperformed broader market indices. But for a detailed roundup, let me go over to my colleague Harsh.
Well, the index itself saw a bit of pressure today and it was expiry day. So some of that move can be attributed to the expiry day as well. From 25,500, we fell below the 25,400 mark. And that seems to be where the weakness seems to lie. And that's where we dropped to. We closed very, very close to the intraday low as well. So something to keep in mind. We'll need to understand whether we start above 25,400 or not tomorrow, because that's an important level to look out for. But that's on the index. Let's talk about certain stock sectors which were buzzing. One, financial services was the one pocket which continued to be under some bit of pressure. The heavyweights too didn't aid the index at all today. What we saw though in terms of positive moves, auto, pharma were the two places where there was some positivity, at least where the Nifty 50 index constituents are concerned. So some of those sectors did well in trade today. And even when we pull up sectors, that's what you'll see. Outside of media, within the broader market universe, where the Nifty media was up 1.5%, pretty much all indices sectorally were range bound, plus minus 1%, not more than that. So a fairly range bound day of trade, a fairly range bound market as well. Let's now look at how broader markets did. And it was a flattish move where the breadth was concerned right towards the end. But for a better part of the day, there was a slight positive bias where the market breadth was concerned. Now let's talk about the Nifty mid-cap and small-cap indices. The Nifty mid-cap closed around a 1/5% higher. The Nifty small-cap did a little better. So there's some bit of outperformance there as well. So those were, that's the way in which the day went by. Metals, realty, were a couple of pockets which didn't do as well today. But again, nothing majorly negative in that sense. In terms of movers, a couple of them big movers. Mind you, there were even business updates which came through. I'm sure that there's plenty on the channel that's been spoken about that, but business updates was the one focus area, including in the financial space. And there were some big movers. DCM Shriram was one of them, and Aster DM was one of them. And the BSE 500 will kind of reflect some of those big losers and gainers.
Right, Harsh, thanks so much for that. Meanwhile, Sridhar Shivaram, investment director at Enam Holdings, is placing his bets on large private and PSU banks, citing their strong fundamentals and improving profitability as key reasons for his bullish stance. Let's listen in.
We like even the banks. We know that the next 2 quarters may not be that great, but the governor has given some bonanza in terms of CRR cut, so that helps them in terms of the earnings pickup. So even the banks, if you're willing to ignore the next 2 quarters, and we are hopeful that credit will pick up in the second half. So that's how we are looking at it. So we are okay with private banks, some few PSU banks.
And it is a story that is rocking Twitter and Silicon Valley. An Indian techie named Soham Parekh is going viral on social media. He is being called a scam and a fraud for working at different places simultaneously. In other words, moonlighting. Tweets are buzzing by his name, CEOs are expressing shock and disdain, and by now there is a whole big controversy surfacing by the name Soham Gate. But this story has 2 intriguing sides. To start with, how did he manage to get jobs while already working with multiple firms? Were thorough background checks not done? And second, is it really wrong to work in different places at the same time? This dichotomy is exactly what is dividing support and criticism for Soham. But for more on this, let me quickly go across to my colleague Himakshi, who is standing by right now to give you a background of who Soham is and the allegations that are being leveled against him. Himakshi, let me come to you now.
Absolutely, Sanjana. So 1 techie and 4 jobs. Yes, you heard it right. So let's dive straight into the viral moonlighting case. Firstly, who is Soham Parekh? So Soham Parekh is an Indian software engineer who reportedly holds a bachelor's degree from the University of Mumbai. a master's degree from Georgia Institute of Technology. On the paper, he looked like a dream hire, but his resume boasted stints at top AI startups like Dynamo AI, Union AI, Synthesia AI, and Allen AI. But behind this glowing CV was a storm brewing. But what is he being accused of? Well, multiple startup founders now accuse Parekh of moonlighting, and that is secretly working at 3 to 4 startups simultaneously without informing his employers and scamming multiple startups by not disclosing it. So the founders allege that he manipulated the system to land multiple jobs. Now let's look at who accused him and of what. Firstly, Suhail Doshi, who is the co-founder of Mixpanel, founder of Playground AI, says that 90% of Parekh's resume was fake. He was fired within a week. Flo Crivello, CEO of Lindy, echoed the same. Matthew Parkhurst of Antimetal, Nicole AI of Fleet AI, and Adish Jain from Mosaic all are backing the same story. Hired him, discovered moonlighting, and fired immediately. So one even called him a liar, Sanjana. So in this remote first world, Soham Parekh has become the poster boy for the darker side of tech hiring. And his story is setting off major alarm bells on the background checks, resume fraud, and startup hiring hygiene. Back to you, Sanjana.
Right, Himangshi, thanks so much for that. Indeed, 1 coder, 4 jobs. But like you rightly said, the internet seems to be divided on whether this was moonlighting or moon scamming. We will continue tracking that story and bring you all of the development. Moving on to our top focus this evening, Foxconn Technology Group has recalled hundreds of Chinese engineers and technicians from its iPhone factories in India, a move that threatens to derail Apple's aggressive production ramp-up. Over 300 Chinese staff, crucial for training and technical operations, have left the southern India plants in the past 2 months, leaving Taiwanese support teams to oversee the transition. The sudden exodus, reportedly linked to Beijing's tightening grip on technology and labor exports, is expected to slow local workforce, training, disrupt production timelines for the upcoming iPhone 17, and raise short-term costs, posing a significant challenge to Apple's plans to shift more manufacturing out of China. And there is some breaking news coming in. However, the ministry is seeing, the sources are in fact telling NDTV Profit that they are seeing this as a temporary disruption. My colleague Shrimi bringing us more on this. Shrimi, we understand that the recent disruption at Foxconn is something that government sources are potentially looking at as being temporary, just a bump in the road, also adding that maybe India is well poised to handle it. Give us all the details.
Yeah, clearly, Sanjana, what we are picking up from the top sources in METI is that the government is not pressing the panic button as yet, and in fact they are saying that there's no cause for concern, calling the disruption temporary and pointing out that India has sufficient manpower with local machine manufacturing also picking up the pace. The other thing is which sources is highlighting at this point, that Foxconn technician regularly coming from China, US and Taiwan, and so there is no as such shortage which affect the overall manufacturing at these bases. Moreover, several companies have started manufacturing machine already, and at most this appears to be a temporary disruption which could last for over a month or not beyond that. In fact, Foxconn recent move to recall 300 engineers to China may be linked to its government decision to strengthen the supply chain, is what hint we are getting at this point. And in fact, from the Foxconn side, there are some indication coming in that they are planning to hire 500 to 1,000 Indian employees, making the count to 40,000 at these manufacturing bases by this month itself. Now, sources also hinting at that since it's a temporary disruption, it could have some impact on the delay part, but it's just a temporary one and it won't last for long. And in fact, they are saying that Apple FY26 plan remain ambitious, and if you see that the tech giant, the US tech giant, is already targeting 27 billion production value from India, and that will continue. There is no change in that estimation and projection. And the ministry is anyway examining the move and will intervene as and when it's needed at this point of time. But it is very important here that after this China authority is kind of indefinitely holding up key machines in the recent past, we have seen in the case of rare earth, where the restrictions are coming as far as exports is concerned. So clearly this is follow up from there, and such employees are recalling. So clearly the government is watching this move, and we are tracking this story closely, Sanjana.
Shrimi, thanks so much for bringing us that update. We'll continue tracking how this actually impacts or disrupts Apple's India push. But for now, government sources telling us that all is well and India is actually poised to deal with this very temporary disruption. Shrimi also bringing us the report on the NSE that is inching closer to its long pending and awaited IPO, which could now materialize around Diwali. This is subject to regulatory clearance, like securing an NOC from SEBI. And to tell us more about this, let me quickly go back to my colleague Shrimi.
While NSE is inching closer to its long pending IPO plan, which could be materialized around Diwali, there is a crucial step remains, which is NOC from SEBI. Now, sources tells us that NSE, which offers 1,600 crore as a payout for settlement, the NOC, the no objection certificate, which is a mandatory requirement for any MIIs to come after the settlement order being weighed and issued by the regulator. Sources also hinting at that currently the settlement review is with high-powered internal committee, and after this committee will review the process, the suggestion will go to whole-time member of SEBI, and the discretion at the whole-time member to take a call on accepting that settlement order. But in a nutshell, the NOC will come only after the settlement order will be issued, which is hopefully 2 to 3 months time, which typically takes in such processes. Now, this is also somewhere we are getting sense that since all the pending cases are being hanging for some time, that also includes some past court cases. So that will take a lot of time to sort of have a view on that, and that is why the order will maybe taking some time here in this particular case as well. MII is having a mandatory requirement to have NOC if they are looking for public listing. So in this case as well, the NSE has to wait for the settlement order, and then only no objection certificate can be secured from the regulator.
Thanks so much, Shrimi, for that. And on to another NDTV Profit exclusive. In a major policy shift, the government is scrapping the lengthy auction process for state and central entities interested in acquiring MTNL's assets. Now, this move comes on the heels of escalating process by the Mahanagar Telephone Nigam Limited employees, who have launched a phased agitation demanding clarity on their future as MTNL services are integrated into BSNL. The employees' core concern: job security and a transparent roadmap amid the ongoing merger. For all the latest updates and what this means for MTNL's workforce and potential buyers, let me quickly go straight to Aishwarya for the inside story.
Well, debt-ridden MTNL has been reeling under pressure for a very long time now. Here's what we're picking up from our sources as far as MTNL's revival plan is concerned. The government has decided to do away with auction process for the state and central government entities. MTNL assets will be offered at simple valuation to the government buyers or those entities with the state or the central government. Now, the move is aimed at cutting down lengthy bidding as well as valuation process, which often takes months or even years. The initial valuation so far that has been assessed through a survey across Delhi as well as Mumbai of the MTNL assets is pegged at about 6,000 to 7,000 crore. This is just an initial figure, and tranches of survey are still underway and will happen in phases in the next couple of months. The framework, although for private players or private buyers, those interested in buying properties or land assets of MTNL, is still under consideration. As far as the DOT is concerned, the MTNL asset monetization will be done in phases, as I mentioned, to repay the mounting debt. MTNL's debt has surpassed almost 33,000 crore rupees as of today and has been defaulting across the various banks and lenders that have provided loans to MTNL of over 8,500 crore rupees. Now, what's important to note also is that a total of 280 MTNL assets and BSNL non-core assets are to be monetized, but only 220 of them will actually be monetized under this plan, is what we're learning from our sources. Valuation surveys are being done both across Delhi as well as Mumbai to speed up the process.
And it's time for yet another NDTV Profit exclusive. A group of ministers chaired by Bihar Deputy Chief Minister Samrat Chaudhary, mandated to look at GST rate rationalization, is considering scrapping the 12% GST slab as part of an overhaul plan. Items like butter, ghee, fruit juice, almonds, processed foods and budget hotels may shift to either the 5% or the 18% slab. Now, the council is expected to take up rate rationalization in its upcoming meeting. My colleague Shrimi brings us all the details.
Well, the proposal is actively under consideration to eliminate 12% tax slab, as a part of major restructuring of GST tax structure and moving towards the 3-tier structure from the current 4-tier structure of GST, which comprises 5%, 12%, 18% and 28%. At present, items like butter, ghee, fruit juice, almonds, footwear below 1,000 baht, solar heaters, processed food as well as budget hotels attract 12% of GST rate, and the discussion is underway on whether to move some of these essential items, sensitive items, to the lower bracket, which is 5% of GST, and the non-essential and less sensitive item to the upper bracket, which is 18% of GST. Another discussion is also underway to retain the existing rates of GST, and the view among some states that we should not tinker with the existing GST rate and perhaps will shift gradually and merge gradually to these rates towards making the whole structure simplified. However, it is very important to note here that these entire discussion are in still in the deliberation phase, and any decision in this regard will be taken by GST Council only whenever it's meeting and taking up the matter.
We also spoke to Abhishek Rastogi, lawyer and founder of Rastogi Chambers, and he believes that a 3-rate structure of 0, 15 and 30% would be ideal for GST. He added that the rate rationalization will reduce classification disputes as well.
Once this rationalization happens, then the consequential effect would be that there will be lesser of disputes. Today, there are a lot of disputes between classification of goods and services, whether these would fall within the category of 5%, 12% and 18%. Now, if this rate goes away, the classification disputes will also be reduced. That is one. I don't think the arithmetic will go against the revenue. They would do that arithmetic calculation to, ensure that the revenues do not dip. So that should not worry the revenue at all. But I think in the long run, this rate even of 5% must go off. So I think what we must have is a rate of exemption, 0%, maybe about 15% rate on all goods and services, which would have about 80% of the goods and services covered within the tax slab, and 30% rate. So I think ideal situation would be 0%, 15% and 30%, 3 rates, that's all.
And now a quick update coming in with regards to the very contentious and significant relationship and conversation going on between India and the United States. Sources are in fact telling NDTV Profit that there is a breakthrough in the India-US trade talks and a deal is expected by the end of this week. Let me quickly go across to my colleague Rishabh for all the details.
Right. What we're picking up on this mini trade deal is the fact that it is set to come out within the next 2 days. That is between July 4 and 5 is when we can expect this mini trade deal between the US and India to come to fruition. This is significant because it was imminent that a deal was reached before July 9th, which is the tariff pause deadline that was imposed by the Trump administration. What we're also picking up is that this deal might only feature broad-based tariff reductions. So this is significant given the July 9 deadline. And it might not feature any sort of sectoral relief in terms of the sectoral tariffs that were imposed on Indian exports with regards to steel, aluminium, as well as auto and auto components. What will also perhaps be left untouched currently in this first tranche or in this mini tranche is the dairy and agri part of this trade deal. That is something that might be picked up at a later stage, given that there is another tranche that will be negotiated and finalized around the September-October mark. And then the full and final trade deal will be decided at a later date. So that's what we're picking up over the next few days. There might be 4th of July fireworks back here in India as well.
Meanwhile, CII President Rajiv Memani says India seeks a balanced US trade deal, rejecting high tariffs. The Commerce Ministry's detailed prep addresses India's challenges and tough issues like agriculture will be tackled later in phases. Let's hear that reaction coming in.
The Indian industry's view has been very clear. When we have engaged with CII members, I think we are not looking forward to a 25% tariff. It's not just the tariff, it's also relative competitiveness with other countries. The level of preparation that the Ministry of Commerce has done and the engagement that they have had with industry, the engagement that they have had with various ministries, including the Ministry of Agriculture, has been very detailed. So I feel very confident that they understand the challenges that Indian industry and particularly some sectors which you mentioned, agriculture and dairy, have, and those will be adequately addressed. As long as we get a balanced, fair, reasonable FTA, and we also believe that this FTA will be done in tranches. So it will not be one, I think it will probably be done in phases, and those areas which are more tricky, which require more consultation with stakeholders, have greater political ramifications, may be dealt with later on.
And it's another top focus this evening. SEBI is turning up the heat on stock market manipulation, launching an aggressive crackdown on unregistered finfluencers peddling tips through WhatsApp and Telegram. The regulator is teaming up with major social media platforms and deploying advanced surveillance to weed out pump and dump scams and protect retail investors from fraudulent advice. Let me quickly go across to my colleague Charu, who has all the details.
Very important story here because social media platforms, which are typically used to connect to more people and reach out to masses, are being used by unregistered investment advisors, finfluencers, to sort of lure a lot of people in on the pretext of high profits and get them to lose their money. Now, what is happening here is that SEBI found that there's a lot of volume of such entities operating on YouTube channels or on Telegram channels where they're giving unsolicited advice on stocks and leading to a lot of cases where retail investors end up losing their money or get taken for the because they do not know either better or they get lured by the promises of very high returns. SEBI is currently in the process of investigating several such cases and is also in touch with these platforms to get more information about these cases. We have also come to know through several sources that about 3 to 4 of these cases are going to be seeing their completion soon, as there will be an order in the next coming months, and we are still on the story and we'll let you know what happens next and how further developments roll out.
That's right, and we will be discussing this on The Big Question this evening at 6 p.m. and at 9 p.m, so tune in. And moving on, the high-profile sale of the iconic IL&FS headquarters in Mumbai's Bandra Kurla complex has hit an unexpected roadblock. In a dramatic twist, IL&FS has approached the National Company Law Tribunal seeking to cancel the 1,080 crore bid from Canadian asset management giant Brookfield. Now, the move has thrown the marquee deal into uncertainty, raising fresh questions about the future of one of Mumbai's most valuable commercial properties.
We are here in Mumbai's BKC, and behind me what you see is the IL&FS headquarters. Now remember, this building was supposed to be handed over to Brookfield in a 1,080 crore deal, and now IL&FS has moved NCLT seeking to remove Brookfield as a successful bidder. Now the bid required Brookfield to maintain performance guarantees till a definitive agreement was closed. The performance guarantees would have been in term of demand drafts of somewhere around 108 crore rupees, which Brookfield was supposed to mandatorily renew 15 days prior to the date of expiry of the previous demand draft. Now Brookfield has been doing this for some time, but as of April they have failed to renew the performance guarantee. Now IL&FS has sought to remove Brookfield as a successful bidder for this headquarters in Mumbai's BKC. Remember, BKC is a premium business district in Mumbai and houses prominent offices of domestic and multinational companies. Now the case is going on in NCLT, and NCLT has said that as of now no third party rights can be created on this building that you see behind me, which means no one can come in and lease a property, no rentals, no income anyway as such, and the property continues to remain vacant. Now we have reached out to Brookfield. They have said they don't want to comment on it as the matter is still sub judice, but do stay tuned as we bring you more updates.
And that's all the time we had on this edition of Profit 360. Stay tuned to NDTV Profit for all of the news and updates.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your...
Hello and welcome. You're watching KYC. I'm Harsh Saita. With me is Anushi Vakharia. And you know, defense is the big theme that's playing out, right? We had one defense counter coming in yesterday giving us extremely strong guidance and therefore warrants better discussion. And today, therefore, we've picked IdeaForge as the company we want to discuss and talk about and speak with as well. So let me quickly first talk about what I want to know with regard to IdeaForge. I'm going to start off with point number one being execution. One thing is having an order book which is large, but the second piece is what's the visibility with regard to execution. And we'll talk about that. But more importantly, it's also the order book build-up which is necessary. What's the outlook like with regard to orders coming in? Have that improved in some fashion? And what's the outlook like going forward? Now, in terms of margins and profitability as well, where do gross margins stabilize at? Where do EBITDA margins stabilize at? And we're talking maybe not FY26, but we're talking maybe the next 3 years and the next 5 years. And that gives us better visibility on whether this one can actually be something that stands out within that defense space and within the private defense space, mind you. Can they stay ahead of competition with regard to the fast evolving technology that's playing out in unmanned aerial vehicles, which is the business that they do? What's the outlook with regard to overseas markets? They've spoken enough and more on all of their con calls about expansions into Oman, opportunities coming out of North America, Africa. They've spoken about the large India opportunity coming out. How quickly does that translate both India as well as overseas, but more importantly overseas? Improvement in working capital parameters. Now, this is one of the other key drags in terms of the way the financials are playing out. You're seeing a sizable amount blocked in working capital. So these are all the points that I would want to know first off from IdeaForge, but we'll start off by understanding the business first. And it's critical to understand it because you want to understand whether there's a differentiator in the business or not. One, it's in the business of manufacturing unmanned aircraft systems. In simple terms, it's UAVs, which is unmanned aerial vehicles that they manufacture, and they're a leader in that market in India at the very least, and even abroad. From the commentary that they are suggesting, they're saying that they have in the pipeline and plus already ratified over 70 patents within this space, and therefore they are a leader in India but also looking to push with the global expansion that they have. Execution nearly completely depends on the order book is what they have suggested at the end of their Q4 con call, and therefore will be important to understand as to how both of those play out. But something from a business perspective that you must keep in mind: execution entirely depends on order book. Let's talk about the use case now. I'm going to start off with civil use. Surveillance, security, patrol and municipal. That's the broad breakup in the civil use segment. Then it's used within the mapping segment. In the mapping segment, land surveys, minings, estimations both of area as well as depth within certain civil and application use cases. And now then you have these four, which is largely to do with defense: anti-terror, border security, coastal security, crime patrol. Municipal cases also involve traffic management. So there are plenty of cases, right, of using UAVs, and therefore there's no lack of that. But these are the broad-based applications where IdeaForge has a presence. But you want to talk about some of the business verticals and how they're split.
Yeah, absolutely. So, you just emphasized on the last part about how they're catering to the defense side of the business. But from FY22 to FY25, if you are looking at the mix from the defense, that has come down significantly. From what was 80% of a mix has now moved to almost at the range of 60%, while for civil has seen almost a uptick of 20%. On the other hand, 20% was the mix earlier, which has now moved to 41%. Now, that's the kind of mix that we are looking at. But, let's talk about the broader products also which are there. First is the Zolt, which is a tactical drone that we are looking at. Most of the company products range in catering to the drone solutions that we are looking at. Along with that, we are looking at Yeti, which is a middle mile high altitude log drone as well. Now this drone is an important update that we are seeing, which is the Switch UAV services, which is declared as fit for Indian military usage. Now, just in the recent conversations, the defense industry had pointed out that there's a lack of drones in terms of where the military usage is concerned. So this one is an important one to keep an eye out for. Netra 5, another one, along with Flight, are some of the other drone services which are available from the company that we are seeing. Right, Harsh?
Yeah, absolutely. So Flight is actually their drone as a service offering, which is more of an annualized revenue, I would assume, but we'll quiz management on that as well. And more importantly, I want to also cover Yeti, because Yeti is something that they've been working on for the last couple of years. It's a middle mile, high altitude logistics drone. So it's actually into logistics and delivery services. That's what Yeti is all about. So again, it's a very interesting concept which they are working on. So there's no lack of innovation here. That's what I'm trying to get to. There's plenty of innovation happening. Zolt is of course the tactical drone, and Switch UAV is the only one approved by the Indian Army, and therefore it gets a lot of validation in terms of its ability to be able to deliver high quality army grade equipment, which is what the big positive with regard to Switch UAV is all about. So that's the broad split. And in terms of how the order book has shaped up, FY25 end, the order book was at just about 14 crore. They've got new orders worth around 137 crore in this quarter, Anushi, if I'm not wrong.
Yeah.
And then there's an L1 order opportunity of around 400 odd crore. So that's how it really stacks up. Now, in terms of numbers, and we'll start off with the KYC metrics right off the bat. Let's talk about the metrics that we'll speak about. We'll start off with the income statement. Thereafter, we look at the balance sheet. We look at the cash flow. We look at shareholding, return ratios, street cred. We look at outlook, and we will look at valuation. So all of those parameters is what we'll try to cover today. Anushi, you want to start off with the income statement?
Yeah, absolutely. So with income statement, now you know what the basis is in terms of revenue. Now over here in the last 3-year period, it has almost been a flat performance as far as where the revenue visibility is concerned, which brings us back to the first point of Harsh's, just starting off with execution being a key part for the order book which is there. Even in terms of where the margins are, it's a negative kind of a picture that we are looking for margins in PAT as well. So, but the management is guiding for a 20% of plus of a blended margin going forward. So when does that flow in is something that we should be keeping a track of. Now order book, if we are seeing last year 13.6 crore was the figure that we clocked in, which is much lower than the FY24 and 23 figure of 124 to 192 crore respectively. Do note that it had been a lackluster year in terms of where the order inflows have been considered from the drone industry. So that is why we are looking at this kind of a figure, but emphasis more on the execution part remains, right?
Absolutely. And just to kind of take the viewers through the journey, yes, sales of 160 crore is flat when I'm looking at it over the 3-year period. But when you look at FY23 and FY24, we saw a spike on the sales numbers. In fact, top line was at 314 crore in FY24. So we've seen significant contraction in top line. This is largely because of order inflow not coming in a steady fashion. You look at the order book of just 14 crore at the end of FY25. That's of course the Q1 order book. But the FY25 order book stood at just 14 crore at the end. And therefore, there was not much of execution which was left to do. And therefore, what you're seeing is that the fixed costs are actually adding up. This is an EBITDA positive company otherwise. It's done 75, 48 and 57 crore of EBITDA in the last 3 years preceding FY25. FY25 was a loss, high fixed cost, high ESOP cost weighing down on the numbers for FY25, something that you must keep in mind, because otherwise on a normalized basis, the numbers don't look all that bad. But FY25 from an execution perspective was a weak one. From an order win perspective was a weak one. The orders that come in are chunky. The execution is therefore also chunky. And therefore, what you should look for in a company like this is over a 2-3 year period, what is it that they are delivering in terms of top line, in terms of margins, in terms of profitability. And it's not a 1-year thing. Therefore, again, something to keep in mind and some perspective. Let's now look at the balance sheet. And when you're looking at the balance sheet overall, it's not looking like a bad one. You're seeing decent amount of equity to the overall market cap as well. Around 2,500 crore of market cap, around 600 odd crore of equity. You're seeing borrowing which is far and few, so very, very low borrowing. But what's locked in really in the assets is 400 crore out of that 600 crore of balance sheet is locked in inventory, trade receivables, cash, and other working capital items. So what you're seeing is a large part of that amount, and cash is obviously good. 97 crore of cash is good. But outside of that, the around 250 crore of the balance sheet is locked in some of the working capital requirements, which is large. And that's a bit of a concern. Neutral from a balance sheet perspective, cash flows.
Now, in terms of where the cash flows are also, we are looking at a negative figure for cash flow from operations in FY25 in comparison with your FY24 picture that we are seeing. Again, a big result of this is also the kind of revenue recognition which has taken place. We've seen a downtick in terms of revenue almost at the likes of 40% or so in FY25, which is reflecting in cash flow from operations. There had been an increase in terms of receivables which were there, so which has resulted in this negative figure that we are looking at. Even net cash flow down minus 152 as compared to a positive 164 crore that we'd earlier seen. So on basis of that, we are also giving cash flow a neutral rating.
Okay, so neutral on cash flow, and that's also because of the build-up in receivables which are not unwinding, the build-up in inventory which is not unwinding. So some of those need to unwind, and maybe we will see some of that come through. But yes, that's still awaited. Let's now talk about return ratios, and this is a fascinating one, right? You had return ratios at 40% in FY22. And I want to again pull out and highlight that FY22 was a very solid year for the company. The operating margin or EBITDA margin of the company in FY22 was 47%. Chunky orders, right? Something to look out for. But that has tapered down. ROEs are now negative in this year, and we've highlighted reasons why. But otherwise, does the company have a capability of going back to higher ROEs if the EBITDA margins recover? And we spoke with management, we'll give you that perspective. So therefore, the neutral with regard to return ratios. Shareholding, Anushi.
So in terms of where the shareholding is concerned, not much of an activity that we're seeing in the last 3 quarters or so. Promoters' stake has remained at the 29% of a mark that we are looking at, while FIIs have trimmed their stake from 3.5% to 1.56%. So in that 1% of a range is what we are seeing. DII is playing around the range of 2 to 2.5% is what we are seeing, while public holds about 67% of stake in the company. So on basis of that, we've given a neutral rating to this one.
Okay, let's quickly look at street cred now, and this doesn't look pretty at all. Let me be very frank. 11% down in the last 6 months, but even when you look at it since the day of the listing, stock is down 56%, down 29% on the last 12-month performance, and therefore clear thumbs down with regard to this one. It's looking very difficult from a street cred perspective. You want to talk about valuations, Anushi?
Right. So in terms of where the valuations are, we've just discussed that, in FY25, the company had clocked in a loss in terms of where the EBITDA was concerned and net profit was concerned. So to get a better perspective for comparison, we have taken the market cap to sales approach for this one. If you look at Idea Forge over here, it has a multiple of 15.4 times. This is based on its FY25 sales number that we are looking at in comparison with Paris Defense and Zentech, who operate in similar spaces, which have about 18.8 to 18 times of a multiple is what we are seeing. So we are giving it a neutral on basis of that number.
If execution were to improve and if margins were to improve, you could well see this number change. And that's something you want to keep in mind, and which is why we're giving this a neutral, because the upside to this could well be good because the base was higher and it's come off very sharply. Due to whatever macro factors, could that change is the question. Let's look at outlook now. Government expected to drive procurement as well as drive the larger market size. Expected EBITDA margins of 20% plus is what they've guided for. Blended gross margin of 45 to 50% is what they've guided for. R&D capex of around 77 crore annualized for FY26 is what they've guided for. First demo of the US defense drone is done. Now they need to try and work more, get their early adopter out of the way and start getting orders. That's the US expectation. Do not expect to take on debt. Expect a soft Q1 FY26. This is basis Q4 commentary and execution readiness. They are waiting for order inflow is what they say. But we spoke earlier with the CEO of Idea Forge, Ankit, and here's what he had to say. Listen into the whole conversation. I want to first talk about the 150 crore order pipeline that you have. And I'm not asking with regard to Q1 FY26, but for the full year. What's the outlook like? How quickly can you execute this order book? Because your capacity utilization, at least basis Q4 commentary, suggested you can execute fairly quickly. So trying to understand that.
Yes, absolutely. I think the attempt and the target is to execute it as quickly as possible, insofar as this is concerned. And we are going to essentially, do it also not just because we have capacity, but I think it's also a very immediate need for our country. So our focus will be to get the capability in the hands of our user as early as possible.
Hi, Mr. Mehta. This is Anushi joining in as well. So last year, if we take the order book in context, it was around 14 crore that we saw. This quarter, you recorded more than 100 crore plus of an order win. Just want to get a sense from FY25 to 26, what would be different in terms of where the order inflow picture is considered, and how do you expect to close the year with the FY26 order book? If you can give us more details on that front.
Yeah, so I think, Anushi, if you look at what has been announced recently regarding the next emergency procurement post the Operation Sindoor, Indian Army has been given a 9,000 crore budget to quickly induct more technology, particularly replenish what was consumed, as well as induct more technology in their ranks and forces so that we can be more prepared for any eventuality. And therefore, we do expect that that conversion will also happen sometime in this year. And once those conversions happen, we will have to also rush to deliver the capability to our end user.
Mr. Mehta, if you can just quantify the numbers for us, if we can take from FY25 to 26, what would be the growth picture be in terms of where the inflows are considered? And also a sense from these 14 crore of an order book that we saw in FY25, where do you see this number heading towards in FY26, considering that you have a 400 crore of a visibility as well in terms of order pipeline?
Anushi, the visibility that I can provide right now is that there is a good amount of capital earmarked for purchase of drones and counter-drone systems by the Government of India. Having said that, how much of it will convert to Idea Forge's bucket is something that we will sort of only talk about when we have those orders in hand, because, in this space, it is very important to be a bit more conservative in terms of what we are projecting because of the vagaries of the business and the processes.
Mr. Mehta, then give us a 2 to 3 year outlook, if not FY26. Because what your shareholders and investors will want is how quickly can you execute. The potential seems large at 400 crore of L1 potential, which you've highlighted. But how much of that converts is really the question. Again, on the Indian defense as well, the budget seems large, but how much of that converts to drones and specifically to you? Just give us that broad picture. It gives us better perspective.
Sure. So Harsh, what happens is that typically, the procurement for drones is earmarked within the overall budget that the government has. What we understand over the next 2-3 years is that there is an intent to look to buy this technology in large numbers and to buy it consistently. That's the view and the vision that we have from our forces. And therefore, we can expect that a lot of conversions will happen within the drone industry. Within the industry, we are not serving each and every use case. So we are serving the use case for ISR and we are serving the use case for multi-role assets. And within that, we will have to carve out, what is the picture that is converting for us. Our win rate within what is attemptable by us is usually very high, and we are able to grab a good market within that because of our capability that we've built, as well as now a new vector has come in, which is resilience to electronic warfare. That's an area that we've been talking about in all our calls. We've been talking about the technology that we're developing there, where we were working towards frequency hopping, multi-frequency communication. We've been talking about working on GNSS denied navigation, and all of these capabilities become very real and important and will become an integral part of what the government is going to buy. So we do find ourselves in a leading position insofar as that capability is concerned for the kind of drones that we build. So between these, 3-4 vectors, we feel very confident that we have a good possibility of converting a substantial amount of the pipeline for our domain in our favor. But what are the exact numbers, how many orders and how many units are the government going to procure is something that we'll only get to know once the RFPs are out and we start bidding for them.
Understood, Mr. Mehta. So this is in terms of where the order conversion and execution is considered. But if you take the order book visibility, it is very important to focus on that, considering that if you look at the last 3 years of revenue growth, that has been more on the muted side. It's almost flat. So just want to get a sense on the revenue visibility also for the next 2 to 3 years. What is the kind of growth? Is it a double teen kind of a growth, or more than that growth can we expect? And the margin range also, because if we look at the margins, there has been variation in terms of whether quarters or the financial year performance has been. So give us a sense on these two metrics as well.
See, what we look at in terms of blended margins, Anushi, is that we are typically looking at between 40 to 45% of gross margin expectation on a blended basis from our pipeline. But please, account for the fact that when an individual opportunity closes, it may have a higher or lower gross margin depending on the nature of the competition in that bid and what that product is all about. So, we should expect that individual opportunities that convert will have the variability, but on a blended basis, our margin expectation is remains the same. And yes, we can expect growth in this year. We do expect conversions from our pipeline, both the L1 pipeline and our opportunity pipeline, which is significantly larger than the L1 pipeline as well, to happen this year and subsequently in the forthcoming years as well, from whatever we understand of the intent of procurement by government, particularly in defense. And we are seeing that a lot of work is also going to happen in the homeland security and in the civil domain as well. And therefore, on a overall basis, we believe that India is going to see a rise and a better, opportunity for the industry as well as for us in the next couple of years and beyond. And we expect that in this time frame, we will also start responding and start receiving orders from international markets. So overall, we expect growth from this overall diversified approach of what we have been planning and what we've been building towards over the last couple of years.
But again, coming back to the numbers, what can we expect in terms of top line? Is there a broad level thought process, given that now you don't just have India to look at, or maybe an election year which will drag your numbers? It will be global. You have traction coming in from Europe, UK. You have now a decent presence in North America as well. You've started ramping up there as well. So you've got diversified presence. Is there better visibility on top line, sir?
See, there is better internal visibility, but for me to talk about it, we're not there yet. Let me put it this way.
Okay, sure. And are the margins in exports better than domestic?
See, we are currently pitching, the more capable products in the international markets, because we believe that differentiation is very important when we go out there and we present ourselves as a credible player. Because, if we are looking at the run-of-the-mill capability or performance, then, there is a lot of competition everywhere in the world. And therefore, because we are pitching our premium products there, we should expect good margins and healthy margins there. But we will only sort of, know when we convert some of these opportunities in practice.
Sorry,
but there is a tight governance happening on that. We should expect closures as well.
Right. I want to close the loop with regard to margins. So you're guiding blended 45 to 50% blended. Where does
but
that
it doesn't show up. So Harsh, sorry to interject. It doesn't show up year on year, because in a particular year, if I have a specific, like it happened last year.
Yes.
So the idea is that, typically the pipeline looks of that nature, but what converts in the pipeline will show up slightly differently. We've had years where we have much better margins, and we've had years, particularly 1 year last year, where we had slightly more muted margins. So it depends on what we are executing in that year more than anything else.
No, for sure, Mr. Mehta. So we've explained that to our viewers as well. So that is well recognized. But say you're at 45-50% blended gross margin. At least that's the visibility today. Where does that leave you on the EBITDA margin front? Because your fixed costs have also gone up in relative terms. So wanting to understand visibility with regard to fixed costs, ESOP, and therefore the net EBITDA margin, where should that lie?
So between the last 2 years, if you actually see, our expenses on the people front were relatively flat. There have been minor increase in expenses on the other expenses, which is expected as you expand your facilities and a little bit more effort goes into maintaining what we are working towards. So overall, expenses actually remained relatively flat, and it was the impact of the lower base that hurt us more last year than real change in the cost in a very big way. And therefore, as the revenue base grows again, we will start seeing improvement of EBITDA margins, and we may get back to healthier EBITDA margins of at least 20+% and healthy PAT margins as well. So I think it's a matter of revenue base at this point in time than the cost base, because we aren't increasing the cost base as aggressively at this point in time.
Okay, so 20% is the kind of margin levels that we should be watching out for Idea Forge. Understood. Now, just want to get an overall industry outlook, Mr. Mehta. You know, drones, after the recent developments, it's an upcoming area in focus. Just want to get your sense in what usually is the kind of market share that you hold in this particular space, and how many players are there, domestic, international? If you can give us how, in terms of bidding also, how many competitors are there, how competitive is the space?
See, I'll start with the competitive sort of landscape in the space. In every opportunity, you have a very large number of people who bid. But in the end, when it comes to actually demonstrating capability, you will find that only 5 to 6 people actually turn up to demonstrate something to the ground. And within that, there are various sophistications, capabilities that the consumer demands. And I don't think more than 2 or 3 players typically meet that capability. So while there is a lot of noise, a lot of comparative, you can say, pressure from the point of view of how many people want to be in the domain, but people who can actually meet the requirements of the end customer, typically you will not find more than 2-3 people qualifying, depending on what the opportunity is and what are the areas. In fact, in some cutting edge capabilities, there is no competition to what we build. So it entirely depends on what is the specific opportunity. Usually, there are not too many players who qualify those opportunities when it comes to real testing on ground.
We also spoke about working capital. That seems to likely get better going forward. But completely out of time on this edition of KYC. From Anushi, myself, everyone who puts the show together, thanks so much for watching.
Imports become the exception rather than the norm, and increasingly we do almost, last year for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy.
Hi, we're talking about Your Money Matters on NDTV Profit, and my name is Alex Matthew. Today, I'd like to start with a conversation with the Chief Investment Officer of a mutual fund that has had a couple of offerings in the equity space and that is introducing another one. I'm talking about Trust Mutual Fund, and so far they have a flexi cap fund, which, as you know, is a a clean slate sort of an equity fund that allows the fund manager to pick and choose from a wide variety of options, including market capitalizations, but not least of which market capitalizations, and a small cap fund. And this is a mutual fund house that is now going to be launching another mutual fund scheme. We'll talk about that, and we'll also talk about the experience so far and what the outlook is going forward. Joining me now is Mihir Vora, the Chief Investment Officer of Trust Mutual Fund. Mihir, thanks so much for taking the time. Let me ask you this at the start. You started your FlexiCap fund in April of last year, the small cap fund at the end of last year. What is the kind of learnings that you've had, and what is the experience that you've had in building your portfolio? What has worked and what hasn't?
Sure. Hi, Alex. Thanks for having me on the show, first of all. It's been a very eventful 14 months, I would say, since we started our first fund, which is the FlexiCap fund, as you mentioned. And, immediately after we launched the FlexiCap fund, we've seen, the election results and the volatility around that. Then we've seen, the Israel conflict, and then we've seen the budgets and lots of events, keeping us busy. Always interesting times, as you would say in the markets. But I think what has also been validated is the fact that there are always opportunities for stock picking in the markets across market caps. And the reason why we launched the FlexiCap fund first is obviously, first of all, it's the biggest category, and it is the flagship fund for most mutual funds. But then we launched the small cap fund because we really wanted to exploit all the stock picking opportunities which is there in the small cap space, which is a much larger number of stocks compared to the larger mid space. So I think it's been exciting 14 months. Lots of learnings. Most importantly, how to deal with volatility and how to kind of keep picking stocks across different market conditions.
Okay, I use these conversations to reinforce for my viewers and both your investors as well as your prospective investors what the philosophy is when you're constructing your portfolio. So can you give me examples based on what you currently have in your portfolio, what you might have exited over the course of the last few months that reinforces that philosophy?
Sure. So essentially, we believe that earnings growth drives stock prices in the long term, right? So we are growth investors and we look at earnings growth potential when we look at stocks. The crucial difference between our approach to earnings growth or growth investing and probably other styles of growth investing is that we believe that it's not only the next few years of projections of earnings growth that matter in valuing a stock, because valuations are a complex thing. But in high growth stocks and sectors where the runway of growth is expected to be long, there the valuations today will not necessarily be influenced or determined by what growth you expect in the next 1, 2, or 3 or 4 years, but it will be largely a function of what you believe the length of the growth runway is going to be. Because the stocks which grow at good rates, and it doesn't have to be 40-50% compounded for the next 20 years or something like that. But even if it's 15, 16, 17, 18% growth or 20% growth, but expected to grow for 10, 15, 20 years, then the future profits, the longer term profits, not the next 4, 5 years profits, will be the predominant determinant of the current market value. So this is what we call the terminal value, which is the value of the longer term profits. And this is what determines the current market cap to a large extent, because mostly investors and analysts are able to, with some comfort, predict the next 2 or 3 years. And if you read any research report, typically the projections are there for the next 2 or 3 years. But unfortunately, that's not how the market thinks. The market is already discounting the longer term growth prospects in such high growth and sectors. And so what happens is that if you continue to look at only the near term growth and apply the normal ratio like PE or something like that, then these stocks will look expensive and you will probably not be able to participate in that. But once you start to look at the longer term potential and the length of the runway of growth, then it begins to make more sense. And in the last few months, we have seen that stocks which are of high growth nature have been very volatile, but they have also rebounded very sharply and smartly and probably even touched their previous highs and crossed the previous highs because the secular story was in place. So I think holding on to our core beliefs is something that we've done. Of course, there are always pockets of overvaluation, pockets of undervaluations, which we will use to buy or sell on a tactical basis. But I think the core philosophy remains the same. It remains reinforced.
Okay. I asked another CIO this week, equity CIO, whether they were caught perhaps a little unawares by the ferocity of the rebound in the broader markets, in particular since April of this year. And they were candid enough to say yes, that they were. I'm just wondering what your own experience in your FlexiCap fund was, because when I look at the portfolio, 60 stocks from what I see, and I've not seen the latest fact sheet, but there is a tendency or a tilt, if you can call it that, more towards the large cap space. And so to that end, maybe you've not had the benefit of the kind of run you've seen in the broader markets. Is that fair?
Oh no, our FlexiCap fund typically has had a significant exposure to mid and small caps. In fact, if you look at the May-June portfolio, it's almost 30% mid cap and 17-18% in small caps. So to the extent we have 45 to 50% in mid and small cap. And if you look at the last 14 months history also, we have had mostly around 50% exposure to mid and small cap. So we've always run the FlexiCap in a market cap agnostic fashion, tried to pick the best available stocks across market cap. We've never made a top-down call on large versus mid versus small. We just pick the best 60 bottom-up, risk-return stocks that we can. So to that extent, we've not really lost out on the mid and small cap rally. Second thing is we also don't take big cash calls. Typically, even if we are uncertain about the market, etc., we will not take more than 5 to 10% of cash. So that's also kind of buffered us or shielded us from the uprise in the market.
But were you surprised at the kind of run that you've seen since April? I mean, of course, this is moving more or less in tandem with several global equity markets, but Indian equity markets have bounced quite substantially. Broader markets over 20% from April lows.
Certainly, but I don't think I was surprised because there were tailwinds, right? Biggest tailwind, of course, is the fact that for the first time in many years, I would say the government and the RBI are on the same page. Both are very clearly saying that we want growth. Second is if you see the DXY, the dollar index, it has started weakening since February, March, and that has by no coincidence also led to FII flows being positive. So the outflows that we saw from September to February turned into inflows after February. So February, March, April, May, June, or March, April, May, June, 4 months, we have seen FIs turn buyers. So I think liquidity, RBI stance, the government stance, government spending on infra coming back, all those have led to the tailwinds in the market. So yes, the move has been pleasant, probably a bit sharper than one would have expected, but not completely surprising, I would say.
Okay. Now you are launching, as we speak, a multi-cap fund. I'm just wondering about the positioning and how it's going to be different from the FlexiCap fund, because you just now pointed out that you have a reasonable exposure to the broader markets in your FlexiCap fund as well. So how are you positioning and differentiating that strategy?
Certainly. So the big difference between the Flexi and multi-cap category is the fact that this forces the fund manager to look across market caps. We've seen instances in which fund managers turn a bit too conservative, as you mentioned, and keep on getting tilted towards large caps. And if you see the last 5 to 10 years, mid caps and small caps have actually outperformed the large caps in many years. So to that extent, this ensures a minimum amount of diversification across market caps. So it's kind of a forced discipline, as you say. It removes the human bias to become too conservative in volatile times. So I think that's the big advantage of this category. Typically, what happens in the multi-cap category, you're forced to put minimum 25% in mid cap, minimum 25% in small cap, and minimum 25% in the large cap category. Now, let's say, for example, markets turn bearish and there's a sharp correction in the market. And you typically see that when there's a sharp correction, the mid and small cap categories tend to underperform significantly. Now, what happens is, suppose you had 25% small cap exposure and the small cap category underperforms, it means that the weightage will go below 25, right? What happens is that in volatile times, fund managers probably may not take corrective action and add to small caps. So the bounce back which happens, which also happens very sharp, will not enable the fund manager to participate on the upside in small caps. In the multi-cap, since you have to top it up to 25, if the category underperforms, the mid caps and small caps underperform, you'll be forced to buy when the stock prices go down. So to that extent, there's a natural rebalancing that happens in the portfolio, and you'll be doing the more logical thing, fundamentally speaking, that if the shares that you liked are available cheaply and have underperformed sharply in the mid and small cap, then you should be adding to that. So this forces the fund manager, removes the emotional bias from the fund manager's thinking. So that's a good advantage of the multi-cap category. In our case, as you rightly mentioned and as we discussed, we've always been market cap agnostic in the flexi cap fund. So there may be an overlap between the flexi cap fund and the multi cap fund, but then, as I said, you need to have minimum in each category. So that way, I think it'll be a more balanced distribution compared to the flexi cap distribution. If I were to give you some statistics on the category per se, the mutual fund industry, what has been doing, on an average, the industry has had 58 to 60% exposure to large cap in the flexi cap category. If I look at all the flexi cap funds in the market, in the multi cap category, the exposure to large cap on an average is about 40%. So if you look at the category, there is a significant difference. Though, as I said, for us, the difference may be a bit lesser.
Got it. Okay, so I got a perspective. There is likely to be, as you pointed out, some overlap because of the way that you run the flexi cap fund as well. I'm just trying to understand now where we stand, and we're probably at a crossroads in terms of how trade gets done globally, and we're looking at the possibility of an imminent trade deal between the US and India, and that may be the next trigger. But I'm just wondering how you're reading the tea leaves on the earnings front, because that, as you've pointed out, is what drives valuations and what drives your own decision making. How do you see FY26? And what is your own message to investors with regard to return expectations?
Sure. So returns will be a function of earnings growth and the valuations that you start with, right? So if I were to look at the three components of the market, which is the large, the mid, and the small component, large cap earnings growth for the next year probably will be in the high single digits for the large cap indices, the Nifty 50 or Nifty 100. The mid-cap earnings growth will be around 15-16% in my view. And the small cap index earnings growth probably, again, will be around 14-15%. So there will be a significant higher earnings growth for the mid and small cap segments. It also might be, interesting to note that in the recently concluded earnings season, the number of positive surprises was a little higher than the number of negative surprises. So it's been a decent earnings season for the March quarter that we just got results for. So I think we are on the right track as far as earnings growth is concerned, and if things pan out well, you might even see earnings upgrades in the mid and small cap segments. So that's on the growth part. Valuation side, I would say we are at average valuations to a little above average valuations, which means that the returns expectations for the next 1 year should be in line with earnings growth. So that's the kind of base case that we are working with. So maybe high single digit returns for the large cap indices, and maybe good 13 to 15% returns from the mid and small cap indices.
Got it. Okay. Mihir, on that note, thanks so much for joining me today, and wish you all the best with the product that you're launching. And we'll speak soon enough once the product is out and once the portfolio is ready. Let's talk about a strategy that has worked for most of 2024 and that may have taken a bit of a backseat in 2025. And I'm pretty sure that all of you have contemplated it at the very least, or have even included it in your portfolios. And I'm talking about momentum as a strategy. When equity markets were in this tearing bull market, this is a strategy that it did incredibly well. To talk about where things stand right now and how you should reposition, if at all, I'm joined by Rushabh Desai of Rupee with Rushabh. Rushabh, thanks so much for joining me today. First, can you give me a sense of how momentum is faring right now as opposed to what it was last year?
Hi, Alex. First of all, thanks so much for having me on the show. As you correctly pointed out, that last year we saw a phenomenal bull run in the overall broader markets and the main indices as well. And of course, momentum strategies have done extraordinarily well over calendar year 2024. But unfortunately, due to the market corrections which we saw from September, October 2024 till a couple of months back, momentum strategies have seen a very steep drawdown. Now, momentum strategies have fallen as steep as around negative 25 to 30%, depending on the momentum strategy. Now, there are various momentum indices, Alex, which consist of Nifty 550 index, Nifty momentum 150 in the mid cap space. There is a momentum strategy in the small cap space. So depending on the mid cap, small cap and multi cap momentum strategies have seen anywhere between 25 to 30% steep drawdowns. See, as we speak on year to date, momentum strategies is around 4-5% negative. Momentum strategies have recovered fairly since the markets have recovered over the past 2 months. But we still have a good amount of 30 to 40% recovery still left in many of the momentum strategies, Alex. So this is where we are at this point of time.
Okay, so it just drives home the point that the flavor of the season can actually change very, very quickly, and something that is doing incredibly well can prove to be a big laggard even in 6 months time frame. So in your opinion, what is the best way to play momentum? And the reason I ask is that there are active funds that have also been launched because of this entire rush towards momentum. So speak about how these active funds have also done.
See, Alex, the best way to make money in this market is to play contra, okay, to take contrarian bets. When a strategy or any particular segment is underperforming and is not doing well, that is the right time to enter and invest. See, I feel momentum strategies will do phenomenally well in the next 2 to 3 years is because we have not yet entered a bull run. We are still in the recovery stage, and momentum strategy does really well and outperforms during a bull market. So I feel, number one, this is a very good opportunity for investors to look at momentum strategies at this point of time, because momentum strategies have not yet fully recovered and have not yet entered into a bull run. And as you pointed out that, yes, there have been active funds launched, and I feel that, AMCs will benefit out of this market correction and will see, their funds will see some good outperformance over the next few years. The reason why I feel that at this point of time investors should look at smart beta passive funds is because the active funds are recently launched, Alex. There are 3 to 4 funds which have launched in the past 6 months, and there are just 2 to 3 funds which have been launched over the past 1 year or so. So overall, all in all, active funds don't have a good returns track record. The returns track record has been less than 2 years. On the other side, smart beta indices have a very good back-tested track record. So I feel rather than venturing into active funds, and at this point of time, I would like to wait and see, how the active funds are being managed, what kind of strategies or what kind of philosophies within the momentum space is each of the AMC following. And then probably I would like to take a call whether I want to go into the active space or no. But at least at this point of time, I feel momentum is the right place to be in. And if someone is looking for a momentum strategy, then going into smart beta passive momentum index funds is something what I would highly recommend.
Okay, just by the way, in case you're wondering, viewer, what Rishabh was just speaking about, and of course he'll talk in some detail about, but let me give you some color. It is essentially, and what he's saying is a factor, right?